contact information for the Fed's legal department. The report says an outside lawyer for the Fed sent a letter to Piro's office objecting to that visit.
They showed up and talked to the construction workers?
Yeah.
Well, haven't we all had that experience?
Couldn't get in.
You're
not allowed
in.
You need a hard hat.
Yeah.
And no one looks good in a hard hat. You know who you got to ask about that? Michael Dukakis. Do not put...
I mean,
he would have been president.
That was a military helmet, yeah.
It was, but he would have been. It's the same problem.
I think the ladies, we look good in a hard hat.
You can look better than men, probably.
I think men shouldn't try to play the role. They either are or they aren't.
Right.
That would be mine.
So yes, my do-it-yourself moment is the light bulb.
Exactly.
Change.
Only on the table.
Yeah. No. I'm scared of those.
Coming up. Will the U.S. blockade of Iran's ports pressure the regime to come to the negotiating table? We'll get into that question with President Trump hinting at more negotiations to come. And we're standing by for Bank of America earnings expected any moment now. Squawk Box will be right back.
The military says that the U.S. blockade of Iran's port is fully in effect. President Trump hinting there could be more negotiations within days. Joining us now, Richard Goldberg, senior advisor with the Foundation for Defense of Democracy. He's also served as National Security Director for countering Iranian weapons of mass destruction in the first Trump administration. Richard, it's good to have you on. Welcome. Thank you.
Thanks for having me.
Can we start with, can you just lay out the case, the rationale for the original action that President Trump took against Iran, why it was urgent to do this now, what the objectives were and which objectives have been met in your view?
Sure. I think we had two main things going on. Number one, on the missile program, I think the president saw intelligence, along with the Israelis, that the Iranians were racing forward on their advanced long-range missile programs, potentially with some support from the Chinese. We'd seen back in December, the Wall Street Journal had an exclusive story about a raid, a special forces raid of a vessel on the high seas that was bringing technology in for the Iranian missile program. We know that, as you saw, the missile that was shot off against Diego Garcia, they have already intermediate range ballistic missiles. They were working through a space launch vehicle program for intercontinental ballistic missiles. At the same time, while we did have great success in Operation Midnight Hammer last year against the nuclear sites, especially Fordo, there is enriched uranium that was moved to Isfahan tunnels. That highly enriched uranium appears to be intact. At the same time, there's a facility deeper than Fordo continuing to make progress towards completion. We call that Pickaxe Mountain. Of course, there are other aspects of the weaponization program we think we're moving forward through a secret organization called SPND. What have they accomplished so far after the major military operations, Epic Fury? It looks like they've laid waste to about 70% of Iran's missile stockpiles, some high percentage of launchers, destroyed some number of missile cities, the deep underground bunkers, but not all of them. Certainly their upstream industrial base to make missiles, especially the long-range missiles, appears to be destroyed. So a lot of the threat from the missile side, either degraded or destroyed, probably a generational setback on their missile program. A lot of nuclear sites hit, especially those SPND secret sites that appear to be R&D research labs, scientists. But in the end, we don't have the enriched uranium material out of Isfahan, and Pickaxe Mountain has not been dismantled. So those are two on the not done yet list, potentially not achievable from the air and sea. And so then the president would say, okay, what's my best option if I've achieved all the other military target sets we set out with? And of course, they've listed air defense and the Navy, that you've heard about the overall defense industrial base, all of those great accomplishments. Then the question is, what's the best way to achieve that which you may not be able to achieve from the air? And that's the point you would switch to both that mission set and the Strait of Hormuz, and I think that's what we're seeing right now.
So in summary, would you say that it's open to debate? Can there be differing opinions on whether it was completely necessary to embark on what could be a difficult, protracted, we're not calling it a war, but an excursion, an encounter into this? You would say, if the president had asked you beforehand, you would have said go for it, or you would have said, well, let's see what else we can accomplish?
Well, I was pretty publicly in favor of what the president did here since January, and my view was, if we still face an imminent nuclear threat and we face a looming imminent missile threat, both direct national interest to the United States, the question would then be, when do you want to confront those threats? Do you want to do it when they're strongest? When China says, hey, close the strait? You want to do it when they've actually achieved the nuclear weapon or when they have the ICBM? Or do you want to do it when they're at their potentially weakest point? And so when you saw in January, millions of people come onto the streets, maximum violence against them, 50,000 or more people gunned down in the streets, that's not a sign of a very strong regime. Remember, end of the year last year, they had two crises going on. One, started rationing gasoline. They've been importing gasoline again, which they hadn't done for about 20 years. And two, they started having a banking crisis. One bank collapsed, 5 more teetering on the verge of collapse. That seemed to be the moment to seize. If you have an imminent threat, and it's a clear national interest, and your adversary is at its weakest point, that'd be a good time to do something. And so I think the president chose the right time on his timeline, not on their timeline, not on China's timeline, not on Russia's timeline. And he's done great damage to both the missile and nuclear program, but obviously still some things to achieve.
Richard, it's Kelly here. Just to pick up on that point, you know, the economy, as you guys have also documented, is terrible. And now we have, you think 13 days after they would have, you know, without exports, they'd have to start shutting in production. The Revolutionary Guard siphons half of the oil revenues. The currency's fallen by 93%. The inflation situation is out of control. So we're pushing this economy to the brink of collapse to bring them to the table. But again, them is now a regime that is probably more hardline. So what does a more hardline regime with less revenue, less missile capability, what are its options? What are the options for Iran now?
Yeah, I think if we remember historically, I mean, in the first Supreme Leader's era, in the 1980s, during the Iran-Iraq War, Khomeini, had a very famous speech where basically Iran gave up and said, okay, we've lost this war. We're going to stop now. We're going to drink from the poison chalice, was the term of art. Basically, there is a point at which they have to be pragmatic that they're going to lose control of the regime, that they can't run the economy, they can't manage anything anymore, the banks will collapse, the people are not going to get paid, the IRGC will not get paid. And so if they're facing imminent economic collapse, and we've seen leaked reports that President Pezeshkian, who's sort of, a figurehead there, installed by the regime, the previous regime, that, saying, hey, we can't make it a few more weeks. Now you add on the blockade, as you're saying, the export of oil now grinded to a halt, the import of gasoline grinded to a halt, the impact on prices inside the country. This is dramatic. So they will have to make a choice. They've tested the blockade over the last 24, 36 hours. I assume they will continue to try to test it. If they cannot get through the blockade, that so far doesn't seem they've been able to, then they have a choice. Do they escalate militarily? Do they target Saudi Arabia? Do they target the East-West pipeline? Do they try to coax the Houthis into this war, which they have been unable to do to this point, which I think is telling? Or do they say, let's go back to Islamabad, let's talk about the enriched uranium?
Richard,
I think the president's hoping for the latter.
Richard, with we were talking about how dangerous the new regime is, even maybe, perhaps as bad or even worse than the guys that are dead now. Can they still be a major threat in the region with what they have left, and still a major threat to the United States at this point?
Well, I would caution us to say we don't really know who's in charge there. We think we know. It's certainly not Mojtaba Khomeini. That guy, it seems to be weakened at Bernie's, frankly. I think you have this guy who's supposedly the supreme leader. He's behind some room, maybe on a ventilator or something. And, the B-teamers who are still alive have gotten together to say, let's run the country and say we're doing it on behalf of a supreme leader so everybody follows our orders. That's how it feels to me at the moment. So I don't know what they'll choose to do. Okay. Will they be a threat in the future, even if this comes to a halt? If these are hardliners, that believe in the Islamic Revolution and want to destroy America, want to destroy the West, sure, they'll seek to reconstitute in the future. It's going to take them years upon years. They'll still retain their short-range ballistic missiles that you've seen. Remember, I said that we've destroyed about 70% of their missiles. That leaves 30% left down in those missile cities that we have not been able to get to through our munitions, based on how deep underground they are. But at the same time, they won't be able to rebuild their air defense anytime soon. If we see a threat, we can go get it. The Israelis can go get it. They'll be in a much far weakened position than they have been to date.
Great. Richard Goldberg, thank you. Appreciate it.
You bet.
Bank of America out with results. Leslie Picker joins us now with the details. Leslie.
Hey, Mike. Yeah, the shares of Bank of America are moving higher on these results. The firm beating on the top and bottom lines, bolstered by equities, sales, and trading. The firm generating $1.11 per share in earnings, the highest EPS in almost 2 decades. Revenue was $30.4 billion. Equities trading contributed to that beat as the geopolitical environment roiled stock markets. That B of A unit was up 30%, driving all of sales and trading to its best quarter in 15 years. Investment banking beating and was up by 21%. Net interest income, that was higher and a beat as well due to loan and deposit balances, fixed rate asset repricing, and markets activity there. Chairman and CEO Brian Moynihan saying in the release, quote, "We remain watchful of evolving risks. However, we saw healthy client activity, including solid consumer spending and stable asset quality, including a resilient American economy." The net charge-off ratio, showing what proportion of total loans are deemed uncollectible, improved 6 basis points during the quarter to 0.48%. The firm's consumer banking and global wealth divisions each gaining more than 20% in revenue in the quarter. And the return on tangible common equity, that's a measure of profitability, was 16%, which was a more than 200 basis point improvement. We'll hear more from CEO Moynihan when he joins me later this morning on Squawk on the Street around 10:15 a.m. Eastern Time, guys.
Yeah, Leslie, looks like based on everything you list there, a pretty clean quarter, market reacting accordingly. I'm wondering what areas of focus we might be alert for in terms of the call. I know, Wells Fargo talking about what net interest margin might look like going forward. Seems like it was one area of potential concern.
Yeah, I think rate sensitivity is important, of course, with Bank of America. It appears that, at least in this quarter, the flattening yield curve didn't have too much of an impact there in terms of relative to the street's expectations. I think a lot of investors want to know, obviously it's been a very standout quarter for equities trading pretty much across the major big banks, how sustainable these CEOs believe that to be, and whether the contributions to that volatility in the equity markets and so forth, whether that plays a longer-term role in the investment banking pipeline will be something to watch as well. And then the health of the consumer. I mean, obviously the NCO ratio, the net charge-off ratio, improved in the quarter. The consumer banking did very, very well. So, how sustainable they believe that to be over the long haul, especially as you look at what's going on with the oil prices and whether that ultimately changes consumer spending habits and so forth.
All right, Leslie Manoli, be on it. We'll talk to you again soon. Thank you. Coming up, Morgan Stanley earnings, those expected next hour, and later in the show, an exclusive interview with Cleveland Fed President Beth Hammack. But first, the AccuWeather forecast with meteorologist Bernie Rainick.
The heat is on today. Your exclusive AccuWeather forecast showing 95 in Raleigh, 94 Washington, D.C. From New York City toward Boston, spotty thunderstorm this afternoon, not as hot in Boston this afternoon. Showers, thunderstorms, Detroit, Chicago all day, Kansas City toward Dallas this afternoon. West Coast remains quiet once again. As far as your travels are concerned, there's going to be delays in Chicago, Detroit, Kansas City, and this afternoon in Dallas. To help you make the best decisions and be more in the know, download the AccuWeather app today.
Another day, another big chip partnership for Meta. This time, Meta and Broadcom announcing a deal for the design of Meta's custom in-house AI accelerators. This expands on an existing partnership and will run through 2029. Meta is expected to deploy multiple gigawatts of chips based on Broadcom's technology. Broadcom shares are up about 2.5%. Separately, Meta says that Broadcom CEO Hock Tan told the company he won't stand for re-election to Meta's board, which he had joined, Joe, in 2024.
I want a picture of multiple gigawatts, just so I know what that looks like. How much is it?
Like
Do you?
I don't know. But I think it's smart that they start to quantify it that way,
Right.
as opposed to a dollar value.
Right, but we just don't know. It's just a word for.
But 1 gigawatt can do what? Like 100,000
I
houses?
think it can power the DeLorean up to 86
Right.
miles. Was it 86 miles an hour?
No, I think I had to go faster than that. No?
I'm sorry, it wasn't one. It was 1 point. I was just told it. 1.21 gigawatts
Gigawatts, yeah.
to get the. You have any idea what we're talking about?
No, I do, but I think you're right. That's the more relevant analogy.
That's not a gigawatt, though. That's a gigawatt.
Gigawatt.
Right.
Dr. Emmett Brown, I think his name is. Coming up, how much is big tech driving the market? How much could it start to impact investors once earnings begin? We'll get into that as Swap Fox returns.
Our next guest is striking a more cautious tone heading into first quarter tech earnings. Joining us now with details on his new call is Mark Mahaney, Evercore's head of internet research. Great to see you.
Good to see you, Kelly.
Tech, again, we were just speaking with Dan Skelly at Morgan Stanley the other day, who likes the Mag 7. He's going stupid cheap right now. So we usually hear two things. One, earnings season is going to be helpful, not hurting to the stock market. And two, that the Mag 7 in particular might trade at attractively low valuations. Is your call kind of going against that grain?
The second part of that I absolutely agree with. We've now got what I call DHQs, dislocated high quality companies, especially Amazon and Meta. You know, they're close to trough multiples. So there's so many other macro headwinds out there, but you know, that are impossible for us, especially me as a tech analyst, to forecast. But if I look at valuations on what I think are high quality assets, we'll step in. We made those 2 of our top 3 picks. Having said all that, when we do our channel checks, our advertising channel checks, Q2 budgets are starting to get cut. And it's going to be a problem for companies with exposure to brand advertising and maybe to performance marketing. And it's kind of like, if current conditions continue, every week it happens, the chances of those budget cuts coming, increases.
What you're saying is that, so the consumer, let's say, or companies that we might think of, are pulling their budgets maybe because they're under some pressure,
modestly trimming their budgets, but it is happening.
And these are the people who would advertise on all of the big tech platforms.
Yeah, and we're going to start off. I think brand advertising gets cut first in an advertising pullback. We saw this 3 years ago with the invasion of the Ukraine by Russia. We saw ad budgets get trimmed. It was just for a quarter or 2, but it did happen. So I just think we're going to hear from these companies. Actually, I think there's going to be a lot of confidence about some of their AI initiatives, especially Meta and especially Amazon. Look at that Amazon shareholder letter, very bullish. But I think in terms of the outlook for the second quarter, I think they're going to be a little muted.
And so that reflects kind of a hesitation in terms of corporate confidence, not necessarily, digital advertising getting disrupted somehow.
Yeah, that's right.
Okay.
Yeah, that's right.
So it's not like a big picture, like the game has changed type of a call.
No, but I think what I particularly like the setup on these stocks, and again, I'll stick with the DHQ, the dislocated. When you find these high quality assets that get dislocated, the narrative can turn. And the narrative is starting to turn aggressively on Amazon. You've seen this 20% rally in the stock. I call it the Mythos rally, since all of a sudden you found out that maybe Mythos was trained on Amazon chips, Trainium chips. So maybe Amazon isn't such a laggard in AI after all. Amazon, I think, is the Google of 2026. You remember how rapidly, how aggressively that narrative changed on Google, went from 15 to 30 times earnings. I think you have a similar setup on Amazon here. Despite all of those comments, the concerns I made about macro to start off, I just really like the AI shift is there regardless of what happens to the economy.
Sure, and on a 5-year basis, this is kind of a catch-up move for Amazon, right? They've underperformed to a decent degree up to this point. When we talk about dislocated high quality and the valuations being unjustly low, I wonder how that fits with what we kind of thought of as the consensus going in when the NASDAQ 100 is trading close to 30 times forward earnings. It was, no, you don't understand. High free cash flows, these businesses can essentially grow effortlessly with low capital intensity, and that was why they deserve the high multiples. So what is it now that they are more capital intensive, maybe on an ongoing basis?
It's kind of like the industrialization of tech. I thought these were CapEx-like companies, and they're certainly not now. The bet that investors have to make, and I'm willing to make, is that this is going to be the trough free cash flow year, or the peak CapEx intensity year. I'm sure CapEx is going to continue to rise, but the rate at which it rises, I think, will start moderating. I may be wrong. It may not be 26. It may be 27. But I think you're going to get back to high ROIC businesses. This is an investment cycle. I don't think it's different than other investment cycles. And I think the opportunity is just dramatically bigger. And so I think over the next 3 to 5 years, we're going to see that. Now, whether investors want to wade in and buy that now, I don't know. I think they should, though.
But you're a little bit cautious into earnings season, just to put a point on that.
I think companies are going to be muted when it comes to talking about the June quarter outlook, yes.
All right. Mark, thank you.
Thanks, Kelly.
Appreciate it this morning. Mark Mahaney. It's just after 7 a.m. on the East Coast, and you are watching Squawk Box on CNBC. I'm Kelly Evans, along with Joe Kernan and Mike Santoli this morning. Becky and Andrew are off. Let's do a quick check on the price of crude oil, as the U.S. Central Command says the blockade of Iranian ports is fully implemented. And according to Iran state media, the country plans to use alternative ports now to bypass the blockade. Still, WTI crude 92 and change, big difference from just 48 hours ago. Brent around 96. We'll have more on the energy markets with Brian Sullivan coming up in just a few moments. Meantime, the Associated Press is reporting that the U.S. and Iran have agreed in principle to extend the ceasefire. That report cites regional officials involved in mediation efforts, and futures, as you can see, are roughly flat still, with the S&P, yes, close to an all-time high.
We have more on that possible United merger, or at least the goal, which started earlier than first reported. Phil LeBeau joins us with the latest. Hey, Phil.
Yeah. Joe, since this story first came out yesterday, when it was leaked out that Scott Kirby had expressed an interest in a possible merger with American Airlines, talking with people at the White House back in February, a couple of things. First of all, we have confirmed that that did in fact happen, that he was at the White House talking with White House officials about his desire to acquire or merge with American Airlines. And it raises the question, well, what's the thought process here? He didn't just wake up one day and say, hey, that looks pretty attractive. I think I'm going to make a move there. No, it's been brewing or percolating. Those who we've been able to talk with, those who are familiar with this thought process say, he's been thinking about this since at least last fall. And it revolves around the idea of greater size and scale for United Airlines on a global basis. Take a look at global market share for all airlines. United was, and still is, #1 with 4.7% of the global market share. There's American at 4.3, just a smidge ahead of Delta, and then Emirates comes in at #4 at 3.3%. But when you look at the international business for United Airlines, that's where the growth is. Frankly, that's where the growth is in terms of the bottom line for all airlines, separate from when you talk about the co-branded credit card programs. And that's where United would like to become even stronger. Their revenue was up 9.5% in the fourth quarter. Up $5.63 billion is what they brought in just in terms of revenue in that quarter alone. So Scott Kirby's idea or the thought process behind, look, acquiring American Airlines would be greater size and scale to compete with the Emirates, to compete with Singapore Airlines. And those airlines, keep in mind, they receive government subsidies. So competing with them is tricky enough, but if you have greater size and scale, well, then you have perhaps a more level playing field for generating greater revenue on an international basis. Take a look at shares of United versus American Airlines. The thing to keep in mind is that Scott Kirby, as I mentioned, he has been thinking about this since at least last fall. Now, the question becomes, when do they formally do something? Because yes, this story has been out there. It's been leaked out there, and United is interested. Well, they're going to report their earnings next week, or their Q1 results next week, as will American Airlines. That's really, I think, when we start to see the public comments much more. They're going to be asked. We're going to be asking Scott Kirby, okay, this is out there. What are you thinking, and what's your game plan here? And at some point, if this is real, Joe, United Airlines is going to have to make some kind of a move on American Airlines, or at least make direct overtures, which has not happened at this point. And we should also point out, American Airlines is not just sitting still. I've talked to people at the airline. Nothing rallies a company, you guys know this, than another company saying, maybe it's time for us to take you out or to merge you with our company. So we'll see what happens here over the next week. But there's a lot of hurdles in this theoretical merger between United and American. But we wanted to give people some sense as we were calling around, where's United coming from? And this is a big part of the philosophy behind where Scott Kirby is at.
And you mentioned yesterday, at least intimated, that this is not your father's last administrator. You're not your father's administrator. This is a different, possibly regulatory
Correct.
environment that wouldn't have allowed this under Lena Khan or whomever.
If you're going to get a deal done, Joe, this is the administration to do it. You weren't going to get it with the Biden administration. And by the way, when it was first proposed for Frontier to buy Spirit and then JetBlue jumped in, the day that happened, almost everybody said, and I was doing reports about this, the Biden administration is not going to look kindly on this potential merger. We saw what ultimately happened. We talked with the Secretary of Transportation. He has said they are open to the idea of mergers with U.S. airlines. Does that mean that it's a slam dunk? Does that mean that United can just walk right in and there will be no challenges? There won't be hurdles? There won't be regulators or members of Congress who are saying, no, I don't like this. I don't like the idea of so much market share with one company. You bet. There will be a lot of that. But there is a greater likelihood that a deal gets done with the Trump administration than there ever was with the Biden administration.
Phil, you're in Chicago, right? Quick question. We've heard from some Chicago folks. Are United and American in a bit of a war there over gates and everything? I've heard
Yes.
that this is driving fares there down. The Chicagoans love it. The planes are half full. So could this even be a way for the companies to ameliorate and get themselves out of that, where United says, forget it. And should we expect Chicago in some ways to be at the heart of what might happen? And in other ways, do you think people will get frustrated if they go, well, I guess at least for us, maybe fares could be going up?
Well, two things. One, the situation at O'Hare Airport is one where United has essentially said, and American has said, that they go back and forth. One accuses the other of adding more flights than the system can handle. And let's be clear here. The system at United is no different than it is at Newark and at other airports. There is a limit in terms of the number of flights. You will likely see the DOT ultimately go to a slot-controlled situation where, much like Newark, that's it. That's the cap. And this is what we're going to mandate. Now, they haven't done that yet. But that's the... And in terms of fares, Kelly, look, I think that all of the fares are up. They're about 15% year over year up, because we've seen a couple of fare increases go through. I think that you're going to continue to see that. Are there markets, maybe Chicago to whatever city, where the fares have dropped a little bit? Yeah, but overall, fares are up.
Yeah, no.
Okay, Phil, they are. Thank you.
Coming up, the U.S. military says the blockade of the Strait of Hormuz is fully implemented. Brian Sullivan will give us more insight on what this means for the future of America's energy independence. And later this hour, House Minority Leader Hakeem Jeffries on the Democratic agenda, the Iran war, and the ongoing DHS funding battle. That is at 7:40 a.m. Eastern Time. Squawk Box returns in a moment.
Welcome back to Squawk Box. U.S. Central Command says the blockade of the Strait of Hormuz has been fully implemented. For more on the potential impact on the global energy markets, Let's get to Brian Sullivan, and it's not just tax day for you, Brian. It's an important day for other reasons. Good to see you bright and early this morning.
Yeah, it's like power breakfast, except I'm stuck in a white room and I would have brought in donuts. I'm sorry I couldn't be on set there, guys. Kelly, good to see you. Joe and Mike, hello. Yeah, I mean, right now, if you're looking at a live map of the Strait of Hormuz, and I'm not kidding, after CNBC.com, the marine traffic map is pretty much the second thing that me and thousands of energy investors around the world check first thing every day. And if you didn't, you should be. And you can see again, not a lot of uptick in traffic. What are we looking for? If you're new to this game, all those red dots are tankers, oil, natural gas, propane, whatever it is. And we want to see a lot of red dots going over that little point there. That is the Strait of Hormuz. I know you're sick of hearing the name at this point by now. Trust me, I am too. And you can see there's still a lot of clusters of ships at anchor. Yes, there are ships that are turning off their transponders, effectively running the light at night. And those ships on the top right under the T in marine traffic, those ships are from China or Indonesia. The question is, will that U.S. Armada blockade, will it do two things? A, will it stop the flow of Iranian ships and Iranian oil, i.e. Iranian money, to starve their war effort of money? And then more importantly, will it allow other ships carrying oil, gas, fertilizer, helium, water, pharmaceuticals, whatever it is, will they be able to go in and out freely and safely? The market is betting on the latter, and that's why oil, it's up a little bit today, but it hit earlier just under 87. And in fact, if you go down the contract stream, you look at, say, June and July prices. June and July, according to the CME, are at about $87 and $86 a barrel. They're not at 65, but it should provide a little bit of relief for U.S. drivers. You said it was a special day. Here's why. The Power Insider newsletter launched minutes ago. And I write about why the Strait of Hormuz, that thing we just looked at, why it's important, but maybe not as important as it used to be. We've got text message interviews with insiders. We're kicking off with the great Dan Yergin. We've got data center stock advice. In fact, this week I list the 10 stocks, the most upside seen by Wall Street analysts. We count you down 10 to 6 on Power Lunch today. There's a quick tease of it. If you want 5 to 1, you got to go back to that screen with the QR code and sign up for Power Insider. One big thanks to all my team out there, all my great colleagues, Spencer, Pippa, Sam, everybody. It's going to be a team effort, so I just want to say thanks to everybody. Power Insider launches today. And what was Dickens's quote, Kelly? I know you're a big reader. It's the best of times, it was the worst of times.
Sitting here with Joe and Mike, I'm the third least likely person to know the answer to this, but go ahead.
Oh, so it's the best of times, it's the worst of times, and it's the most important time to write about energy in the world, but it's also the hardest because if you can tell me, or if Joe can tell me what's going to happen tomorrow, I would love to hear it, because things are not only changing day to day, they're changing hour by hour, but it's a long project. But we kick it off this morning, and a big thanks to everybody with the help.
Yeah.
This is why I look like this, by the way. I'm stuck in a room somewhere.
That's scary.
Thanks,
so
Joe.
People made you say these things. Yeah. Do you have you need to hold up a newspaper so we know it's actually been recorded today? Because that looks like a
718.
All right. Because it looks like a hostage tape almost. No, that's.
Thanks.
We understand.
I was going to bring donuts, Joe, if I came in, but
Andrew's not
family
here,
obligations have me here.
All right. Thank you, Brian.
Thank you.
What's going? It's tax day today. The deadline to file for an extension is today, and to write those checks to Uncle Sam. But there is some good news for high earners. They are less likely to be audited. More on that next. Squawk Box coming right back.
Time now for today's Aflac trivia question. Which actresses are tied for the most Emmy wins? The answer when Squawk Box returns. And now the answer to today's Aflac trivia question. Which actresses are tied for the most Emmy wins? The answer? Cloris Leachman and Julia Louis-Dreyfus.
It is tax day, and this year there's some good news for high-income earners, and I was just looking at, there's some other good news too, for what, about 11% higher refunds on average, 11 to 14% for a lot of them. No tax on tips, no tax on overtime, but this is a wealth report, so we're not talking about that type of.
We're going to talk about everybody and then focus on what high earners are doing, and that's because all income groups have seen their chances of getting audited decline in recent years, but the highest earners have seen the largest declines. So back in 2010, if you made more than $10 million a year, you had a 1 in 5 chance of being audited. In 2022, that's the latest year available, your chances were only 1 in 20. Those making between $1 and $2 million had only a 1% chance of being audited in 2022. That's down from 7%. The big reason? Staff and budget cuts at the IRS. The IRS workforce is down from a peak of over 100,000 to about 70,000 people today. Those who do the audits, the enforcement staff, are down about a third from 2023. Now, the IRS says AI is going to help the agency conduct more audits with fewer people. It notes that revenue from enforcements is actually up in the first 5 months of this year. So far, we're not seeing much impact this year. But the Yale Budget Lab estimates that IRS funding and staff cuts will cost the government $860 billion in lost revenue over the next decade. Now, accountants for the wealthy tell me that many of their audits are ending without explanation, but new audits are highly detailed, with AI able to find minute details and inconsistencies faster than the human agents. Now, for more tax tips for high earners, you can sign up for the Inside Wealth newsletter out tomorrow morning at cnbc.com/insidewealth.
What's the most common thing that the AI would find that wouldn't normally be found?
A discrepancy between what the agency received as a form and what you reported, or something that was way out of the norm from your previous filing. So if there's a huge change in a business expenses or a write-off, they flag that. But they're AI has gotten really good at pattern recognition. And so it says, we've seen a partnership like this, a $100 million partnership that was found guilty of this kind of fraud, and now we're seeing a very similar partnership reporting the same things. We're going to look at that one. And so it's given the agents targets in a more concise, efficient way, whereas before the agents would just have to rifle through things, and AI is like, no, look at these 100 partnerships. And so that's saved them a lot.
I would think deductions are so rare that you don't need to show all your. What can you?
Are you asking for accounting advice, Joe?
It's impossible. I'm a W-2. I have nothing.
I know.
I have nothing.
That's
I have nothing but pay more. Especially after, that's when people say, oh my God, you support Republicans because you're so worried about your tax bill. What happened in that first go around, I've said this a million times in the first Trump term, if I cared about my own pocketbook.
Right. Because of salt.
Because of salt.
Yeah.
And
but that's up to 40,000 now. That went from 10,000. So you're being helped by that a little bit this year, but it's on the margin.
I'm not going to talk about how much money we're talking about here, but do some math on the number. Okay, we're TV people. We probably do okay.
People in high tax states did not do well, as well as others.
If you only beat the top rate by a little bit, it means one thing. But if you're, I don't know, look at athletes.
Yeah.
Or whatever. If you're beating the top, where anything under the top rate is de minimis compared to what's above the top rate.
Yeah.
It's frightening.
And even with the audit rates changing, the compliance rate in the U.S. is actually higher than you think. It's about 87%, and it hasn't changed much. So, given the fact that there's only 13% sort of leakage or fraud, it's not bad.
Shrinkage bad. So what is my overall margin rate? You can tell me in New Jersey. Just assume
78%.
Might as well be. That's what it feels like. No, but isn't it 55? Easy?
It's over 50%. Yes.
So
You got to do like the Rolling Stones did in the 60s. Just like go to the French Riviera to escape the taxes in the UK. Do the job.
I could start with Florida.
Yeah, well.
Could I not? Could have
Then you'd be in Florida.
Florida's better because you don't have to pay
And I
that.
have all those traffic lights. That's what I've complained about before. With you got to turn left, and they got to turn left, and they got to turn left, and they got to
Somebody
turn
who lives
left.
in New Jersey is complaining about
Yes, I
traffic
am.
flow issues.
Yeah, and also in California.
Are stoplights worth over 10% of your income? That's the question.
Close.
And no property tax.
All right. Coming up, closer look at the banking sector now that many of the major financial names have turned in their quarterly report card. Squawk Box, coming right back. Stanley reporting quarterly results. Leslie Picker joins us now with the numbers. Leslie.
Hey, Mike. Yep, a beat on the top and bottom line for Morgan Stanley and a record quarter for the top line here. You can see shares responding up about 1.2% right now. The bottom line, a beat by about 43 cents per share. The top line, $20.6 billion, as I mentioned. That was a record for net revenue. This was largely driven by their institutional securities division, which houses investment banking as well as sales and trading. Investment banking up 36% to $2.1 billion. And that was largely driven by advisory, basically mergers and acquisitions that happened to close during the quarter. That was a pretty sizable beat. Equity underwriting and fixed income underwriting coming in a little below what the street was expecting there. In terms of sales and trading, fixed income, that was up 29% in the quarter, beating analyst estimates. And equities, really a key driver of the beat here, coming in at $5.1 billion in revenue, up 25% in the quarter as well. Global Wealth and Management, that was a beat. Investment Management, a little light of estimates and down 4% in the quarter. This is the smallest division that they have, but they attribute that to lower accrued carried interest in their private funds. And also, guys, I wanted to just point out this return on tangible common equity. That's a profitability metric, 27.1% in the quarter. That is the highest among their peers. Shares have come down a little bit, up about 0.5% pre-market. I'll send it back to you.
Yeah, Leslie, I mean, it's a lesson, just the cumulative effect of all these reports that, volatility in markets is obviously on net good for these companies within reason, right? We had massive kind of short-term equity vol and a lot of the trading operations capitalized.
Yeah, I mean, you could see for a while, especially with Goldman Sachs and Morgan Stanley, how their asset and wealth management divisions were kind of creeping up into the institutional securities for Morgan Stanley, global banking and markets for Goldman Sachs. That's the more Wall Street businesses. And then, of course, in this quarter, that definitely diverged once again with investment banking coming back, and then obviously the big behemoth, sales and trading, really delivering the revenue for the quarter.
Leslie, thank you.
Mm-hmm.
All right, joining us now with his review of the financial sector, McCrae Sykes, Gabelli Funds Portfolio Manager. Mac, it's good to have you on. I mean, pretty much, I would say, with maybe the exception of Wells Fargo, the market has liked what it's heard from these banks. What's your impressionistic view of what they tell us?
Yeah, well, I think what we've seen on a reported basis has been very strong. I mean, Leslie just highlighted a 27% ROTCE for Morgan Stanley. Similar, very strong results from Goldman, JP Morgan. So fundamentally, these banks are doing extraordinarily well. Somewhat muted reactions, I think. It's been, we do have this kind of macro overhang, but I think fundamentally, investors in these companies should feel very good about the direction, the change in book values, et cetera. And then the outlook, we have the SpaceX IPO, so we should hear more about that from Morgan Stanley on their call. That's going to be a big boost to capital markets and IPO issuance this year.
Yeah, obviously all the mega IPOs that we think we're going to be getting, it's going to be a tailwind there. Does that mean that you prefer the investment banking centric firms?
Well, we in general prefer some of the larger, better capitalized banks, more diversified revenue bases. And then we've been a big proponent of this huge sort of mega capital cycle in terms of M&A, IPO issuance. We see peak earnings, later this year and next year. So we think that's very good for those big investment banks in terms of driving results. In Bank of America, for instance, earnings up 25%, 16% ROTCE versus 14% last year. So we continue to expect strong results from this segment.
Do you think the market will ever perhaps give full credit to Bank of America for the strength of that institutional securities and investment banking franchise? It just seems like it just doesn't carry as much weight within the whole, the old Merrill Lynch division, I mean.
Well, I think that's right. Obviously the brand recognition between JP Morgan, Goldman, and Morgan Stanley, but Bank of America is certainly very formidable. They outlined a number of things in their investor day last fall. I think they're, building even more confidence as they evolve and generate higher returns. I think they're going to do very well, just like the other banks, and there's good value there too as well.
If you're forced to kind of decide on something to worry about, whether it's in the Main Street focused banks or elsewhere, what would you come up with?
Well, I think the thing that it generally is a surprise, right? And as Jamie Dimon said yesterday, it could be an industry where there's some challenges, and we've seen some volatility certainly in the software space, and that's kind of outside my industry expertise. But from a credit perspective, it always could be something that we don't expect. And so we're constantly monitoring some of those things that are highlighted by the big banks and their exposures, et cetera. So perhaps my biggest fear is the unknown at this point, but still, fundamentally, these companies are in great shape, well capitalized, with a great outlook.
All right, Mac, thanks very much for weighing in. Great sense.
Coming up in the next half hour, we'll be dropping in on the CNBC Invest in America Forum, where Sarah Eisen will be speaking with Treasury Secretary Scott Bessent. Look forward to that just after 8 a.m., I should say, Eastern Time. Squawk Box is coming right back.
All right, next we will head to Capitol Hill. We're not heading there, but we're going to speak to House Minority Leader Hakeem Jeffries about the priorities for the Democrats when it comes to the Iran war. Squawk Box returns in just a moment. Democrats pushing for an end to the Iran war, with House Minority Leader Hakeem Jeffries saying that he will call for another war powers resolution vote. Leader Jeffries joins us this morning. Congressman, it's good to have you on. Good morning.
Good morning. Great to be on.
Should we just end this immediately in your view, or the next couple of days, according to the president, negotiations could resume and there could be some type of agreement with Iran that does accomplish certain objectives? How do you think that the president or the administration should approach it at this point?
Well, Donald Trump has gotten us into this costly, reckless war of choice with no plan, no clear objectives that he clearly communicated to the American people, and no exit strategy. And so the whole thing right now is a mess, and we've been spending billions of dollars dropping bombs in the Middle East from an administration and a president who are unwilling to spend a dime to actually make life more affordable for the American people. So it's no surprise that this war is deeply unpopular across the country. And the real problem that we have in terms of where we find ourselves right now, no regime change, which the Trump administration argued was an objective. That hasn't been accomplished. The nuclear material still remains in Iran's possession. And so that so-called objective hasn't been accomplished. And Iran now controls the Strait of Hormuz. And as a result, gas prices have skyrocketed as a direct result of Donald Trump's reckless war of choice.
Mr. Speaker, Mr. Leader, I almost called you Speaker, but might be rushing things. I know what your plans are in November. That was classic Freudian slip. You probably like that one. Leader Jeffries, we did have an expert on Iran who was in the Trump administration, but he is now with the Foundation for the Defense of Democracies. And I know that you've heard arguments from Republicans and from the administration about why this made sense. Just respond to what this gentleman, the points he made earlier in the show. Here it is.
If we still face an imminent nuclear threat and we face a looming imminent missile threat, both direct national interest to the United States, the question would then be, when do you want to confront those threats? Do you want to do it when they're strongest? When China says, hey, close the strait? Do you want to do it when they've actually achieved the nuclear weapon or when they have the ICBM? Or do you want to do it when they're at their potentially weakest point? If you have an imminent threat, it's a clear national interest, and your adversary is at its weakest point, that'd be a good time to do something. And so I think the president chose the right time on his timeline, not on their timeline, not on China's timeline, not on Russia's timeline. And he's done great damage to both the missile and nuclear program, but obviously still some things to achieve.
There's some of the rationale, and we are at this point now. You talk about some of the objectives that haven't been, we haven't actually accomplished yet. In your view, isn't it possible that maybe we could accomplish them if we either go through negotiations or continue to put the pressure on? You think we should just unilaterally just stop?
I think that we have to end this reckless war of choice that Donald Trump never came to Congress to get authorized in the first place, and more importantly, never actually made the case to the American people. Now, the so-called expert should understand that the administration has presented no evidence, zero evidence, privately or publicly, that there was an imminent threat to the United States of America in terms of Iran's ballistic missile capacity, and that there was no threat that Iran was actually close to nuclear breakout or had demonstrated the intention to take steps to get to nuclear breakout. And so the objectives that the administration allegedly is trying to achieve can't be accomplished militarily, and there was no reason to go in the first place, or if there was, the administration has actually failed in a classified briefing setting, or certainly failed to communicate that evidence to the public. Why? Because it does not exist.
The War Powers Act, it's been tried once already. You're going to do it again. Do you actually think you could be successful this time? And I will give you credit, Leader Jeffries. In the past, I think you even criticized President Obama's Libya campaign and all the way back to Kosovo, and you've never thought a regime change is possible. So you've been consistent as far as that goes. But the interplay between Article 1 and Article 2, there's gray areas there. I mean, the president does have the authority as commander-in-chief to take action to protect the national interest.
Yeah, but the president, of course, has to exercise that judgment when he does it in a limited capacity, and it should be done in a way that is actually designed to improve the national security posture for the American people, or certainly to make life better for the American people. And the problem with this reckless war of choice is life has gotten more expensive. Gas prices are now more than $4 a gallon across the country in an environment where Donald Trump had already failed to bring down costs. And the problem, Joe, that we confront right now is that what's clear is that Donald Trump and Republicans have made affirmative policy decisions that actually have made life more expensive for the American people. The Trump tariffs have made life more expensive for the American people. The refusal to extend the Affordable Care Act tax credits have increased health insurance premiums for more than 20 million Americans directly, and millions more who get their insurance from their employer indirectly. And now, of course, with this reckless war of choice, costs have increased in terms of gas prices, and the likelihood is that we're going to see food prices increase as well. And so The whole thing has been a disaster in terms of the way in which Donald Trump has managed this economy. From our standpoint as Democrats, we want to focus on driving down the high cost of living, fixing our broken healthcare system, getting ICE under control, and spending taxpayer dollars in ways that actually improve the quality of life of the American people.
We just did see a Truth Social post, Leader Jeffries, from the president. Let you respond to it. China's very happy that I am permanently opening the Strait of Hormuz. I am doing it for them also and the world. This situation will never happen again. They've agreed not to send weapons to Iran. President Xi will give me a big fat hug when I get there in a few weeks. Maybe a little TMI. We are working together smartly and very well. Doesn't that beat fighting? But remember, we are very good at fighting if we have to, far better than anyone else. President DJT. Your response?
I mean, it's a lot of bluster, and that's what we continue to see from this president until we actually see tangible evidence that the strait has been reopened. Our view is that gas prices are going to continue to go in the wrong direction for the American people. In fact, the president himself just acknowledged yesterday that by the end of the year, gas prices may actually be right where they are right now, too high, or even higher. And so I don't understand the confusion that the president is trying to put into the public domain, other than he wants to fool the American people with his rhetoric. And so I think this is a president that just actually should start focusing on the things that matter. And we've said from the very beginning as Democrats that we'll work with anyone, anytime, any place who's actually committed to doing something about the high cost of living in the United States of America, to standing up for working class Americans and middle class Americans and everyday Americans. But instead, this president has been more focused on posting deranged messages on Easter Sunday, then attacking the Pope of all people, and then putting images into the public domain portraying Donald J. Trump as Jesus Christ. If that's not blasphemy, I don't know what is right now, Joe.
But, Congressman, you know what we do here and what we try to cover whenever possible, and that is the stock market. And there's plenty of disagreement whether Wall Street and Main Street are always aligned, but at least we know that the corporate profitability and the economy and profit margins are reflected in what happens in the averages. So in other words, if we're facing a recession, it's unlikely for the stock market to be doing well. We can look at the bond market as well. So I just wanted to show you a couple of charts. One is the S&P, one is the NASDAQ. We're back to all-time highs, basically, on most of the averages. You can see that when the tariffs were enacted, that's in the middle of the chart. There was a sell-off, quick rebound, and the same sort of situation happening now. Same with the NASDAQ. And then also, I just want to show you quickly the 10-year note, or interest rates. Go back for the same period of time, and inflation is not where the Fed wants it. It's not where anyone wants it. But you would normally see, if there was a true crisis, you would normally see some type of panic or angst in the bond market. So just in terms of Wall Street, you would not know things are going very poorly the way that you describe it. Things are going pretty well.
Well, actually, I talk to corporate leaders all the time, and they're incredibly concerned with the instability and the uncertainty that Donald Trump and Republican policies have created. Because as you know, Joe, it's impossible to make sound investment decisions when you have such an uncertain, unstable public policy environment, which Donald Trump has continued to put forward in terms of the way in which he's conducted himself. And so that's highly problematic. And the reality is, at the end of the day, for the American people that we all are privileged to represent here in Congress, that, yeah, for the investing class under Donald Trump's policies, including his one big ugly bill, which enacted the largest cut to Medicaid in American history at the same time that these my colleagues, provided massive tax breaks to their billionaire donors, the investor class is doing well. The problem is the working class is not. And Donald Trump promised to focus on making life more affordable for working class Americans. And in that regard, all evidence indicates he has failed.
In the one big beautiful bill, it's calculated that maybe refunds this year could be much better, much higher than before, 11 to 14%. No tax on tips raises take-home pay for tip workers by $1,300 a year. There's overtime, no tax on overtime, which helps quite a few people. And I know you always say it just benefits billionaires. I assume you're talking also about corporations. Just listen to yesterday what J&J, the Johnson & Johnson CFO, said it did in terms of domestic investment and why they're doing it here now.
In 2016, I was looking at a proposal to build a new facility that had a tax rate of 35% plus state tax here. That compared to other countries that were anywhere from 10 to 12% with additional incentives. It would have been a dereliction of duty on my part to say, yeah, that's a good financial move. Now the game is equal.
Leader Jeffrey, J&J, because of those provisions, this, what we were talking about yesterday, is part of a broader $55 billion U.S. investment plan that the company's making to build factories here, creating tens of thousands of jobs that would never have occurred if the corporate rate hadn't been brought down in the big beautiful bill, or big ugly bill, as you call it.
Well, listen, the reality is that job creation under the Trump administration has been incredibly shaky. The numbers in that regard speak for themselves. And the fundamental question that everyday Americans are asking, has life gotten better for me under the presidency of Donald Trump, or has it gotten worse? And when you actually look at the dynamics around cost of living, housing costs are up, utility bills are up, health insurance premiums are up, childcare costs are up, gas prices are up. And so the reality is life has gotten more expensive for the American people. By the way, the cost of goods and groceries are up as well as a direct result of the Trump tariffs that he unilaterally decided to impose over a year ago. And so life clearly has not gotten better for everyday Americans in terms of the Trump economy. Life has gotten worse. And that's a big problem for the American people. And we don't view it politically. We view it from the lens of our job is to actually improve the quality of life of the people that we are privileged to serve. And that's not what's going on in the United States of America right now as a result of the extreme policies that Donald Trump and Republicans continue to try to jam down the throats of the American people.
Leader Jeffries, thanks for your time this morning. We will we'll see you as we do about once a month or so. Hope to see you. We'll see you then. Maybe we'll be in a great place. Let's just hope.
Thank you
for the best. All right, you're welcome. Squawk Box will be right back. Just shy of 8 a.m. on the East Coast. You're watching Squawk Box on CNBC. I'm Joe Kernan, along with Kelly Evans and Mike Santoli. Among today's top stories, Washington and Tehran appear to be moving closer to arranging a second round of peace talks, as U.S. Central Command says its blockade of Iranian ports is now fully in effect. Kevin Warsh's Fed Chair confirmation hearing is set for next Tuesday, April 21st. Senator Tom Tillis may block it unless a DOJ probe into Jay Powell is dropped, and that would risk a committee deadlock. Be interesting to see what actually happens. And OpenAI unveiling what it's calling a GPT 5.4 cyber.
Wonder why.
I just think it really sounds cool. It's a variant of its flagship chatbot aimed at enterprise cybersecurity. Your husband argues
with the chatbots?
I do too.
Well, he just uses strong language with them. I'm
So do
much more
I.
polite.
So do I, and some of them are different than others. And the one that the ChatGPT, which irritated, always tells me, "You're right. Oh yeah, sure. God, you're such a good person." All that. It's like you just lied to me because about being a good about the answer you gave me. You didn't know. You didn't check. When they say, "Well, what about this?" I always go back, "Oh, you got me there. You got me there. I didn't check the latest information." It's like you had one job.
You're confirming my decision not to engage whatsoever with this.
Have you not engaged with them at all?
No, I've decided to be passive about it. I'm going to encounter it like a normie does.
I find it best as basically like a better Google.
Yeah.
Really. But
in
not,
that sense, I do.
We saw the big story yesterday. It was just like Joaquin Phoenix and her. Some guy fell in love with some chatbot, and the chatbot was saying, "You got to tone this down a little. I'm not a person. I can't do all these things for you."
Given how hard it is for them to push back, that's saying something.
I mean, what if you combine? Well, never mind. I mean, they do have dolls. I mean, what if you just were to have a talking bot doll? I guess you'd
already. Yeah.
Is that in the works?
How could it not be? This
Well,
technology
that's a
has been out
sick
there
place
for
where you wonder why we have problems.
Yeah, well, we all.
I don't wonder.
Exactly. I'm like, no, I think we get it. Let's get a quick check on the market. Sylvia Jablonski is Chief Investment Officer of Defiance ETFs. Sylvia, it's good to have you back. And again, we're kind of in a holding pattern today, basically because the price of oil has stabilized and WTI is down around 92, 91. So it looks like those March 30 lows might be intact, barring a surprise around the corner. And the defense, we were talking about defense last time you guys were on. So what happens to that whole trade around energy and security, defense, and all the rest of it?
Yeah, good morning, Kelly. Well, I think, you laid it out pretty well, right? We've seen the S&P rally for the last 10 days, 10% or so. We have some stability in the markets. And is the bottom in? I would argue that the bottom is in if the deal is it, right? If we are moving forward in Iran, if there's a resolution, if the ceasefire holds and we kind of get somewhere, I think market volatility will depend on that. But, what happens to that trade? Well, that trade, remember, is very much hinging on AI. And so a lot of the names in the modern warfare have to do with AI. But I think what happens next is that you have the market rebounding, you have AI stocks rebounding. And yesterday was World Quantum Day. So investors are now very much right back on board and looking for the next big breakthrough in technology, and that's quantum. You look at IonQ and D-Wave, those stocks are up 20% in the last day. Photonic stocks are moving. AI is very much on board, and it can transition whether it's from warfare to quantum computing, and it still leaves open opportunities for investors to benefit.
I'm glad you mentioned quantum. I saw some of those moves, IonQ and the rest of it, and big retail fan base, and it always makes me a little nervous as well. I mean, we're very, very early days. Did you think they were really substantive takeaways there?
There are a lot of substantive takeaways. So, 414, this is because of Planck's constant, right? The first three digits is why it's quantum day. And you got a lot of news. So IonQ connected its first commercial quantum computer. They had, $1.8 billion in revenues. Their big announcement there. D-Wave is working with the Japanese pharmaceutical companies, and they made headways in medical research. NVIDIA came out and said that they found, they launched icing, they found a way to calibrate, which is basically error managing on quantum computing. So what we're hearing here is now they're becoming commercial, they're becoming monetizable, they're being applied to real world problems. And that, to me, sounds a whole lot like a ChatGPT moment, although hopefully, you won't fall in love with it as you guys were talking about in the intro there.
Yeah, presumably that's a ways off, falling in love with quantum mechanics there. Although, Sylvia, I do wonder about, I mean, I know you have, ETFs that capture this, but ChatGPT didn't come out of a lot of companies that were sort of penny stock shells, and then they had some little bit of research. I mean, a lot of these companies did, frankly, or they were SPACs. And I just, the way you describe the money flowing so freely from defense tech into quantum, because on a given day, that's what's working, I just wonder if that's a sort of erratic, unreliable flow.
Yeah, and I would argue that's the reason why you look at an ETF, right? So if you look at an ETF, like what's another quantum company? IBM is a quantum company, right? NVIDIA is a quantum company. IBM was part of the HSBC bond research. They essentially figured out bond pricing and error control using the quantum computers and technology of IBM. And, that's very much a big blue chip stock that people. So I think stock pick, and your point is right. Who knows sort of who's going to be the winner of the smaller companies? There will be winners, there will be users. But if you get an ETF, you get the exposure to the ballast of the large cap with the new innovators that come into the ecosystem. So I totally agree with you. I think it's good to diversify there.
We were talking to Mark Mahaney last hour, Sylvia, who's a little bit cautious on how first quarter earnings might go for big tech.
Yeah, well, we'll have to see. The outlook and the expectations are quite high. We're expecting Mag 7, plus everyone's saying kind of plus Broadcom now to perform, and I think that'll dictate the future of the market, at least in the near term, right? We'll want to hear more about CapEx, what happened with that CapEx, what's the next iteration of AI and the monetization there. So I do think that it still sticks in this whole AI ecosystem, though. What's going to happen with all of this?
Sylvia, thanks. Appreciate it. Sylvia Jablonski.
All right, the CNBC Invest in America Forum kicking off in Washington. Sarah Eisen currently speaking to the Treasury Secretary. Let's join.
Because this year it's going to look a lot different when it comes to taxes, right?
It is. Well, I think no Americans like the April 15th, but I think more and more this year, refunds are up 13%, and we've got, as of April 12th, we had 52 million returns filed. And of those returns, 45% of them have one of the president's 4 signature policies in the working families tax cuts. So no tax on tips, no tax on overtime, reduced taxes for seniors, and deductibility of auto loans for American-made cars. By far, what we're seeing on the tax returns, the biggest is almost 25% have taken no tax on overtime. And it's the American way. You want to work harder, you keep more of it.
And Trump accounts, that's new too. Huge part of the story.
Trump accounts, easy to remember, Form 4547. If any of you haven't filled it out, but we've got 5 million Trump accounts open, and 1.2 million of those, the filers are eligible, their children are eligible for the $1,000 seed investment from Treasury into those accounts. So 5 million open for children, the 0 to 18, and then for children born during President Trump's term, they'll get the $1,000 seed. So 1.2 million of those so far.
Yeah, which is news that you're breaking here. And I know that you've been working really hard on this, and it's one of the signature policies. There's always critics, but there's still this concern that it's not going to go far enough to reducing inequality, which is a big problem in our economy right now, and that it's just another way for the wealthy to use a tax-advantaged fund.
Look, the wealthy don't need tax-advantaged funds. I think you were there on launch day, and only in Trump world would the Treasury Secretary be on stage with Nicki Minaj, and who was a great supporter. She actually
she's contributing. Right?
She's contributed to a wide group, but one of the interviewers said, "Well, it shows that the compounding will only be once the count opens up when a child's 18. It will only be $5,000." And how elitist, how tone deaf, because. A couple of weeks ago, I had the Mortgage Brokers Association in, and they said that of the mortgages that get started, only 30% get completed, so 70% fall-off rate. And the fall-off rate could be because the potential buyers don't have $1,000 or $2,000 to pay for their credit scores to pay for the title insurance. So, to say that $5,000 in the queue to become part of the American dream and be a homeowner, like $5,000 would have helped get those other 70% of people across the line. And I think you're going to have Michael Dell
Yes,
on
he's up
later.
next.
And Michael and Susan Dell made this incredible gift to the children of America, $6.25 billion. As President Trump said at the Mellon Auditorium, Michael, $250 million would have been a lot, but $6.25 billion, and that is going to be $250 for every child in America who is not in the top 20% of net worth zip codes. And we're going to see that. We think that we're going to have Michael and Susan were fantastic. They did it nationally. We're seeing philanthropists adopt states, whether it's in Connecticut, Indiana, Oklahoma. We're hoping to have all 50 states done, so the accounts are going to be topped up. The $1,000 is just the starting point that employers can contribute, foundations can contribute, great philanthropists like Michael and Susan can contribute. We think 20 states are going to contribute. And Sarah, what I think is important here is we're all familiar when we talk about nutrition with food deserts. This idea that families don't have good food alternatives. Well, like I've coined the phrase financial service desert because they talked about it. I think Brad Gerstner brought it up at the launch of the Trump accounts. Many of these families, 38% of families in America, have no exposure to our great equity market, the innovation, what we all take for granted. I think that by opening this account, you are, in a way, it is financial nutrition for these families. And they're going to have this account open that an extra $20 can be put in at any time. The birthday gifts. Here's a teddy bear, here's $10 too, and it'll compound over time.
My kids would appreciate the money. They're luckily trying to get them financially literate, especially if, it'll compound and do very well if the market keeps doing what it's doing. I mean, we were talking before about the market being at a record high, despite the surge in the price of oil, obviously the very uncertain outlook on geopolitics, and everything else going on. Are you surprised to see the resilience?
I'm not surprised. I'm always surprised. It's Bank Week, IMF World Bank Week this week here in Washington, along with tax day. So busy week for us at Treasury. And I've been on a lot of panels, doing a lot of speaking engagements. And someone asked me, well, what do you try to convey? And I said, look, this was just like on Liberation Day. I walked out and was I on with you? But
maybe.
And
hopefully.
But I walked out and said, look, these are the highest tariffs you are going to see if countries don't retaliate. So only China retaliated. The market, I think, went down into Liberation Day, April 2nd. We bottomed on April 14th. Yesterday was April 14th. Market did well, but.
You're saying we've seen the worst of it here?
Look, I don't make market predictions, but I think the market is like the sum of all the thinking, and it is a group, and markets live in the future. And what I've tried to say is that this war will end. I don't know whether it's 3 days, 3 weeks, 3 months, but it will end. We will get on the other side of this, and what we've seen in the inflation data, core inflation's coming down. It is the noisy energy component, and we've seen oil prices collapse over the past 2 weeks. Interest rates are coming back down. I came out and said, I think the Fed has been wrong on their inflation projections, that it is clear the core is coming down. If they need, for their own sanity, to wait on interest rate cuts, I understand it, but I think that means they're just going to be able to do more on the other side when it is clear the core is coming down and there is no transmission from the energy price into core goods.
Underlying inflation.
Yeah.
Oh, I'm glad you brought that up because I was going to ask you about that. The headline was that seems like you're cool now with the wait and see approach by the Fed, which doesn't sound, it sounds like I don't know if the president agrees with that. He has really pushed for lower rates.
Look, I think I understand why they're doing it. It wouldn't be necessarily my base case.
You'd be cutting.
I'd at least be ready to cut, and I'd have an open mind that they may have to cut more because they've waited longer.
Why do you think that? Why are you so sure that inflation will not creep higher as a whole? You know, obviously there's oil prices and gas prices, but it filters into the industrial economy. We've seen fertilizer prices rise, which could impact food prices. And there's still, you know, pockets of inflation around electricity and health insurance.
Well, we're also seeing a lot of things fall. Again, I found when I was in the investment business to kind of line up my facts. So fertilizer, 75% of the planning's already done. That if fertilizer prices don't come down by September or October, then could it be a 27 problem? Sure. But I think that they will, I'm highly confident. And then what we look at, whether it's CPI or PCE, those are lagging measures of inflation. If we look at the real-time data, owner's equivalent rent
softened.
It has really softened. They're back to 2022 levels, but that gets picked up with a 6-month delay. Sure. In the inflation numbers. We're seeing groceries start to come down. We are seeing the healthcare start to come down.
So you're pretty convinced that we're on a downward trend on inflation?
Yeah, well,
besides oil.
In core. Sure.
In core inflation.
Yeah, and the market-based indicators are also telling you that there is no transfer in terms of inflation expectations.
What about the impact of the oil price and higher gas prices on the real economy? You started off by talking about how much better the refunds look, up 13%. That's money in consumers' pockets, but does it get offset by the higher gas prices?
It could, but again, I think the gas prices will start coming down pretty quickly. We've had the big declines in the past 2 weeks. We'll be looking at Treasury to try to keep the retail gas stations honest, that you did this on the way up, better be doing this on the way down. And I'm sure the president will call out anyone who's a bad actor in terms of...
That sounds like a warning.
I am sure that everyone will be a good actor.
So ultimately, impact of the war on the economy is what?
Well, the classical economic theory would just tell you that it's a push forward. So that this quarter will be slower than it was. I think that first quarter was moving along well. And we've heard the president say that one of the reasons he believed that he was able to prosecute this war now, and other than he believed it was the right time to prevent Iran from having a long-term nuclear weapon and to decapitate the regime, was that the economy was in such good shape. That it was, the indices were at a high, we're back to a new high. The economy, at Treasury, we have lots of companies come through. In my private business, I never tried to predict GDP or non-farm unemployment to a decimal level, or decimal level. But we talked to a lot of companies, and we formed a macro view by talking to micro data points, and the micro data points have been great. Well, if you saw what Jamie Dimon said about consumer credit yesterday,
yep.
all the credit cards, the banks said that the consumer's in good shape. Corporate America earnings are in good shape. So
do you have a GDP prediction to the decimal?
Well, it's all going to be path dependent, because again, this conflict is going to end. That I don't know whether it's 3 days or 3 weeks.
But even if it lasts for months, you still think it's going to be a temporary phenomenon? What's happening with oil?
It's always, there's a catch-up, there's pent-up demand. We will see, we're seeing very strong CapEx in terms of groundbreakings. Finally, people were saying to me that, well, all these factories aren't coming back. And you're a financial markets person, you started in the following foreign exchange. In foreign exchange, you can move $1 billion by pressing a button.
It's crazy.
That when you are in the real economy, to build $1 billion factory, there's planning, there's board permission, there's finding the site, they're starting the site. And so now we're starting to see a pickup in construction jobs, which will turn into manufacturing jobs. I was in my hometown of Charleston, South Carolina a couple months ago, Boeing factory there. They are upping their Dreamliner production, which is made in Charleston, by 50%. It's going to be 1,000 manufacturing jobs, but before that, it's 700 construction jobs.
Yes, I was going to ask you, if there's such a boom in investment in manufacturing, but the output's been a little uneven and the job growth has been sluggish in manufacturing.
Yeah, but again, I think we're going to see these new facilities come online, especially pharmaceuticals. We've seen, I would hazard a guess at a record amount of groundbreaking for new pharmaceutical facilities. I was up in Westchester County at Regeneron. This is how old I'm getting. I remember when it was a biotech company, now it's a pharmaceutical company, and they're expanding in Westchester County, they're expanding down in North Carolina. And they said a lot of that is due to the tax bill. So on one side, the tax bill had the 4 signature policies that we're seeing. And going back to the 4 signature policies, refunds are big this year. I want to remind anyone who takes advantage of those to adjust their withholding, and then they'll get an automatic fill up in their weekly, monthly income. But you had that for working Americans, and then on the other side for corporate America, the full expensing of equipment, full expensing of factories, and the expensing of R&D. And that's what Regeneron, the management of Regeneron, which is an incredible management, fantastic story. The founder still runs the company.
I remember when the president took it during COVID, the antibody treatment.
Yes. As they said, we had a cure for COVID, but
you did call it that. Yeah.
But they said
that was Treasury Secretary Scott Bessent speaking at the CNBC Invest in America Forum. You can continue to watch the conversation live on CNBC.com. Now coming up on Squawk Box, Cleveland Fed President Beth Hammack, and later Senator Steve Daines joins us to talk Iran, DHS funding, and much more. Squawk Box will be right back.
Welcome back to Squawk Box. There's the futures right now a little bit mixed, but the Dow has turned around and is now positive. NASDAQ off just 25 points this morning.
Yeah, coming up, we'll talk about March import prices. That's your breaking data this morning. Remember, the PPI was much cooler than expected yesterday. We've also got Empire Manufacturing for the New York region. Those numbers straight ahead. Plus, Cleveland Fed President Beth Hammack joins us. Looking forward to that conversation. Squawk Box will be right back.
We are just minutes away from reports on import prices and Empire State Manufacturing, plus a special interview with Cleveland Fed President Beth Hammack. Take a look at how futures are set up. Of course, the S&P 500 is up more than 2% this week. It's up almost 10% over the last 10 trading days. It's indicated about flat at the moment. It's getting a little bit overheated in the short term, maybe needs a rest. Take a look at the Treasury market. Been pretty subdued. These yields are off their recent highs. You see the 10-year, though, firmed up around 4.27 at this point. The 2-year yield at 3.76 and change. Rick Santelli is standing by at the CME in Chicago. He's going to be ready for those numbers when they hit. Steve Leisman also here. We got a little time, Steve. I mean, what's the thought about how fresh these numbers are, what they're telling us, how they fit into the whole economic mosaic?
Well, I was thinking yesterday about the kind of back and forth I had with Rick yesterday, and I said these were higher numbers, and Rick said, well, why aren't yields higher? And it really boils down to expectations. And Rick, by the way, is right about that. It's how the market goes in. I always like to say, which side of the ship is the fat guy on? That's my personal opinion.
Rick, were you watching? Because we had Leader Jeffries on, and I know I heard from you, but
of course I was
watching.
I was watching. You know what? I want to send him a picture. You remember this guy, Neville Chamberlain, getting off the airplane? That reminds me of the minority Speaker of the House. No nukes. They promise no nukes. They promise not to develop a bomb. They promise this. They promise that. It's the same thing. Appeasement.
Rick,
it's appeasement.
all I was going to say was that I decided to use the markets tell the truth and tell the story. I decided to use that. I showed him the S&P, the NASDAQ close to a new high. We got transports at a new high, and we got a bond market that's
You were a little nicer than I would have been. You were
I know.
a little nicer than I would have been.
We want him to come. If he is ever speaker, and November's coming, we want to have Hakeem Jeffries on, obviously. So I can't be a flamethrower.
Boy, you're giving me more reasons to go to church every Sunday.
I was going to say about the import-export data, we'll see whether or not what happens with the oil prices comes through more cleanly through the import price channel. That's what I was going to say.
All right. Well, we are about to see, in fact, whether it happens. Rick.
All right, the numbers are hitting the wire. Import prices month over month expected to be up a whopping 2.3. Come in, up 0.8. Now, not that up 0.8 is a great number, but it's definitely a lot smaller than expected. And in the rearview mirror, 1.3. 0.8 will be the lightest going back to, well, just January when it was 0.6. But the real issue here, once again, as Steve pointed out, what's the market prepared for? And on the headline, we're expecting the 2.3 because of oil movement, of course, on the import side and on the export side to some extent. Now, strip out petroleum, you do see that effect was there on the energy complex. It's up 1/10. 1/10 will be the lightest. Oh, we have to go back a bit since it was unched in September of last year. Now, if we take a year-over-year perspective, which is always important, 2.1. Less than half of the 4.4 expected. If we look at export prices on a month-over-month basis, they come in at 1.6, darn close to expectations. If we look at the export prices year over year, 5.6. That is a little bit on the high side. 5.6 will be the highest level since Nov of 22. And we do understand that when we export energy at this point in time, most likely the prices will be on the high side. Empire comes in at a positive 11, much better than expected. That'll be the strongest reading since Nov of last year. And you know what? I'm sorry, Joe, but I have to keep going on a bit. You know, when the minority speaker of the House starts talking about broken promises, I just hearken back to, you can keep your doctor if you want. The average family's health care is going to go down $2,500 a year. These were all things that were said in a political spectrum. So when I hear the minority speaker say that one party or another party broke health care, I really have to scratch my head. Or when they talk about, housing being affordable, I looked at 2022 and look at the inflation numbers. I think we were kind of over COVID about that time. So, I don't know. Living in a glass house, we shouldn't be throwing boulders. Back to you.
All right, Rick, this is you.
All right, yes. And Steve.
Yeah, so I'm just looking at these numbers here. I don't think that you can destroy higher energy prices. What I mean by that is, if it didn't come through in March, I think it'll come through depending upon what happens in April. I don't think these things go away. But I do think what you can do, and we'll talk to Beth Hammack in a second, is you can look beyond the energy top line and focus on what Rick reported there, which is that I think he said X energy, it was 0.1. That's a good number. Now, it does disprove the notion that foreign companies are absorbing the tariffs. Why? Because if they were absorbing the tariffs, the numbers would be negative, and they're not, okay? So they've been pretty steady, up 2.1% year over year. So it's not a huge problem, but it's not being absorbed on the other side. And all of this, as did yesterday's PPI, by the way, made me think we might see a bigger energy effect in April, which doesn't tell you whether or not we see a bigger effect in the core. And that, I believe, is what our next guest, Beth Hammack, the Cleveland Fed president, is going to talk to us about, is a difference in the concern between the headline and the core. Beth, thank you for joining us this morning.
Thanks for having me, Steve. It's great to be here.
Give us your general view, if you don't mind, of what and how you're thinking about this surge in energy prices And significantly, it didn't show up in a big way yesterday in the PPI, and it's modest today in the import price numbers.
Well, the important thing to look at as it relates to the energy prices is how high are energy prices going to stay and for how long are they going to stay there. As you know, energy prices are really important for individuals and for consumers. They feel the price of gasoline at the pump every time they go to refill their cars. And so it really can weigh on them. And so we have to look at both sides of that impact. On the one hand, it may be more inflationary and it may be keeping prices higher than we would otherwise want. But on the other, if it starts to impact consumers and their willingness to spend, that could mean that we see some impacts flow through in the growth numbers that could ultimately flow through into the employment numbers. We have two sides of our mandate that we have to balance, both the employment and the inflation side. And that's why I think that rates are in a good place. My baseline is that we're going to remain on hold for a good while. But I do think that there's two-sided risk to rates. I think there's risk that we might need to be more accommodative or more restrictive, depending on how the data comes out. But that's why it's a good time for us to stay patient and wait and see how the data flows through.
Do you have a bigger concern here when it comes to both sides of the mandate? Is your bigger concern on the inflation side, or is your bigger concern right now on the concern about economic weakness?
I'm concerned about both sides, but from my perspective, what I see is a labor market that's reasonably in balance. It's a curious balance. We're not creating a lot of new jobs, but given the supply side on the labor picture, it looks to me like we're roughly in balance. On the inflation side, we've been missing on our inflation target for 5 years. And what that means, I'm focused very much on what this means for everyday individuals. Since we've been missing on our inflation target, we've been above that 2% goal over the past 5 years. Individuals have experienced a decade's worth of inflation in that time period. Let me put that into practical terms. If you're going to the grocery store and you used to spend $100 to fill your cart, it now costs $120. If inflation had been at 2% over that period, it would be closer to 110. And that applies to groceries, that applies to haircuts, getting your car fixed, whatever it might be. And those are the things that I hear when I'm out in the district. Individuals who are really struggling to make ends meet. They've had to trade down over time. They've had to go from name brand to store brand. They've gone from buying steaks to ground beef to maybe now they're only able to afford beans and pasta. And so I have to look at both sides of the mandate. And to me, I think that we're right around where we want to be on the labor side, but we're still persistently missing on that inflation side.
President Hammack, the last minutes to the Fed meeting said that some believe that a rate hike could be appropriate if inflation were to remain above target levels. Were you among those people who believe a rate hike could be appropriate?
My baseline is that we're going to be on hold for some time, but I do think that there's risk that we might need to be either more accommodative or more restrictive in policy. I think it's just too early to say. We've had a series of these supply shocks over the past couple of years. We were on a good path at the end of 2024 when we first began reducing rates. Inflation had come from above 7 to below 3, and we had good line of sight to getting back to that 2% objective. Then, of course, we had the tariff shocks, and more recently, the conflict in Iran. All of these successive supply shocks are hard to think about how we're supposed to handle those from a monetary policy perspective. Normally, you like to look through these types of supply shocks, but when it's coming on the back of already elevated inflation, it may not be the same as it would be had we be entering this period at low and stable inflation.
A central theme of those who have suggested the Fed could and should cut interest rates now is their belief that the labor market will not be a source of inflation. How much confidence do you have that the labor market will not be the one where wages go up and push overall inflation higher?
I don't think right now that the labor market is a source of inflationary pressure. That's not what I'm hearing. I do hear that there are some risks and there are pockets, particularly out in the 4th district, the Cleveland district. What I hear particularly from manufacturers or from construction companies is that they have a hard time finding workers. It's hard to get people to come and show up, to be there repeatedly. What I'm focused on the inflation side is that we make sure that we're maintaining inflation expectations. We've talked a lot in the recent past about how the labor market, when unemployment increases, it can increase quite quickly, and so you want to get ahead of that. That's also true on inflation expectations. Right now, inflation expectations look to be reasonably well contained, but it's important that they stay that way, and that gives us time to be patient and to make sure that we can deliver on both sides of the mandate.
Beth, it's Kelly here, just to jump in. I like that discussion you were having about the price of groceries. Over what period of time was that? You said we did a decade's worth of inflation in how many years?
In 5 years. In 5 years. So if you look
years.
back to February of 2021 to February of 2026, so this is even before the recent surge in energy prices, using the PCE inflation, it was around 21.5%. And if you run the math on 2% inflation over 5 years, that's like 10.4%. So we've seen a decade's worth of inflation in 5 years.
I just like that framing because I think that's how it feels to people, and that's why it's so frustrating. And so, unfortunately, the Fed can't really make prices come down now. I mean, certainly not without massive economic disruption. So, what do you do when you go, okay, well, we can't take that back. We can't make prices come down now. So now we're just trying to kind of help support the economy so people get more money and can afford this more. But the home price thing goes into that as well. I mean, it's tough. And so if you hike because, people have been through this cost of living shock, the economy could do worse, labor market could do worse. And if you ease and the inflation problem you're talking about is worse, even at the margin, people are going to be furious. I mean, it's a really tough situation.
It is a tough time for monetary policy indeed. That's why I value the independence that we have in setting policy. I think it allows us to focus on the data, the stories that we hear when I'm out through the district, whether it's Columbus or recent roundtable we did in Akron. I'm hearing from individuals and businesses about these struggles, both on the inflation side and about their availability of finding labor. And so what's really important to me and is important to all my colleagues is that when we walk into that monetary policy room, all I'm focused on is the data and those stories and making sure we can steer the economy as best we can for the American public.
And then you have this small issue, which we've talked about 10 minutes and haven't even discussed, which is AI coming through, boosting productivity, raising the run rate of the economy. Is it time now, President Hammack? There are people who believe now is the time to begin to incorporate the coming and the existing increase in productivity into monetary policy right now, which could allow you to lower rates and not fear inflation.
There are a lot of impacts that AI and the AI boom that we've seen could have on the economy. Some of them can be impacts on growth, positive impacts on growth because of all the building of data centers. That could also be inflationary. But it could also mean that we're getting new labor-saving tools, which could help on the productivity side, as you mentioned. It's not clear to me how the balance of this is going to weigh out, and I think right now it's too soon to say what it's going to mean. When I'm talking to companies in the district, almost all of them will tell me they think they're behind the curve on AI. I hear from very small companies, like think less than 5 people companies. I hear from very large companies, more than 5,000 employees. Those are the companies I see that have really adopted AI in large stead. They're using it. They're finding new ways to get some of that labor-saving technique. But the middle group of companies, those sort of small and medium-sized enterprises, they're experimenting, they're looking at it, but they're not using it heavily. And so to me, it's still a little too early to draw a conclusion about how this is going to impact the economy overall.
Shifting gears, there was a story in the Wall Street Journal, which we at CNBC have now confirmed, that 2 officials from the U.S. Attorney General's office visited the Fed construction website and were turned away, and a letter was written to from the Fed's outside counsel to Jeanine Pirro's office saying you're not allowed to be here because the judge quashed the quashed the subpoena, and the president saying that if Powell doesn't leave, he'll be fired. All of which I'm sure you want to comment on in detail. So the question I'll ask you, President Hammack, is how much concern do you have for Federal Reserve independence?
Federal Reserve independence is really important so that I and my colleagues can continue to deliver for the American people. I think you've seen a number of these threats to compromise Fed independence over the recent past. It makes me just focus more on being able to do my job. We're independent on the policy area, but we're accountable to Congress. Congress is who has set our dual mandate of maximum employment and price stability, and it's important that we're able to follow their instructions and be able to deliver against both those goals for the public.
Okay, and just lastly, it would be a literal crime for me not to ask you about the balance sheet, since you at Goldman as treasurer saw Goldman Sachs through the 2019 disruption of the balance sheet. And there's a lot of talk about through deregulatory means bringing down the balance sheet, but also just bringing it down. How much concern do you have that bringing down the balance sheet could create another sort of event like we had in 2019? Or are you on board with reducing the Fed's $6.7 trillion balance sheet?
One of the things that I love about being on the committee is that we have very robust, rigorous discussions around these important topics like the balance sheet. So I'm looking forward to engaging with colleagues and talking to them about their views on what the size of the balance sheet should be. To me, the balance sheet is really a tool for us to make sure that we're maintaining effective rate control and that we're keeping interest rates within the band that we want. On the other hand, we can only take the balance sheet down so much if banks continue to demand reserves, right? So our balance sheet is like any other balance sheet. There's an asset side and a liability side. People spend a lot of time thinking about the asset side, thinking about the securities that we hold, but we hold those securities because of the liabilities, which are bank reserves, currency in circulation, the FEMA repo account, and the Treasury general account. Those are kind of the big numbers. If you want to take down the size of our balance sheet, you need banks to demand fewer reserves. You need Treasury to have a smaller operating balance that they keep with us. Those are the things that would enable us to be able to reduce the balance sheet over time. There are pros and cons. Most of the things that I experience in life are really just trade-offs. And so it's about balancing the financial stability benefits with some of the reputational benefits of having a smaller balance sheet.
I think I have to ask, because I haven't heard your opinion on this, and you can settle a long-running dispute that we have. Listening to that 5 years of inflation, a whole decade in 5 years, begs the question, what caused that, once again? And lately we have seen a narrative that it was totally out of our control, and it was COVID, and it was supply chain issues that caused that, which begs the question to me, why would the Fed have been able to stop that? And why does the Fed now acknowledge that they were late to the party? If it was purely supply, all they can do is really affect demand. So why would they be copping to being late and letting inflation get out of control if it was inevitable anyway, just because of the supply chain, and it wasn't the Fed's fault or the Biden administration's fault for overspending or anything else? How did it happen? How did we manage to get that much inflation in 5 years?
So, Joe, I'm not in the blame game. That's not the job that I'm in as a monetary policymaker.
Could you just be for a second here what Steve was saying?
I really can't be. As my good friend and colleague Austin Goolsbee says,
say somebody else said it?
There's no bad weather, there's only bad here. We say that in Ohio just like they say it in Chicago. And so to me, it's really about making sure we can steer the ship, given the terms that were dealt with, given the environment, the economy.
Why would the Fed cop to it if it was out of their control?
We're doing the best that we can to make sure we're balancing the two sides of our mandate.
I know.
I think you all have acknowledged this is a difficult time for monetary policy. If we're being challenged on both sides, if there's this potential for weakening on the employment side, and there's this above target inflation that's been persistent for 5 years, that's really the most difficult time for policymakers.
Right. Have you got an answer for that?
I do.
If the Fed admits it was a demand problem, then why blame it on COVID? And
the story.
You got to say goodbye.
We have to say goodbye to Beth Hammack.
Thank
you for joining us, President
He's
Hammack.
only too willing to defend the Biden administration.
No, that's got nothing to do with it, Joe. That is patently untrue.
Okay.
And the story is that, in fact, it's a much more interesting story than the political one you're trying to spin. And the story is that the Fed was fighting the last war. And that's really what happened, Joe. And if you had any actual interest in the truth,
how could they have controlled it if it was
they had
only supply?
if they had pivoted earlier
to hurt demand. But you said it was only
if
supply.
They had, I didn't say it was only supply. I didn't say anything like that.
All right, coming up. get to our next guest in Washington, Montana Senator Steve Daines. Senator, it's good to have you on this morning.
Good to be with you, Joe.
What have you heard lately about the potential for renewed talks over the next couple of days? And do you know any more than we know about how promising that looks to get some type of permanent ceasefire?
Well, as you see, President Trump's leadership, he wants to bring an end to this war. Remember, this is a 47-year war begun by the Ayatollahs when they took power in Iran. President Trump wants to bring this war to an end, a 47-year war. Remember, we're just about 6 weeks into concluding this when President Trump took action to stop the nuclear capabilities and the ballistic missiles there in Iran. So I'm cautiously optimistic. You're seeing that reflected right now. And it's remarkable, Joe, to see what's happening with the S&P is approaching perhaps record levels today. You see WTI and oil is down now in the low 90s again. There's volatility certainly in the energy markets. But I tell you, this is a short-term price we're going to pay for some tremendous long-term benefits for our kids and our grandkids.
Good. I mean, there was a run on pearls, Senator, back for the tariff during that time. And oh my God, the amount of pearl clutching over the last couple of weeks is similar in terms of what it's going to do to the economy. And as you point out, S&P new highs, NASDAQ close, transportation average new highs. The bond market has been pretty well behaved too. I know you follow all those things. If inflation is roaring back, where is that in the bond market?
Yeah, well, we'll see what happens. I think key to that is going to be get these oil prices back down. But you look at the longer-term trends, what's happened in oil pricing. We were at 5-year lows on gas prices. Of course, we had a spike with what happened with the conflict there in Iran. But I am absolutely convinced you're going to see a restabilizing of those oil prices and gas prices coming back down. But this is a short-term price that we're paying that's going to yield tremendous dividends. I mean, many of us remember what Iran was like, pre-1979. Remember what happened in the War of Yom Kippur when we had in 1973 disruptions in the oil markets. Oil prices quadrupled during that time. And because of President Trump's leadership, because we're getting behind more made-in-America energy, it's amazing how resilient, frankly, the energy markets are at this kind of moment when you have the Strait of Hormuz literally blockaded at the moment, but under control of U.S. forces.
You're in Senate leadership, and you're with Senator Thune and others. How will in shifting gears, how does the DHS finally end? Are the votes there for a reconciliation to do it that way? Or do you expect the House to eventually pass that bipartisan Senate bill?
Yeah, well, I'll tell you what's an unfortunate moment, Joe, to think that we can't get Democrat cooperation to get funding for the Department of Homeland Security. Thank God President Trump intervened through executive action and funded TSA at a moment when our TSA agents are about ready to walk off the job because they're not being paid, to make sure we kept the airways clear and flying. But I'm cautiously optimistic we'll find a way through this. But sadly, it's going to be purely through partisan means versus bipartisan means. We've got to get back to regular order on appropriations, Democrats and Republicans working together to get appropriation bills passed. For them to absolutely take a hostage, not funding DHS at a time when we're under tremendous threat levels with what's going on in Iran is inexcusable. They're having their, I'll call it their political hissy fit at the moment because their radical base wants to keep borders wide open and defund law enforcement. That's why we now as Republicans have to go alone to fund the Department of Homeland Security.
If you look at what's possible in November, and you're in Senate leadership, you've done a lot to elect senators in various states in the past. The message you're giving seems to be falling flat or not getting out or something. There's a real concern now, obviously, about the House in November, but seeping into that now and in the betting markets and such, into the Senate as well. Why do you think that is, and what can change between now and November for Republicans, in your view?
Joe, we've got to do a better job of reminding the American people where we were just a year and a half ago under Joe Biden's leadership. Wide open southern border, flood of drugs and illegals coming across into America, violent criminals coming into our country. President Trump has sealed the southern border. We're seeing fentanyl seizures now dramatically dropping because of the result of this president and Republican leadership. Let's not forget today is tax day. On the affordability question, one way to address affordability is putting more dollars in the pockets of the American people for hardworking Americans. 90% of senior citizens are not going to be paying tax on their Social Security benefits because of what we did under President Trump's leadership in signing the law with the Working Family Tax Cut bill. We're seeing relief now. Tens of millions of Americans who work on tips and on overtime are seeing tax relief, refunds up 13% from where they were a year ago.
We only have a couple seconds. I just want to jump in and kind of paraphrase possibly future Speaker Jeffries. I mean, the numbers don't look great for Republicans in the fall. Gas prices being where they are, affordability being what it is, and you yourself, you're retiring. You know, it's going to be tough.
Well, look, anytime you have the 6-year itch in elections, that's the second midterm for a president, it's always headwinds coming into that election cycle. But I tell you, when you step back and remind the American people where we were just 18 months ago in terms of the chaos on the southern border, when the American people start seeing the benefits of the working family tax cut, it's a very dynamic situation. They're just now receiving their refunds. Only about 45% of the tax returns have been processed. And when you think about what happened here for our businesses, having the 100% expensing of capital investment, of research and development, of interest, and making that permanent to provide certainty for our businesses across America, that really is jet fuel for this economy. That's going to take a little bit more time to kick into gear. But I tell you, I think the tax relief is going to be very much in the short term and help the American people on affordability.
Well, we'll hope to see you again, Senator. We understand, going back to Montana, that instead of Washington, we certainly can understand that. But thank you for your time. We appreciate it, Senator.
I don't know if we can do triple boxes, say goodbye here. I just want to mention before we go as well, Bank of America beating on both the top and bottom lines. They've only missed on EPS once in the last, 15 years. CEO Brian Moynihan will be joining Squawk on the Street, which begins, and goodbye from us after a break.
Good Wednesday morning. Welcome to Squawk on the Street. I'm David Faber with Jim Cramer. We're here at Post 9 of the New York Stock Exchange. Carl's on assignment this morning. Let's give you a look at energy prices, and then we'll take a look at futures. You can see not much going on there in terms of oil. And the markets, after, of course, what has been a very significant rally the last couple of days, I don't know, what do you want to call that?
Parabolic?
No, I mean this, for an open, not much.
Yeah, well, we're in consolidation mode, which is what happens if you have this kind of run for the S&P.
All right, let me get to our roadmap. Then you can talk some more. Our roadmap does start with tech stocks. They have continued, as we were just kind of referencing, that rally in April. The NASDAQ, by the way, it's the best winning streak it has seen since 2021 in terms of consecutive updates. That happened fast. Plus, we're going to dig through the latest batch of bank earnings. We got Bank of America and Morgan Stanley both out with results this morning. And don't miss our first on CNBC interview with Bank of America's CEO, Brian Moynihan. That'll be in the next hour.
Are you leading that?
No, Leslie Picker will be leading.
Oh, she's doing a great job.
Yes.
Just because I talked to Brian this morning, I have to tell you, David, I want to start with something that...
Will you let me finish here? Do you ever look at the screen? The U.S. military turning back 6 ships in the first 24 hours of its naval blockade as the president says the war is close to over. He's been doing TV for over 20 years. He still doesn't look at the clock. He doesn't look at the television.
The president? You! Oh, me. The president does a lot of TV.
All right. Now we can get to the markets, and you can start talking.
Brian starts the conversation. Brian Moynihan is, an old hand, and I've known him a very long time. He does start the conversation. How can we have a 13 multiple? Now, we don't talk much about the price earnings multiple, but the fact is, David, if someone ever were to say, you know what, this market's expensive, can I just say the Exhibit A are these bank stocks that trade at multiples that are so beneath what they should? They are juggernauts.
They are, and we're going to get to them and go into detail on them. Do you want to do that now? Would you prefer that? Because I'm happy to.
I'm really going on. I want to save Leslie, but my issue here is the idea of expensive versus cheap.
Okay.
When candidly, when Meta and when Amazon and when Nvidia 10 days ago traded at below market multiples, I was waiting for you to say something because you had pointed out that Meta is one of the cheapest stocks in the market.
And has been and continues to be to a certain extent. Right. Obviously, a new partnership again this morning with Broadcom we'll get to. And then there's your favorite, NVIDIA, of course, that you've been getting very emotional about. Meanwhile,
not anymore. Now it's a leader.
Of a 10-day streak, it's up 18%.
Has it had a down day?
That is helping the NASDAQ aim for what would be 11th straight day of gains, as we referenced earlier. And the NDX leading the charge since the start of April.
It's one for the record books. And I know that we're going to talk about some Financial Times article about worries with the banks. My worry with the banks is
Wait, you keep moving all over the place.
Well, David,
I got to keep you focused. No, of course not.
I'm high functioning.
Let's talk a bit more about NVIDIA and the NASDAQ and technology. Right. Then we will get to the banks. All right?
Okay.
Thank you.
Well, first I want to talk about, because we got to go right there. There are green shoots like I've never seen.
Okay, tell me.
Nobody likes to lose, but I saw some green shoots tonight. On offense, Lindor had 2 hits, including a home run. Bichette got a double hitting.
That's not funny.
You know where this is from?
That's not funny.
This is Steve Cohen tweeting after the Mets get the 7 losses.
I'm aware. Really?
He says, we have seen green shoots. I happen to love the man, but this is the funniest thing I've seen on Twitter this year.
There are some green shoots.
There's some green shoots.
I don't know if you can refer for the Mets who've lost 7 straight. All right, where do you see them in the market, since most of our viewers are probably not Mets fans? Good for them.
No, what I see happening is that the market got very emotional. I said this last night, so I can say it here. There are a lot of people who really despise our president. A lot of people love our president. I have never seen the leap between the criticism of the president to your portfolio like this. So when I went out and when we were at before the 10-day streak, people would say to me, I hate the guy, I'm selling all my stocks. And I would say, that's emotional, that's not the way you were supposed to own stocks. You own them for long term. But I kept hearing this, and I think we got a lot of people who think that the president screwed up in Iran and decided, you know what, I'm selling. And that's what we're dealing with. And that's why we were able to come. What are you doing? Not even listening.
Of course I'm listening.
All right. And that's how we can have such a strong snapback. That's what do you think of that thesis?
I think that might be part of it. I mean, we did actually have a war, and there is a great deal of uncertainty still in the market in terms of what the impact of that is going to be, or in fact, whether it's going to resume. I mean, there was a somewhat worrisome article today in the Wall Street Journal, I'm sure you've read, about the new regime in Iran being worse than the old regime, which certainly raises the prospect of, well, what are we going to need to do if there is more to be done? And we're still focused on the Strait of Hormuz.
And what happens
we're still
if they
focused
do
on how
rob
many
a
ships are able to
missile
get
at our
through.
ships?
So, Jim, it's not as though that has gone away, and you can't blame market participants from perhaps pulling in risk when the hostilities began, because a lot of the fears seemed to be realized as the price of oil went up so dramatically. That said, investors seem to have suddenly said, you know what, we're not worried about that anymore in the last few days. Now, I don't know exactly why that is. Maybe because of the belief that there will be a negotiated settlement between the two countries that results in peace.
Well, I always feel, look, I'm not a military strategist, but I do always feel that there's a sense by another group of people, don't worry about it. He's going to declare a win and move on. And that's another skein of thought, which I find to be meaning that you're not out of it yet. Right. So you're right. I mean, I think there are a lot of people who say, you know, hey, that happened, and look what the market did, and yet it may not have happened yet.
All right, but meanwhile, we come into today, as we said, with NVIDIA up, 18% over the last 10 days. Amazon on its best run. The Global Star deal yesterday, we spent some time on. We'll continue to come back to that, because it was far more important, perhaps, than just the $11 billion price tag of a deal that Amazon did in terms of their strategy for putting satellites out there and competing over time with SpaceX, soon to be public, potentially SpaceX, I would point out.
Is this Verizon and AT&T of 2030?
It could be.
It could be, right?
Yeah. And then you got Bezos with Blue Origin, obviously a separate company from Amazon, who's also talking about data centers in space. You got Meta, we already mentioned that, committing to the 1 gigawatt of custom chips with Broadcom. They continue to work together. Hock Tan does leave the board of Meta.
Wasn't that an interesting
You got Oracle that's been on a run. Intel did move back yesterday, but of course we've discussed that so many times.
Right.
It's an interesting setup, Jim. And again, and then, you know, I've got to talk Anthropic and OpenAI. The latest stuff, I don't know if you've been following social media. I'm on X a lot. You know, I follow a lot of people in AI, and there have been a lot of complaints lately that Anthropic sort of seems to be throttling things. I had a conversation. Well, actually, that was with Chat, which just got slower and slower. With Chat recently, where it was a longer conversation.
Right.
And over the time, it got slower and slower. There is this question about how much compute they all have, how much more they need, how much they're throttling. Reports now that Anthropic is, charging more as a result once you go past a certain limit of just used compute because they have to.
Well, did you, when you were on X, did you see that Uber committed more than $10 billion to autonomous vehicles? But immediately, the person who handles the budget says, because the budget I thought I would need is blown away. In other words, they already spent all their AI budget, and here we are.
That's what you're seeing. It's been an interesting little debate, and again, I'd love to get into it a bit more with people who are deeper in it, which is our enterprise is actually spending a lot of money now on compute with Anthropic or with OpenAI, or Anthropic in particular, because they're running Claude Code, for example. And all right, now we're spending $100,000. We could have hired another employee. Is that now? Of course, the response would be, oh no, but it's taking the place of 100 employees.
But it is kind of a horse race. We were talking this morning in the office. Maybe it's time to switch to OpenAI as a potential. I mean, because Anthropic now they're saying it's worth, you saw that 800. And yet Anthropic, you're absolutely right. There's a backlash. My friend Bill Ford yesterday from General Atlantic just said, look, Anthropic is enterprise, what you want is enterprise. But when I had the fabulous Sarah Fryer, CFO on from OpenAI, she said, Jim, you got to look at the trajectory. And the trajectory is saying, you count out OpenAI right here at your own peril.
Yes, OpenAI is saying they're at 40% going, quickly going to go to as much as half of their revenues essentially being derived from the enterprise as opposed to just the consumer.
But I went to the terrific dinner honoring Richard Dixon, who's the CEO of Cap. It was an FIT dinner. Okay. So I ask everybody, what are you using? David, fashion and cloth. I mean, they're like, I mean, it's like one and the same.
Well,
How
all
is
of it
this
just
possible?
all of it gets back to NVIDIA. You like that? All roads lead back. Because I mean,
But no
more and
one
more
says
compute.
it.
Well, Meta is developing its own chip. We know. I mean, everybody's
Well,
developing
good
their own
luck.
chip.
They have to still
By the way,
By
as
the way,
is
CPU, we're so short CPUs that you can go buy. Well, Intel is going to report, but go buy AMD off it.
Maybe you do. As is, by the way, Elon Musk also on his platform X, of course, talking about thanking Taiwan Semi and Samsung for their support in bringing his chip, there it is, to production. He says it will be one of the most produced AI chips ever.
Right. Well, he is periodically.
This is for, by the way, this
mentioned-
is for full self-driving. That's the focus for that chip.
But he periodically mentions that he still loves NVIDIA. Everyone kind of puts
Yeah.
it in. They all throw it in. You know.
All right, let's get to the banks now, because I know you had a lot to say.
Yeah. Okay. So.
By the way, Morgan Stanley, Bank of America, both topped estimates. And if you haven't seen our promos, we'll tell you one more time. Brian Moynihan will join us next hour to talk about the quarter at Bank of America. What are your thoughts?
Well, we've got some numbers now that I think are really a way to be able to compare the banks, and it's very interesting. I don't know if we've got the chart of everything that I know, David, you like to look at in terms of return on common equity.
Yes.
But one of the things that you should be looking at, it's not the actual ROTC, return on tangible common. It's the rate of change. And so you see Bank of America, Bank of America was terrific quarter, 14.2 goes to 16.0. But the one, and you've got JP Morgan 20 to 23, Wells Fargo very disappointing, 14.6 goes to 14.5. Goldman 16 to 21.3, Morgan Stanley unbelievable at the highest, 21.6 goes to 27.1. But you have to say to yourself, why does everyone love Citi? And the answer is it went from 7.7 to 13.1.
So the highest rate of change was Citi.
Yes, and now it's back to, I know you'll find this incredible. It's a book. Remember we used to say maybe books phony?
Yes, what you used to say.
I did,
Yes.
but congratulations to Jane Fraser. This is really amazing. And David,
but to your-
13.1, it has a lot more to go. And boy, their conference call,
Yep.
thing of joy.
You've been high on Citi, and by the way, rightly so. Look at that stock for the last year, up 100%. I mean, the analyst reception to both the reports from this morning quite positive. Looking at things, impressive
fabulous.
trading strength. As well, significantly at Morgan Stanley, for example, an $870 million beat, at least according to the analysts or some of the analysts who had a number out there. Equities of $407 million. FIC was the big outlier, much better than Goldman Sachs.
Much better.
Fixed income, currency, and commodities
Oh, God, I hate
up
FIC.
462 million, whereas Goldman was not, and that's what may have hindered that stock.
Although you see it's all the way back.
It's all the way back.
Let's remember
But
that.
after the company did report numbers on first out of the gate on Monday, wealth management also very strong at Morgan Stanley. Fee-based growth of 7.8%, and on from there.
The winner of price to tangible book, which I don't mind. Someone could say that's expensive. It's not a winner, but is Morgan Stanley at 3.55. Ted Pick. Do we ever even talk about him? That's nuts. He's done a phenomenal job. Quietly done a great job. Ever met Ted?
I don't really know Ted very well. No.
I would put him in the tough category.
Would you?
Tough.
Yeah. Tough.
Tough.
Yeah. Okay.
Which
Tougher than who is that guy? Frank
the guy from North
Slootman?
Carolina?
No, Frank Slootman.
No one's tougher than Frank Slootman.
Okay.
No one.
Yeah.
Remember, Frank lived in his office for the last month of a quarter on a cot and wanted to know why I didn't.
Yeah.
And thought that maybe I was a sissy.
Just trying to think of other tough guys that we've dealt with through the years.
The fellow who had the grenades on his desk for North Carolina.
Yeah.
Nations Bank. I'll have to think of it.
What was his
NCMB? Yeah, he always
Yeah.
scared me. When you have a live grenade on your desk, I think that says something.
Finally, before we wrap up this quick block here and head to a break, I did want to hit cyber because it's been something on my mind because so many people want to talk to me about it.
Yes.
The risk, of course, brought up by that Mythos preview and others.
And the
and whether it will end up being an unmitigated disaster at some point because open source will get there in 6 months. A lot of different questions. Scott Besson, who's with our own Sarah Eisen in Washington, D.C. today, was asked about that meeting last week that Chair Powell from the Federal Reserve and Treasury Secretary Besson brought a number of the banks to talk about the risks around cyber. Here's what he had to say.
The power of these large language models, you were just jumping from into the 10th power, into the 12th power very, very quickly. This new Anthropic model is very powerful, and we want to, some banks are doing a better job in cybersecurity than others, and we want to have the ability to convene them and talk about what is best practices and where they should be heading.
Do you feel confident that the system is safe?
I feel confident that everyone is now on board rowing in the same direction to build up resiliency for cyber. And look, it's been something that since day one when I got to Treasury, we've been emphasizing. And the banks are well aware of it, some at different degrees than others. Some have legacy systems, some are more updated, like with any industry.
It's certainly a concern, Jim, but also there are those who believe it will actually bring a capital cycle because you'll have to buy a lot of new equipment and things of that nature.
Well, I know that when I spoke to him, went in about it, he's very savvy about technology. He's just grateful that Anthropic actually put it out so that they can spend some time rather than just release it, because he sees all the possibilities and dangers.
Yes.
I did not mention, during the 2007, 2009, I put my money in many different banks. I did not want to be levered to one bank.
No, I remember that.
Can
I
you
remember
imagine
that.
if you feel like
No, listen, this is a existential risk, as are any number of things related to AI. OpenAI, by the way, also releasing what they're calling a cyber model that has great power to a limited group, sort of in this continued race.
Anything you can do, OpenAI can do better.
Yeah, exactly. All right, still to come right here. Nike regains.
Why are we taking a break? We haven't discussed.
We have
Aqua and the
advertisers. They pay for your incredibly high salary and my minimal one. Nike regaining some of the year's losses. What CEO Elliott Hill and board member Tim Cook have to do with it.
Give me a pair of Nikes, babe.
I'd love another pair of Nikes. They were great, the ones I have.
New Balances. I turned my eBay.
I'm putting out a plea. Yeah, send me more. Take a look at futures. Look like we're gonna have a slightly higher open. More squawk on the street straight ahead. right, so that is how we are set up for an opening bell that's about 9 minutes away. What Jim and I like to call hump day.
Yeah, but did you tell them this is what's known as a cluster, which means I'm not allowed to say anything at least of any substance?
That is correct. That is correct. Nothing of substance. Save it for the mad dash, which is coming up right after this break. All right, 6 minutes until we get an opening bell here at the New York Stock Exchange. Let's get to a mad dash. Viking Holdings is here. They also were on the show last night, correct?
I usually don't do this. I talk about the bell ringer, but I do have to point out that Viking Holdings, they don't like kids and they don't like casinos. And that has brought to them a terrific clientele. The stock is up 14%. Royal Caribbean's up less than 1%. Norwegian Cruise is down. Carnival's down. And I think it's worth it to point out that this company is one of the great performers of our time. It's only been public for 2 years. It's made.
I remember when they went public.
And I think a lot of it has to do with the fact that there are many people, and this is what Tor Hagen told me, many people just say, you know what, I've tried the other guys, it's too noisy, it's too casino, too many screaming children, I'm going to Viking.
There you go, 2 years, 214%.
So I just point out, sometimes if you look at stocks and you like a group's Viking, maybe buy the stock. Turn out to be a great one. And
Okay.
that's what I have to say.
The old Peter Lynch model,
That's
right?
why I brought it up.
Yeah.
It's the Peter Lynch model. I saw it, I observed it, I studied it, and I bought it.
All right. We got an opening bell 5 minutes from now. A lot of stocks to watch this morning.
Is this a very busy hour? You want to say that?
A lot of stocks to
Yes,
watch
very
this
busy
morning.
hour.
That's another cliche that I can't.
Boy, all of a sudden, you know, I get the first things first. My name's Washboardjim. I'm the founder of the Sneaky Snake Trading Strategy, where I talk about chart patterns moving averages, and being in the now. So my feeling this morning, oh, we missed it. We missed the run. Now they're calling the bottom. A little too late for that, my man. Then the fear. You know, I'm listening to the liberals on Squawk Box, shoving out the fear. And that annoys me. And they talk about all this stuff that I don't really care about as a trader. Multiples, and they were wrong about the AI spending. They said it was over with. It's not over with. They went on for 3 months about that shit so they could bring the market down and then buy the dip. Just like clockwork. And you've got to play the devil's advocate with these losers. We got a pretty solid support right here at quad. If you can count to 4, you can make a little bit more. Boom. So that's going to be our, we could stop here. Well, here, let's put a channel in here. Jimmy. Come on. Now what? Jimmy. $134.85 will be our first support. Take your time. When these people start to get excited, you need to get unexcited. The opportunity was already there when they were down and out. That was the best time to buy. Now they're all excited. There we go, right there. Just like that. My name's Washboardjim. I'm the founder of the Sneaky Snake Trading Strategy. I should have been prepared. There it is right there. Oh, God, what a candle. Anybody jump on that, baby? Don't rush yourself. Well, where are you tonight? Why did you leave me here all alone? I searched the world over and thought I found true love. You met another and you were gone. Today's the 15th. It's the last day of tax day, and we're looking at the 696s or the 695s if it dips. 695 or 696? Do you understand me? 97 cents for the 696s. How does he do it? Come on, baby. Go, that's PLTR. Shit. I caught it. I took it. I'm out. That's ridiculous. After I made my mistake, I'm out. got the first day of the day. Look at it go. Strike 696 at all out at 0.97, all out 1.10 and 1.19. Okay, I don't fuck around. My name's Washboardjim. Peppolini looks hot today. That's much better look. Whoa! I'm ready to trade. Diane King's looking a lot hotter here lately too. Well, Mama, I'm excited. I'm almost out of breath. Well, that's a good way to start the day off. Now, anybody ever been late to a party? And all the beer's gone? Randy, you ever been late to a party and all the beer's gone? Refrain from politics, our new rule. Yes, all the acid was already eaten. That's another one. And all the mushrooms have been ate. We had acid. We had to stay outside and watch the trees. I didn't do much. I did some. I was a mushroom guy. Then I have epilepsy, so it was hard for me to do drugs, except weed. Okay, well, we got a new high. 700's our target. I'm not in nothing right yet. Another breakout. So we got to wait for a pullback. Now, if you're new to trading, yesterday I called out 2 snakes. I was asked, how do you find these snakes? I said, simple. And I walked right through the whole trade. And we had a real big run. $15 a contract from 285. It's stupid me, it was a paper trade, so I had to jump in later. That would have been $5,000. More. 75. $5,000. 7,200. So let's go to the watch list. We got Nike. We got people buying in shares. Insider buying on Nike. Remember all the upgrades like MU, Supermicron. The SPY just keeps going. Dadgum, man. I don't even want to look. I won't look. No. 137. 137. IWM straight up. QQQ, SPY, and SPX. Use the VWAP on the SPY for support. So set an alert or keep an eye on the VWAP for support on the SPY. Do you understand? So now they're coming out calling bulls. See, I beat the institutional traders by 3 weeks. When Jimmy calls a bottom, you've got to pay attention. All the negativity. I mean, this is a lesson you got to learn. Now they're bullish. Good morning, learning to trade from the master. And good morning, Washboardjim. Good morning, YouTubers. Hit that like button, subscribe, and ring that bell for future updates. I'm putting out trading videos that can teach you to learn how to trade. For example, the SPY. We got a head and shoulders off the 200. Boom! On the 1 minute time frame. And I'm expecting this to pull back and hit the VWAP. But I ain't going to buy a put. I'm not that brave yet. I'm going to go make my coffee. I got to buy a new phone case. It's raining in Missouri, so if I hear thunder, I might shut it down. Probably got a good inch last night or more. As long as we hold the 9 on the 1 minute, we're still bullish. Now on the 5 minute, learn to trade with it. We got 3 white soldiers. So I'd be out of that trade on the 5 minute. Do you understand? Someone say yes. I have a problem right here. I got to fix it. La 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 la. Boop. See. Applied. 3 white soldiers on 5 minutes. Oh. Do you see what I see? It's an extension pattern to move higher. Do you see what I see? You exit the trade when you see 3 white soldiers and buy the dip off the body of the 3rd candle. Gives the VWAP. Get ready. Prepare. Randy! Randy. We are the 696s at $1.12 right now. Hold on. Okay, right now. What now? Right now. Now, if this thing wants to stay bullish, what are the headlines? Ceasefire will be established in Lebanon. That's good news. So Jimmy's in at 110. 110. SPY calls at 110. You weren't supposed to do that. I'm getting a chemical reaction here. .94. Ah, shit. Right when I got it. Okay. We're at the 200 with a tweezer bottom. That's on the 5 minute. I need to be looking at the 1 minute. That's a mistake. Okay. Three white, yeah, I'm fine. Three black crows. Damn. Come on. It's depreciating a lot. We're hitting a wall right here. If you bought the dip off the 200. Come on. Now we're at the VWAP, so you got to make a business decision. Had an engulfing candle, three white soldiers after three black crows. Percolate, 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 perk. Microsoft Strong, trying Tesla calls. They don't want to hear politics in the room. 3 black crows with 3 white soldiers. Snake breakout, pullback. Looks to me like to support. So we're going to find out if we're going to have the boom or not. Now we've had a pretty good run already. We've had a 10% run from the bottom. So that's what we're at a support here. If this holds, we're going to go ahead and double top. But it didn't take long to gain up 1% in the market for 10 days, every day, on average. Average is 102. I could have sold them for a little bit, $100. No, not $40. Uh-oh. Now we're retesting the 200, so this is going to be it right here. We want it to hold. .77. So we got 3 black crows with 3 white soldiers to the 21, back down to the 200. Snake breakout, pullback. We got if we can break this wall, I can probably take this maybe to the 3rd soldier, maybe the 2nd. If you don't feel comfortable, but I'm not too worried right yet. Nancy, would you put a volume in that coffee for me, baby? I'll donate to your campaign through fund. Through private disclosure. Got a double top on the QQQ. Pepperoni looks hot today. There she is. No, it doesn't. You're at 86 cents, Jim. Have you ever thought about selling? No. Because we broke. They're just not gaining much today.
Oh.
I get a Head and Shoulders on the IWM. There we go. Finally, come on. Now I'm green. Go, baby, go. Give me 105. There's 95. Jim, you're up $120. Have you ever thought about selling? No. Not until I hit my goal. Jim, come on, sell it. I could sell it. Fake sale. Come on, just one more little candle. Do it. There you go. Come on. Okay. Do what you got to do. Right now I'm up $200. Come on. Do what you gotta do, do it. You can get out at $1. It'd be nice to get another 5 cents. You know what I'm talking about, baby? I'll buy you a diamond ring. Today I'm going to play a song by a band named Foghat. I might do it right after this trade. 104. Take your profit. That's how you do it. How does he do it? He does it. You didn't see any politics? Though I'm not talking to you. I'm just telling people. We're getting a little too, we have so many different opinions, I just don't want to put more wood in the fire. I even give it my thumbs up. That's good news. I mean, that news you can put in, but opinion. Now we're pulling back. To support. I think this is a continuation. So the options, same ones at 86 cents. Don't push your luck, Jimmy. This will be 3 times the charm. This is how you do it. Pulled back to the 63. Now. I'm gonna go get my coffee made. I had some bean dip. I haven't had bean dip in years. One more. Jim's in at 86 cents. We're at 95. Now I got $860 in this trade. I could have easily got 10%. So you do 10% a day. That's 50%. And I've already done 4. If you add it up. Okay. I'm gonna get some more of that. So we pulled back and hit the 63. 3 black crows, breakout, pull back, called at the bottom at the 200, boom, exit idea. Pull back to the 63, and I want to do a double top. That's my goal. I can get out of here with $90. I could have. I saw this band live too. I'll play it in a little bit. 89 cents. Come on, baby. Don't give up on me.
I buy you a Chevrolet. I buy you a Chevrolet. You could just give me some of your love. She said, I don't want your Chevrolet.
I don't want your Chevrolet.
I don't want nothing in the world you got. No, you can't do nothing for me. You can't do nothing for me. I buy you a diamond ring. I buy you a diamond ring. I buy you a diamond ring. Just give me some of your love.
Yeah. Fog hat. I had the 8-track. It's called Stone Blue. One of their best albums. I'm gonna buy you a Chevrolet. I'm gonna buy you a diamond ring. I'm gonna buy you a fur coat. I'm gonna buy you a clean pair of underwear. Let's go to the upside. Just want some of your love. Okay, you're not playing fairly here. I see a triple bottom maybe. Fists don't hold. Just for that, I gotta stick my finger in some dip. I'm down $50. 40. 30. Keep licking the dip with my finger and it goes up. I'm even. I'm gonna take 2 fingers now in the dip. Yeah, another penny. Oh, look at that. Now that's the way you do it. Boom, 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 right there. Somewhere in there. I'm gonna buy you a diamond ring. So we got a higher low right here to this candle here, this body and this body. I'm getting ready to squeeze. We're going to find out any moment. Could take 3 minutes, maybe 4. Watch that tape. April housing market index data released. Actual 34, estimate 37, prior 38.
The fact that prices, even though they are coming down in some respects in certain markets, might be pushing off consumers on buying houses, and input costs over the next couple of months and quarters will go up, especially when you're looking at lumber as well as copper and other materials like concrete that could also dampen demand and really put a little bit more of pessimistic outlook for all these home builders.
Go.
This kind of also coincides with the earnings that we've already seen from some of these home builders. If you're looking at like a DR Horton or a KB
94.
Homes, their commentary as far as their guidance moving forward has been a little bit bleak because of the current macroeconomic environment.
Okay. Thank you, Mr. Green.
Good stuff. Good to
She said
get an
okay,
update
too.
on the housing market there, KG. Really appreciate it. Thanks so
She
much for
wasn't paying
breaking down some of
attention.
those movers in the market for us this morning and some of the developments we're tracking. Coming up, we will check in on the latest information from the Asprey 6 model, the latest EKG chart. Morning
Dow
trend line
Jones
is back
down
after this.
133 points. NASDAQ 54. We're at 96. I'm up 120 bucks. Give me more. If you can count to 3, baby, you can trade with me. Oh yeah. Take profit if you want. You got a head and shoulders. But I want to take it up. Not saying they'd come in there and put a big old fat knife on you. Jim, you're up $110. Have you ever thought about selling? No.
I'm Nicole Pedalides at the New York Stock Exchange.
Damn, you're
Live
hot.
interviews, market movers, and real-time coverage right from the floor. Subscribe now at schwabnetwork.com.
You're so cool. Now, basically, you can take it, your profit. It don't seem like there's much incentive here today. Here, come on, one more big boost. There you go. Oh, baby steps. I am not going to be teased today. $1.01. I mean, that's enough. That's 150, double top. Do what you got to do. Because if you do it, you'll be a winner like Bobo. Out at $1. That's probably a stupid mistake. So I made $140 on that weight. Anybody take the trade with Bobo? You make bean dip once a day? Ooh, my. Jimmy loves bean dip. There it goes, 102, 104. You frickin' idiot. I just left $40 on the table. Okay, just for that I gotta have another chip with bean dip on it. $1.04. You said you wanted 105, Jimmy. Fritos bean dip. Oh, here it comes. Don't that sound delicious? 116. You are a son of a gun. You left your home.
Oh my gosh. Oh my.
119. Lord, why? Do you know you left $150 on the table? 3 white soldiers. How disgusting. How disgusting. It's all right, Jimmy. Just a few more seconds. So we got the famous 3 black crows. Now I'm going to do something different here. I'm going to be an artist. We'll change that. We'll change that color. We'll change that color. What color should I make it? Something that goes good with green. How about that? No, that's too dark. Yellow. Yellow, yellow, yellow. Gold. Perfect. They're now at $1.27. James Howard. Oh, I hate you. I hate you. I hate you. Oh. I try to get along with people. You're a psychopath, James. This is a good illustration. If you can count to 3, you can trade with me. A tweezer bottom, 3 black crows, 3 white soldiers standing in a row. If you can trade with me. Oh, the beautiful hammer right here with the double bottom snake breakout, pull back, boom. We got snake, breakout, pull back, boom. I called it right here. Oh my God, I can't stand it. Oh. It's hard on me. I try every day to be better. Okay. I'm done with my panic attack. Whew. Well, that was quite interesting. So I'm going to go in and make my coffee now and come back. I've had 4 successful trades. I'm done for the day. You see what side of the street I'm on? 50 minutes, and I'm done for the day. Who's willing to learn candlesticks in the room? Who's willing to learn chart patterns? Who's willing to learn moving averages? And who's willing to learn being in the now? That's the hardest part. You know, I felt like a one-soldier army in here 3 weeks ago. I really did. I felt like a one-soldier army 3 weeks ago in here. Let that sink in. Remember the 200 EMA and the 200 SMA on the weekly and daily time frame when you're in a downturn. Put it on a piece of paper, tattoo it on your arm, even put it on your woman's tit. Just do something. Write it down somewhere. Say, honey, I got a black marker. Would you mind if I write a little tattoo on your back? Meta, they were talking highly about. And you know these idiots were wrong about AI. They had another guy, that some kind of Mahaney or something on there this morning. Says we're in for a downturn. To be cautious. He had Trump deranged syndrome. Come on. That's got to stop. Now I got to get a new speaker system. That thing's been short ever since I bought it. But it's really acting up here lately. Be nice. $129. Oh well. That'd been another $190. Well, it definitely would have been 190 now, 220. Oh, yeah, you bitch. 157. Now I'm ornery. Randy. So that'd have been $600 trade right there. More. I knew I should have held it. I seen everything was bullish. It was all higher lows and beautiful breakouts. You know what? I'm going to protest. I am going to protest right now.
First, I'll go make my coffee. Then I'm going to come back and protest. Because I know that helps. Not. That's me in my Winnie the Pooh pajamas, watching my mother and my father holding hands. I thought it was literally disgusting. How could they do something like that in front of me? I never really had any major goals. I wanted to be like my dad, a pellet mill operator. He was a mean guy, very tough. I mean, real tough. He wasn't mean to me, but I seen him fight. My real dad was a gangster in Sacramento, California. I had this big cowlick on my hair. I had long hair back then. Wearing glasses, with them big old ears sticking out. There was a janitor that went to my school. He was a black man. I always stopped to talk to him. And I'd never in my life dreamt that I'd be doing it for 22 years. That man was a major influence on me. This was when I went to Lentz in Portland, Oregon. They had a real good school system. I always got picked on until I started boxing. And then the big old fella come up to me one day after school and said, "You want to fight?" I said, "Yeah." He kind of looked at me like, "What?" He come after me and I just punched him one time and knocked him down. Everybody laughed. I was just a little kid. And I look back at him now and I think, man, he gave me the chance to learn how to trade stocks, because I had a janitorial business where I could work at nights. And I reflect on that old man every now and then. So that's that. We're still at 154 here. Okay. I'm gonna go make my coffee. Taking profit on NVIDIA calls. Good job. Lunch Lady's been trading with me for a long time. Michelle's been a long time friend. Good 6-7 years. Randy. Angel. Angel's getting up there. I'll be back. I'm gonna go make my coffee.
19% run from March 30 low as well. I mean, that's obviously been something to highlight too. I'm just wondering what the VIX is telling you right now, Nate.
Yeah, VIX looks really, but like the VIX is telling you that we basically, the war is all but done, and that this price shock from oil prices is going to be, dare I say, transitory, or just it's going to be absorbed, and it's not going to really derail
Don't say
a lot
transitory.
of these, the strong fundamentals that are in place that are pushing this economy forward, this AI, secular growth story, etc. So yeah, the VIX around 17. When it was comfortably sitting in the low to mid 20s, just is signaling that at least anything can happen. By the way, Sam, we all know this. That we don't know if we're going to get, a resolution, peace talks,
These people are so
de-escalation, opening of the
stupid.
strait. That we still have all.
They act like Trump's going to go in there and kill everybody. I mean, the media is so. Everybody, I mean, just it pisses me off. We don't know. He's probably missed his boat. Okay. I'm gonna go get my coffee. I'm gonna do a little video on this. I just think it's a real interesting chart. Come on. Okay. This is ridiculous. Always clean. This Jim. May I help you? Johnny? Would you tap this call?
That they saw in the first quarter, Sam. Now, also in a sign that the bank's borrowers are not deteriorating, the firm posted $1.3 billion provision for credit losses in the quarter.
What?
That was lower than the expectations for what the year earlier.
I'm getting, Kelly's calling me from CNBC.
We're at the orb now. If this is a continuation run, we're good. Hello, I'm Washboardjim with a sneaky snake trading strategy where I talk about chart patterns, moving averages, and being in the now. Now, if everybody follows me, you know I'm very bullish in this market. That I've seen days a whole lot worse and times a whole lot worse than what we're seeing right now. So I've been very bullish throughout the whole dip. But now it's getting real easy to trade. And we've jumped up 10 percentage points and we've already had our correction from the pullback, and there's still some good buys in tech. But I want to show you a trade today that I called out, and it's one of my favorite calls when you have a lot of volatility. And you're still getting a lot of institutional traders talking like they're scared to death, but the smart ones are out buying the dip, saying they don't have a crystal ball, and I do. I have a crystal ball. So we called the SPY calls out. This was my fourth trade in the SPY this morning. And it was exciting, but I got out a little bit too early again on the last trade. The other ones I did perfect. But the last one, I could have made another $500, $600 on the trade. But as you can tell in the morning here, this is where you kind of get an understanding. We started bouncing and having higher lows. Then we had what you call three black crows. This is on the 1 minute. If you look at the 5 minute, we had three white soldiers well out of that gate. We had one big old red candle with a tweezer bottom on the 5 minute that created that orb. This is an orb right here. So we had a tweezer top, three white soldiers right out of the gate. And that's when I called the trade exit. I said, get out of the trade. We had three white soldiers. I always say it. Maybe 49 out of 50, it'll go ahead and start breaking out to the upside. Not even that many, but when you see three white soldiers, I want you to remember one thing, that's a sign that the market could have a continuation to the upside. Now this was right out of the gate. So when we pulled back on the 1 minute, you're flipping back and forth in time frames to read the candles. After we had the three white soldiers, we had three black crows. Now, you'd only seen one engulfing candle on a 5 minute, but if you pull up the 1 minute, you can identify the three black crows, which is a buy signal. You're already bullish because on the 5 minute, you had three white soldiers. So the white soldiers came into play. Three white soldiers, 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 all the way up. So that's just kind of an impressive trade. I really want to make people aware how important it is to spot candlesticks. Three black crows and three white soldiers are just like the pinnacle of wanting to learn how to trade. So now we're pulling back to the 63 EMA, and I'm watching the tape. So I'm going to look at the calls. Here, where are you? Start off with 5. 696 in the money. A little bit late. Oh, damn it. It's at 63, or is that the 200? Let's see what this is. I think it's the 200. No, it's a 63. We'll just make that red. So that would have been a good trade right there. Just that one scalp would have been 12 cents. So if I'd have bought 10 of them. But I just wanted to point out the 63s. I had a good, there it is right there, 138. When your charts are looking clean, there's a difference between clean and what I mean by clean. There's 20 cents right there. What I mean by clean, that they're reading well to your style trading. This is a real clean chart. It's holding up support levels. It's bouncing off 3 black crows with 3 white soldiers. That's real clean. Higher lows all the way up. Holding up the 9. So determine what a clean chart is in a chart that's not holding your support levels. You don't need to be trading that much unless if you're a put trader. If it's not a clean, clear day to you, just sit back and wait before it starts to become one with your strategy. That's it. This is a sneaky snake trading strategy, trading live. Calling out call just now and missed it, talking too much. That'd have been $150 or 100 for sure. Sneaky snake trading strategy where I talk about chart patterns, moving averages, and being in the now. Regetta is up 10% today, $1.70. Tesla is up. Jimmy said that Tesla would be a good trade for a bit. Oracle's looking good right now. It's really started to break out. Oh my. We got a new high on Oracle. See, this is something you need to note. When we had a pullback like we did, there's only 10%. So that's still in a bullish window. We could get a higher high out of it. In the long run. Robinhood and strategy stocks jump. Wow, I had 85 on here. That's interesting. I haven't charted this up in a while. Let's send this to Vegas. Robinhood Markets shares are trading higher following reports suggesting that the SEC has approved a plan to remove day trading limits on small investors. What? It's about time. Oh, that sucked. Obama. I tell you what, I hated that son of a... He put restrictions on day traders. Wall Street reform. I'll never forget it. Never forgive him for it either. Because that screwed me up. I wanted to be like the millionaires. He threw that PT whatever rule was in there. So that's good news. That's real good news. I don't know why they wanted to keep... Hillary was the same way. She didn't know what a gig economy was. And I was doing a gig economy. We don't want no gig economy. We want to control you. That's real good news for Hood. Oh, you did? You had it yesterday? That's real good news. I didn't see it yesterday. I would have been excited about that and bought Hood. I would have bought it overnight. Oh yeah, I'd bought that sucker. Unless it was after hours. I mean, I'm tickled at this news. It's a little too late, but oh boy. I'm tickled to death now. I wish I'd known that earlier. Apple popping. Market's bullish. We might break resistance on the SPX now. Ladies and gentlemen, double top on SPX. That's good news. Well, if I was young again, I'd save up a couple grand. I mean, you can really make money. You can trade, well, once you figure out a strategy. I was doing real good. I mean, when I first started trading, I was up like $4 grand. We were crashing. The market was crashing. Obama was making all this. He had Wall Street reform bill. He had these protesters. I mean, it was a weird time. I've seen days a whole lot worse. We had Wall Street protesters breaking down windows during Obama's campaign, and throughout every speech he was talking how bad it was to be rich. That he was going to come after us. And the market just crashed. Everybody took all their money out of the market. And then they bought the dip, just like what we have with Trump deranged syndrome. Here's the bottom of that megaphone. See, this is a rising megaphone pattern. I'm yakking here, not paying attention. I would have took that trade too. That's called a widening megaphone at a vertical slant to the upside. Imagine this market pulling back 50%. And and cheering it on. You know, I was just learning. That's where I learned. I figured, wow, this is interesting. Market's down 1,000 points. Today it's down 800. Oh no, we're down 1,200. Then they made a rule, if we went over 1,000 or something, that they would pause the market because it was so bad. And he just kept selling every single day. And I'm just going, wow. I mean, people were screaming. Kramer was screaming, when's it going to stop? When's it going to stop? And that really got me interested, so I bought the dip. And I took like $1,000 and made $10,000 out of it. And I went, this is great. I like this. Then I really started getting into it. And then that rule came, and I could only take so many trades a week. And that just ruined everything. I had to save up, and finally get enough money to where I could day trade and not have to feel like I'm being in prison trying to trade stocks. And the institutional traders were bad-mouthing us. They didn't want us interfering with their market, I don't think. It was a very good time to learn. If you were new and you were hanging around me back when we just had this small little pullback, I kept saying, I've seen days a lot worse, a whole lot worse. I mean, that was nothing. So I felt very confident all the way down because we didn't break certain levels. Now, if we were broke certain levels, I would have definitely told you, hey, this ain't looking too good. But here's AMC, one that I just called out. Oh, look at that. I couldn't get no one to trade this with me. I mean, if you just put $1,000 in that trade right there, you'd have made $500. That's when I was calling the swings out and the bottom. I heard the bottom today, actually, by somebody. Oh, we hit the bottom, I think. But you never know. They say it 3 weeks later. What chart got me to find the bottom? That's a good question. Jim, I'm sitting here watching YouTube and you're talking smack. How did you know that we hit the bottom? Will you explain it to us? We'll start off with the IWM. First thing I want you to look at, sir, or ma'am, or transsexual, is the yearly time frame. 2 soldiers, 1. 2 soldiers, 3 soldiers, 1. 2 soldiers, 1. 3 soldiers, 1. 4 soldiers. So Jimmy said we would pull back and hit the body of the previous year. Whoop! See what I'm saying? Now we're back up the top again. Then you go to the yearly. Yearly, daily. And we're at the 200. That's an institutional spot. Anybody could call that out, even if you're a rookie. Just write the 200 SMA and EMA down on any pullback where you start to feel that nervousness. Bounce, 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 bounce. That's on the daily. That's IWM. On the weekly, you got a head and shoulders, support, 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 triple bottom support. Already broke resistance in 3 weeks, and now you're at resistance. So, with the experience I got, I say we need to pull back at least one candle. You have 3 white soldiers as a continuation pattern on the weekly time frame. So we nailed it. We nailed it. Off the shoulder line of that head and shoulders. We had a harmony pattern. Bullish. 3 white soldiers is very bullish. We broke the resistance levels. So that would be your first support. Will be that top body of that candle. There's only, I don't know too many people that trade off the bodies of the, and it never made sense to me why people don't use the bodies of the candles. It just doesn't make sense to me. Especially new traders that learn from someone that has experience and they're telling you to look at the wicks. The wicks are confirmation, and your accuracy level will increase by at least 20%. You'll miss trade after trade after trade if you don't start using the bodies. It's like the 1 minute to the 5 minute. I can do 3 trades to your 5 minute. I can do 3 trades on the 1 minute to your 5 minute time frame. Maybe 4. A lot more opportunity is on the 1 minute than it is on the 5. It's just cleaner, but if you can learn how to read charts and candlesticks, because all you're going to see on a 5 minute is going to be candlestick patterns. So now we've pulled back, so I'm ready to look again. See, there we go again, right on that trend line, on that megaphone. Now, we have what you call here an ascending triangle. If you can count to 3, you can trade with me. This is how you trade this trade. This is called an ascending triangle. So if you can count to 3, and we get up here and hit that 3rd time up here, and it starts to break out, wait for the pullback, and then take the trade. Once it established a pivot point at that resistance level, it'll give it more strength. But I wouldn't take the trade because you're so close to the top. I'd have to let it break first, then pull it back. Now, I would have took it here. The profit of taking it off this here is going to be a lot less, a lot more riskier. As you start to squeeze, which will probably be another couple more minutes, that's when the higher lows meet up with the horizontal resistance. That's called an ascending triangle, and that's used to be one of the first patterns I ever traded. Every time I saw one. And then when the volatility came, it started being inverse head and shoulders and megaphone patterns, triple bottoms. So I've got my order ready here, or I'm going to get it ready. What time is it? I got to look at the clock. If it's 12 o'clock, I want to go into the 16th. But if I think I can take this trade within 2 hours, which is my lunch time, and I got to ask myself, is my tummy more important than a trade right now? I've lost probably good 10 pounds since I started the sardine diet. I might go in there and whip up some sardine biscuits and use an almond flour and an egg and a little bit of zest to it, spices. Then put a strip of mustard on it. But yeah, it's sardines. So now it's catching my eye. I'm ready. Is this support or is it going to hold? Might even want to look at the SPX, see where the VWAP. There's your previous resistance right there. 3 white soldiers out of the trade, right? I mean, this snake looks hot. You see the snake? There's his head. Soon he's going to stick his tongue out at you. But look, we're already we broke resistance. Let that sink in a bit. That means you got to be a little bit more patient. Your risk level is a lot higher now. It wasn't that high down when you were down there at the bottom off the 200. It was a dream come true once every 2 years or twice, maybe once a year. But with Trump syndrome, it could be 2 or 3 times a year. Now look at IWM. I mean IWM. I'm gonna alert this other room that trades IWM. Milky. Oh, my darling, oh, my darling. I think it'll be a great, I think it'll be great, Johnny, if it happens. Louisiana favors sardines, very good. Now there's something. Brit market closes approaching, taking their money out of the market. There's something going on there in Spain. And the Brits are pussies, if there's any of them in here. IWM. Double bottom at the orb. Snake breakout, pull back. Okay, let's do the snake again. Jimmy got in the trade, but I'm telling you, watch this. Right now would be the exit idea. We hit the 200. Jim, I'm your next door neighbor, Elizabeth. The other day, you bought a vacuum cleaner and you called it Queen Elizabeth. Well, I want to tell you I was watching that trade. I didn't take it because I remember you saying pullback. Head and shoulders. Head and shoulders, boom. Head and shoulders, boom. Head and shoulders, boom. So I drew my trend line using bodies of the candor. And I set my alert right above the 9. Oh! Damn it, too late. Come on. Come on, get down there. Let's do the SPY. Oh! Jimmy said the ascending triangle. Hello, my name's Carl. I'm your next door neighbor. You called that SPY out perfectly. I would like to come over and give you a big kiss. Wait for the pullback, Carl. As we go to 697s, they have 366,000 calls on here. And we want this here line to come back and touch that resistance. Then we're going to jump in the trade. This is on the 1 minute. Might not even give us a chance. because I'm going to get ready to make lunch. Yeah, I'm just talking too much. I'd have took that trade right there too. And got been out of it by now. Okay, we're coming back. Oh, triggered! $6.97 at $1.01. Now, I don't know if it's going to work or not, but my plan is in triggered. Nobody can trade like the washboard can. We're up $50 right now. We're up $70 right now. If you're a rookie, I want you to learn how to take profit. We're up $70. Strike at $6.97 at $1.01 up. Figaro. Figaro. Yes, sir, baby, yes. Man, I'm feeling good. I think the big difference is feeling good, you know? Helping others and donating. Building up a repertoire of karma.
James, you're up a good $100 here. Have you ever thought about selling? Yeah. You were up a little bit more, but you weren't paying attention. You stupid. We're above the 9. Gosh, if I'd have bought that tip. No. That's what you get for being a latecomer. Just right here, it's almost 10 cents. There it is, 12, 14. Congratulations, Washboardjim. You just made the #1 trader of the year. 101 to 114. Will we break out? I don't know. I think we're testing resistance. We can. But to play on the safe side, because I want to eat. The first day of Christmas, my true love gave to me partridge in a pear tree. You're backing calls at resistance? You're out. Don't buy at resistance. Wait for the pullback. Pretty please. I'm going to teach you how to be a pullback trader. Foghat, 1976.
Ready to e-file your taxes with TurboTax?
When I was free. That's the kind of music I listened to when I was 16. Now the calls are at 118. 19. James, you just left $50 on the table. Oh, no. New high. Dun 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 dun. My God. I'm going to show a trader's trick. Pay attention to the screen. Hello, my name's Caroline. I used to work for Schwab. I remember an email you sent me, and you were talking about the freckle on my chest. Well, I'm ready to expose it if you want to see it again. So we had a tweezer top. Tweezer top on the 5-minute. We had a tweezer bottom on the 5-minute. You dummy. Tweezer bottom. Three black crows. Boom, tweezer top, tweezer top. So this will be wrote down different. T-W-E-E-Z-E-R. Watch this trick. T-O-P-S, tops. That means two. Oh. We got the 200 SM EMAs. Tweezer bottom off the 200 EMA. Tweezer bottom, a hammer off the 200. Three black crows off the 200. Hammer off the 200. Five-minute. Come on. Okay, my name's Washboardjim. There we go, you bitch. $200 EMA. Tweezer bottom, tweezer top, once you start seeing this, it'll start really understanding my strategy here. Tweezer bottoms off the 50. Tweezer bottom. I'm the only person out there that goes through this. I could be making tons of money right now. 3 times more than what I'm making here. But I'm not selfish. And I don't do it, I do it for free. Where people are charging $120, $200 a room a month. And they're not even a third as good of what I am. That's a bottom you dip. So I'm going to be asking for a little bit of help for my vacation soon, if you want to donate. Okay. Well, that's fine. You will one day. You're going to buy me a Cadillac. Okay, Tesla. Buy me a diamond ring. Oh, woo! Tesla, baby. Okay, we got to break 389. $390. Okay, Tesla, resistance to break is 390.15. And support is going to be the 63 at 372. We're at the 50 SMA right now, running into the 9. The 9 crossed over down, which makes it bearish, but we also bounced off the 100 on the weekly, which makes it bullish. So again, using the 100 on a downtrend, EMA, 200 EMA, and the 200 SMA when you're in a hard sell-off. We bounced off the 200 right here, 100 EMA. We bounced off the 200. We're bouncing off the 63, and now we bounce at the 100. So it doesn't take much to learn how to be a good trader. Just got to memorize the moving averages and chart. Well, it depends on your style. But this was all these were swing setups. Once we hit the 200 on the SPY, everything became a swing because we're still bullish as long as we're above the 200. Although you thought we were very bearish, we weren't bearish at all. I've seen times a whole lot worse. You just don't need to, when you're at resistance, you just got to get out of your trades and buy the dip. And I was screaming that out. But right now we're at another resistance on Tesla. So I would not buy Tesla here. I'd wait for a pullback and then get in it and retest. We've got earnings coming up, which was a catalyst. So now I'm going to look at QQQ. So we got 3 white soldiers. That's a double top. Three black crows, gravestone doji, 2 more crows, 3 white soldiers, you're out of the trade. I've repeated this over 20,000 times. So you've already made back, in 3 weeks, it took what, 1, 2, 3, 4, 5 months of selling and only 3 weeks to get it all back. It's that critical to learn the 200 SMA and EMA on the weekly and daily time frame. You got to jot it. I mean, you got to plaster it in your head. I can't just. It's never failed. It's never failed me. Only it failed me under Biden, and then I still caught it, and it failed me under Obama. Because they were bigger sell-offs. I've seen days a whole lot worse. Especially Obama. Those were real bad days, but it came back. I mean, we printed so much money. $78 billion a month for years. Okay, I'm gonna
Getting started.
get
Charles
back
Schwab
on this
offers
and
a
make
webcast
lunch.
that's right for you. Do you like using charts when analyzing your stocks? Our technical analysis webcast series.
Three
breaks
white
down
soldiers
different
consolidate,
charting
take
techniques,
profit.
like
Three
trend
black
analysis,
crows.
price patterns, moving averages, oscillators, and
Let's just say you want to be a swing trader. Let's say you can't scout. You've tried and you tried and you tried. And you just don't understand it or don't want to learn it. And you have a job or you have kids or you do volunteer work. You can learn to become a swing trader. Just spot the soldiers. Spot the crows. And you're done. 3 crows, 3 soldiers, I'm out of the trade with a double top. So when Jimmy called the bottom, let's see what this looks like on the daily. Let's look at the 5-year. Biden pulled back all year long. And then the bureaucrats came in and run the country, started spending like, and then Trump syndrome to the 100, and a small little bitty pullback. And I've seen days a whole lot worse. 3 black crows, 3 black crows, 3 black crows, 3 black crows. Just become a 3 black crow trader. It only took 3 weeks. This took a whole year. That's triple top, counting the wick on the QQQ, so that's real bearish. I'd expect a pullback and buy the dip. So up.
Man, see how easy that is? Swing trader. You have the 100 EMA on Tesla. I think Johnny asked me about Tesla the other day, and I said it's good for a swing for a couple of days. Now you're running into the cloud. And that 390.15 was a hard resistance to break. $400 would be hot, the target to hit. Okay, I think I'm going for lunch. Spy, don't be buying. I mean, don't wait for some kind of, maybe back to the 63. You got a double top, but it could take off. But I mean, we're really pushing it now. Watch that /ES, see if it hits the 63. I listened to the people this morning, and they still got that. They talk different than they have before the retail trader hit the scene. I think they're trying to play games on you just as much as I play games on them. Because I know it was like that Stephanie Link yesterday, or early this morning, pumping them stocks again. The ones that have reached like all-time highs. Don't listen to that. If you listen to her, you're going to find yourself in the hole. You get a double top at a resistance, you got to wait and look at what we've hit. The 63, the 63, the 63, the 63, the 63. So that's where you want to look at. You want to reflect the support levels, the trend lines of the support. Right now it's off the 63 on the 1 minute. So I'd set an alert right above that 63 and above this here triple top break. And I'm going to go into the kitchen. I'm going to hear ding. And I'm going to type in 63 EMA on the alert so I'll know why I'm looking for the trade. And you have to maybe raise the bar up a little bit if that moving average never stays the same. It's always moving. Now, if it breaks below the 63, you buy a put because you got a pretty good drop. Let's say it broke below the 63. Are you going to buy it there, or are you going to buy it here at the first support? See if it holds the first. I'd wait, see if it held the first support, then your second support, and then your third support. And that's right at the 200 EMA. I mean, it's right there. You got a pivot point, yin yang. You ring that to that. So you'd set an alert right here at this previous high. Just like that. You got another one right here. So you got all kinds of possibilities for this thing to stop. You got triple top breakout. So I got double confirmation right here. I'd rather stick with that one. I got two reasons now. God. I gotta stretch my hands out there. Yeah, double confirmation right there. Oh, we got another kid on here.
Significant increases in fabrication equipment spending in 2027 and beyond. And what is meaningful from an expectations perspective is how the transition to EUV is going, as well as the diversification to multiple foundries. And
he's a bookworm. He's what I call a bookworm. Probably very smart, but no common sense.
Quarter becoming a larger contributor than logic. That
street
suggests
smarts.
that the company is well positioned to diversify its customer base, even if it doesn't disclose the exact bookings contributions.
And a few things I want to follow up on there, but the first one I'm going to go back to Stephen for, without those booking numbers, and Brendan just mentioned that we're ripe for a super cycle here. Are investors now flying blind because we aren't going to get these order numbers that we've historically gotten?
Oh,
I wouldn't say
God.
blind.
That's a stupid
the
question.
thing to realize is it's not very many people who are going to tell you sort of where their orders are coming from. I think that's been something that we've all relied upon.
God, what a stupid
Investors
question.
need to look at this as when they're announcing that SK Hynix on the memory side is putting in an $8 billion order for these EUV machines. That's really, to us, an indicator of where these companies are seeing the memory and therefore the AI market being in that 12, 15, 18th month time frame. So I think instead of flying blind, we need to look at these companies as bellwethers of where everybody expects things to be in late 27 and into 2028.
And so, Brendan, with that SK Hynix placing those massive orders, and as you mentioned, memory is a major driver here. Memory is now more than 50% of their system sales, as I'm looking at the number. Does that change the growth profile for ASML?
It does meaningfully, because memory makers are on pace to rapidly expand their fabrication capacity and experiment with leading nodes in order to drive competitive performance gains in their underlying chips. And the area where investors do have visibility is into the CapEx plans of memory makers. The CapEx intensity of these companies is actually at historic lows, just given the rapid revenue growth that they've achieved recently. And it's a coiled spring setting up where these memory makers need to expand their fab capacity in order to serve all the demand that's pent up in the market. And so that's an area to watch, highlighted by Samsung's great earnings last week, as we look into SK Hynix, as well as Micron, as potential growth customers that can expand their CapEx plans and flow through directly to EUV machine orders.
And Stephen, we're very tight on time here, but before we lose you, I want to ask one question just about China and the China story. How big a risk are U.S. export restrictions to the China business here?
Not so much for ASML. They could lose really all of the DUV business they're still selling to China, and a lot of people are saying that's a sub 15% hit on their revenues. So, and I think that would be made up elsewhere. So I'm not going to say it's no risk, but I don't think it's the major part of this story.
All right. Well, appreciate you both being with us today to take a closer look at ASML, those impressive numbers, but also this almost 5% move to the downside. Steven Sopko, semiconductor and deep tech industry analyst at Hyperframe, and Brendan Burke from Futurum. I also want to thank all of you for being with us today on Trading 360. I'm Marley Caden. You can download the free Schwab Network app in the Apple App Store. You can also tune in 24/7 on SchwabNetwork.com. Don't go anywhere. Fast Market with Diane King Hall is coming up next.
Schwab Bank Investor Checking, the checking account built for investors. Named highest in client satisfaction by J.D. Power for 7 years in a row. With Investor Checking, you get the award-winning features of our checking account, plus cash management solutions, all designed for investors like you, with unlimited ATM fee rebates for cash withdrawals worldwide, no overdraft fees, and enhanced security features to keep your money safe. Also, because your investor checking account is linked to your Schwab One brokerage account, you can manage your checking and investing in one convenient location. Moving funds between your accounts is easy. Cash moved to your brokerage account is available in seconds. That means you can stop waiting and start investing in stocks, bonds, money market funds, and more. Get more with Schwab Bank Investor Checking, the checking account built for investors.
Schwab Coaching is concepts brought to life in the real world.
Schwab Coaching is learning constantly.
It's relatable, it's practical, clear, understandable, and hopefully entertaining.
Take it for what it's worth, but I think it's absolutely world class.
Schwab Coaching is actionable, individualized, community, growth, and empowering.
It's really a human touch with your investing.
We have coaches who have been in the industry and around the industry for a long time.
So the nice thing about Schwab Coaching is that clients get access to 9 different sets of expertise.
We want to engage with you and chat on the shows we host. We want to engage with you outside of the classes we host.
A consolidation that could add to this trade. So we shall see.
We have different formats because people learn differently at different times.
If somebody's a real bookworm, we've got courses for you to learn from. They can dig in, go at their own pace.
We have webcasts running through YouTube all day, every trading day.
We've got this ongoing 24, 25 times a year events that are making their way around the country.
So you get that opportunity to share experiences and knowledge with other traders.
They're kind of helping each other learn step by step along with the education that we provide them as well.
We're going to be able to help you regardless of where you are on that path of education.
It's really unique, not just that it exists, but that you can tap into 30 some hours worth of it each and every week. How incredible is that? And it's free.
Stay connected to what moves markets. Download the Schwab Network app and get live coverage wherever you are.
Welcome to Fast Market here on Schwab Network. I'm Diane King Hall. Coming up on noon Eastern here at the New York Stock Exchange, Wall Street has been mixed as investors keep one eye on headlines tied to the U.S.-Iran war and one eye on earnings. Let's get right into the check of your scorecard as we hit the lunch hour on Wall Street. We've got the S&P 500 higher. It's approaching a gain of 0.5% right now. The Dow is still under pressure. It is off by just shy of 0.5%.
NASDAQ 100 at the top of the leaderboard, better by more than 0.75% there. Meanwhile, the Russell 2000, those small caps, taking a small step back today as investors continue to monitor the latest with regard to the potential for progress on peace talks between the U.S. and Iran. Meantime, here's the roadmap for today's show. We'll look at example option strategies for Taiwan Semi ahead of its earnings. Those are due tomorrow. Plus, the team from Folio will be along with new sensitive data on PepsiCo, and Salesforce is on our radar today as it stages in advance. Now that we've got the roadmap for today's trading action, it is time to bring in my co-hosts. You've got Tom White in our Chicago studio and Kevin Hinks joining us live from the SIBO. As you know, we've got you covered from exchange to exchange and beyond. So we've got this push-pull on Wall Street continuing. The bulls trying to extend gains. We've got strength in the S&P 500 led by tech, financials. Meantime, we've got oil prices sitting around $92 a barrel. Investors seem to be hoping for this peace deal between the U.S. and Iran. We had President Trump out in some interviews, kind of, it seems like teeing that up. Tom, your thoughts as you look broad strokes across the market?
Yeah, it seems like the risk-on assets, the equity market, is kind of pushing aside any geopolitical tensions at this point, maybe focusing more on what's going on in the corporate side with earnings coming out better than expected out of the financials. That's probably driving the optimism in the markets at this point, because when it comes down to it, Diane, historically we've seen this played out repeatedly. When there's geopolitical tensions, when there's things like this that happen, spikes in crude oil, the market eventually pushes those concerns aside, and relatively quickly. And we've seen that right now. You got the S&P 500 just below record highs at this point. If we settle right here, that's going to be a new closing record high for the S&P 500. So that V-shape, it's kind of similar to what we saw last April when we had the tariff consternation hitting the markets and pulling them back. But this is to a lesser degree, right? We went into correction territory in 3 of the 4 major indices. Now we're right back near all-time highs for the S&P 500, the NASDAQ, and the Russell. The Dow's lagging just a little bit, but this typically happens. And when you see volatility spike back above the 30 level, and now it's back to, the levels that we haven't seen since the end of February. This is typically what happens, and you should be prepared for it, because when it comes down to it, the equity market can get roiled by these geopolitical risks and tensions.
You ain't getting away with that.
At the same time, it's going to all come down to what these companies are saying and what.
He wasn't saying this when we were down there at the bottom. He was looking for more damage. He didn't say this typically happens. I was saying it did. So this typically happens. That's what I was trying to tell everybody. This ain't nothing. It's typically, for him to take credit, he needs to be slapped in the face. Because this guy was a big bear.
About the geopolitical risk. Kevin, what's
when
your
I was
thought
crying,
when
screaming.
you look broad strokes across the market today?
I think it's not the how many, it's the who are higher today. If you think about it, the market is up, S&P's up almost 0.4% with 7 sectors down.
Well, this guy had some
4
common
up.
sense.
But with the ones that are up are critical. Obviously, financials are higher with all their earnings out, but it's information technology, it's communication services, it's consumer discretionary. Those 3 big behemoths, as well as financials, is what has this market higher, despite, like I said, more sectors being lower. The equal weight S&P is actually down 0.25%. So this is a information technology, and even more closely, a software-driven rally in terms of it within information technology. So the leadership of the market, all the biggest names, those are what's higher. Amazon is, up, but Tesla's having a monster day. Microsoft and Apple, Broadcom and Nvidia, all the leadership, Meta. These are all the leaders that that have these markets up. It's the leadership taking stocks higher. I thought we'd get back to 7,000. Just didn't think we'd get back this quickly, frankly.
Yeah, I did not think we'd come back this quickly. And, you know, I know it's not a roar right now, but it feels like we're roaring back right now. So let's get into the earnings that you kind of alluded to earlier, Tom. There's strength showing up in the banking sector, continued strength there. Bank of America saying the consumer holding up. That was CEO Brian Moynihan. They did better than expected. Those shares ticking higher. Morgan Stanley also better than expected. That has a bigger advance right now. That stock is up more than 4%. ASML, though, they were out with their earnings today, and although they had some strength in the forecast, looked good, you had some pressure there. Tom, what's your take, either looking across the banks or ASML?
Yeah, productivity going well for these financials, especially these broader-based investment banking companies. They said they generated almost $1 billion more in revenue than they expected. The trading side of it, so that's going well. Profits jumped 29% to $5.57 billion. That's going really well. Equities trading up 25%. Fixed income revenue rose 29%. Remember, the fixed income portion of Goldman Sachs results was a little bit weaker than anticipated, but Morgan Stanley's rose 29% to $3.36 billion. I think we talked about this, last week when we were kind of previewing these, and the Bank of America comments, I think, hit home pretty well. Where, hey, the consumer's starting to get stressed out about inflation, but at the same time, they're still spending and propping up this economy at this point. If you take a look at some of the financials, it's a good environment, right? Remember, the first couple of months of this quarter is when the stock market was at all.
We had a 30% inflation under Biden, and we had inflation under Obama that were a lot worse. I mean, we ain't seen nothing yet. Inflation under Trump. I'm paying a lot less for a lot of food, I know that. I'm saving at least $150 a month compared to what I was paying.
Results weren't as good. Wells Fargo previously had fallen post-results, but overall, a good tone to set for the overall equity market here moving forward with these financial results.
Kevin, your take on either the banks or ASML. I'm curious if ASML is like a buy the rumor, sell the news kind of thing.
Well, ASML, remember what we talked about in yesterday when we discussed ASML was gross margins. And they put up a number of 53% gross margins. However, they guided to 51 to 52 for quarter two. That is worrisome. Remember, they want 57% by 2030. They're going in the wrong direction, Diane. It dropped from 54 to 53, and now they're guiding to 51 to 52. So I think that's down just because of the guidance on the gross margins. The banks, you see what's happened in financials right now. I think it's really interesting because Goldman Sachs and Morgan Stanley are such a tight correlation between the two firms and what they do and how they make their money. For Goldman's FICC to be lower and Morgan's to be big, higher, that tells you that someone's eating someone else's lunch, because normally those two fight it out and they go in the same direction. So I think that's big news for Morgan Stanley. So yeah, all things considered, we're consuming and digesting a lot of earnings here. And remember, we were worried about the valuation on ASML before, and it was the gross margins we thought that would propel the stock or disappoint. It did, Diane.
All right, let's go back to tech, guys. So we got Meta doubling down on those custom AI chips. Broadcom is at the center of that build-out. They've got plans to deepen a partnership between these two heavy hitters. You got Meta higher, you've got Broadcom higher. Tom, your take?
Yeah, I think this is good for Broadcom because you're seeing other companies within the tech space kind of dispersing where they're getting maybe their chips in the future, and they can use these more specialized chips that Broadcom has the corner on at this point. This MTAI chip that's going to be running their platforms and expanding throughout 2029. I think this gives them a little bit of leverage where they're not going to rely on NVIDIA so much in moving forward in the future. And this is going to be a sustained multi-generational roadmap to serve that growth. Remember, over 3.6 billion daily active users across their platform. CEO Hock Tan, he's leaving Meta's board. He's going to get an advisory role. So this is also another one of those around-the-wheel type of investments, trying to expand their footprint and not rely so heavily on maybe one or two of the chip makers at this point. So this is probably good for both companies. You're seeing the reaction in the stock, but hey, you know what? This is still going into the fact that these hyperscalers, these big companies like Meta Platforms, continue to spend a lot of money. Let's see some monetization.
Okay, well today it seems like what's good for the goose is good for the gander. Kevin, your thoughts?
You know, this partnership, and let's face it, one of these gets announced every other day, it seems like, in the market, but this is a pretty significant one. I think this is two companies getting much closer. The fact that the CEO of Broadcom has to go off the Meta board is, I think that tells you that these companies are getting, you know, closer together. And 1 gigawatt of you know, the commitment, it seems like a big number. I don't know exactly what that is, but I know it's a lot of power that they're, and remember, what Broadcom does, they're basically in the same business as NVIDIA, but theirs are more customized chips. So the fact that this partnership is closer, again, we get one of these announced just, it seems like every 2 or 3 days, but this seems like a pretty big one and a much different long-term, what they call it, multi-generation strategic partnership. Diane.
All right, let's talk Uber, guys. Shifting gears here. Uber shifting away from its asset-light model, at least from this report. The Financial Times reporting it will commit more than $10 billion towards autonomous vehicles. You've got shares of Uber rallying today. Tom, your thoughts?
Well, we always talk about Uber having, you know, the best platform for ride-hailing, right? And there was some consternation about a year and a half ago where, hey, maybe Uber is going to lose their place when these robo-taxis come out, right? But what they've done is create partnerships across the board, whether it's with Waymo, whether it's with Lucid, Rivian, Alphabet, the Waymo, NVIDIA announced plans to have their own robo-taxi. So the partnerships are going to be key moving forward. But we've always talked about Uber being an asset-light model, right? Well, now committing $10 billion, I think maybe the red flag's been raised at that company. The stock's still down about 24% from all-time highs where, hey, maybe that partnership with Tesla is what everybody kind of wants at this point, because we all know the algorithm that Uber has is probably, you know, put them in the lead as they were first to market in ride sharing. But maybe there's some concerns here. We're getting a nice pop here in Uber stock, but as I mentioned, it's been pulling back for the last 6 months or so. So yeah, this is, I think, just kind of digs into that where, hey, now they're committing capital to something that they maybe don't want to get left behind on. And maybe these partnerships that they have globally, I think they've got over 10 or 11 partnerships already with autonomous vehicle companies at this point that, hey, they've got to be in the mix here moving forward so they don't get left behind.
That makes sense. Yeah, you don't want to get left behind if this is the future of transportation. Kevin, your thoughts?
Diane, we've been covering this stock for years. And the question always was, oh, when there's no drivers, it's going to be much more profitable. But the question was always, if there's no drivers, whose car are you going to use? Well, now we're getting a little clearer picture on that as Uber is going to buy cars. Now, that seems like they'll own the whole...
Uber. They're really pumped up. I say relax. Today's lunch is a Italian salad, zesty, with all kinds of stuff in there. Tomatoes and black olive and little toast, some feta cheese, a little bit of romaine lettuce top it off with a sardine biscuit smothered in grass-fed butter. That's about a $50 salad right there. And it's a one of a kind. Take a picture of it.
I know some of you already did, copied and pasted. That's all right. You just wish you had a salad like that. Oh my God. Bull versus Bear, TSM. Apple, up. Microsoft, up. Amazon down a little bit. It's been running. Meta, hit my target. Google up. If you waited for that 200 and bought them, you'd be rich. Haven't looked at Baba or Boeing yet. Yesterday, Baba, Jimmy called out a falling wedge. Boom! Double top. Nike swing. Boom! Spies back down. Going to the next day. Oh yeah, 220. I'm up 100, almost 100% on my Nikes. Man, I love this sardine bread with this salad. Yeah. Okay, look, bye. They're 6.97s. At $1. If I can get them here. I tried right there, but it sat there for a second. No. If I was paying a little closer attention. Sardine biscuit. Oh, I love you. Here we go again. Ladies and gentlemen, Jimmy just bought the 697s at $1. Do you have a problem? Spy, calls, scalping, lotto, strike, 697 in advance warning at $1. I said $1. My name is Washboardjim. Spelunk, Spelink. My name was Washboardjim. Spelunk, Spelink. We're at 106. So what we have here is a demolition derby of 3 black crows with a spinning top. Hey, Jim, my grandma, she's single. She's 94. She wants to go out with you. She says she'll cook you biscuits and gravy. Now, come on. My eyes have seen the glory of the coming of the Lord. We're getting ready to break out where my grapes were rather stored. I had 3 black crows. I prayed for them last night. Thank you, my Lord. Break out past the 200 SMA. Break out past the 200 SMA. There's 110 for a short minute. And my eyes have seen the glory of the coming of the Lord. His truth is marching on. La 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 dee 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 dee. Oh, you beers. Well, it's not losing money. What is that? I think this is going to break. This ain't losing money at all. Oh! Come on now. You dirty rat. Oh, no, no. It's losing money now. We're at, well, 99. I'm telling you, this thing's different. Something about this one. Oh, that hurts. Dadgummit. Jimmy's down $100. $0.84. I'm gonna have to hold this one. Ah. Fuck. I put that on the wrong chart. Come on now. Let's make this back. So got $1.84.70. Damn it. Stop it. Oh, man. It's that time of day. Okay, well, I'll just give it a few more seconds. Thought I'm going to get out of it. We got 20 contracts. Break the 9, please. I beg you. I'll tell you what, if you break the 9, I'll massage your wick. Do you get what I'm saying? Massage your wick. On the body of the candle. I'll tell you what. 2 weeks, I've lost about 6 pounds eating on the special diet that I'm doing. My average is 81 cents. Yes! For a Washboardjim. Come on, break it. Break the yellow line. Whoa. Blake it. That's so close.
You were at 70 cents, James. You're only down 100 at the time. Low. I think it's time for a song. Let me think of one here. Classic. God darn it.
Smarter, more trainable puppies with IAMS Proactive 5.
Mutual of Omaha's Wild Kingdom has helped fiercely protect the animal kingdom.
Brother bought a coconut, he bought it for the dime. His sister hiding out a one, she paid it for the lime. She put the lime in the coconut, she drank them both up. She put the lime in the coconut, she drank them both up. She put the lime in the coconut, she drank them both up. She put the lime in the coconut, she called the doctor, woke him up and said, Doctor, ain't there nothing I can take? I said, Doctor, to relieve this bellyache. I said, Doctor, ain't there nothing I can take? I said, Doctor, to relieve this bellyache. Now let me get this straight. You put the lime in the coconut, you drank them both up. Put the lime in the coconut, you drank them both up. Put the lime in the coconut, you drank them both up. Put the lime in the coconut, you called your doctor, woke him up and said, Doctor, ain't there nothing I can take? I said, Doctor, to relieve this bellyache. I said, Doctor, ain't there nothing I can take? I said, Doctor, Doctor, lime in the coconut, you drink them both up. Put the lime in the coconut,
And I have to sell my cars. No, I'm holding.
in the coconut and drink them both together. Put the lime in the coconut and you feel better. Put the lime in the coconut and drink them both down. Put a lime in the coconut and call me in the morning. Brother bought a coconut, he bought it for the dime. His sister hiding out a one, she paid it for the lime. She put the
Lime in the coconut.
she drank them both up. She put the
Lime in the coconut.
both up.
He said, Doctor,
Coconut, she drank them both up. Put a lime in the
coconut
she
and
called
drink
the
it
doctor,
open.
woke him up,
Put
said,
your small clothes.
Ain't there nothing I can take? I
Say,
said,
Doctor,
to relieve this bellyache. I said,
Doctor,
ain't there nothing I can take? I said,
Doctor.
Doctor, you put the lime in the coconut, you drink them both up.
Damn.
Put the lime in the coconut, you drink them both up. Put the lime in the coconut, you drink them both together. Put the lime in the coconut, then you feel better. Put the lime in the coconut, you drink them both down. Put the lime in the coconut and call me in the morning. Ain't there nothing you can take? I said, woo. To relieve your bellyache, I said, woo. Ain't there nothing you can take? I said, woo. To relieve your bellyache, I said, Doctor. Ain't there nothing I can take? I said, Doctor. To relieve this bellyache, I said, Doctor. Ain't there nothing I can take? I said, Doctor. Are you such a silly woman? Put the lime in the coconut and drink drink 'em both together. Put the lime in the coconut and you feel better. Put the lime in the coconut and drink 'em both up. Put a lime in the coconut and call me in the morning. Yes, you call me in the morning. If you call me in the morning, I'll tell you what to do. If you call me in the morning, I'll tell you what to do. If you call me in the morning, I'll tell you what to do. If you call me in the morning, I'll tell you what to do. If you call me in the morning, I'll tell you what to do. If you call me in the morning, I'll tell you what to do. If you call me in the morning, I'll tell you what to do. The song is in the morning, I'll tell you what to do.
Put the lime in the coconut and shake it all up. You dropped your coconut. We're coming back up. Put the lime in the coconut and shake it all up. Now, if I wasn't busy, I would have bought that at 50 cents. Put the lime in the coconut and shake it all up. Okay, I'm at 63 cents. My target is to break 81. I'm not sure I can do it. I'm still close to the money, just right outside of it. So if anybody wants my sardine waffle recipe, just ask for it. You'll lose 5 pounds in a week if you eat it. 3 biscuits a day. With plenty of water. No carbs. There's a little bit of carbs in the coconut flour. We're at 65 cents now. Put the lime in the coconut and shake it all up. Put the lime in the coconut. Ta-da. Well, potato chip dip, come on, baby. These here are bullish candles. All these are. Oh, but that one could be. That's an inverted hammer, but these are all bullish. Every one of them. All 7 of them. We've got a wall to break, and that's the 200 EMA. And it's really not the time for me to be in this trade right here. Because it's 12 o'clock here in Missouri. But we'll see if we can wait this out. Make it a little bit better, lesser of a loss, or maybe even, or even if something happens here. I'm at 72. Paul, come on now. I'll date your grandma if I break out on this stock. Put the lime in the coconut and shake it all up. Oh, yeah. You're almost doing it, Jimmy. Come on. Oh, look at that. Little tricker there. We are now above the 200 EMA, which is a major breakthrough. Science. Oh! Now, it's 75. Come on, Brooke. Baby steps. Gaga goo goo. Now I'm at 78.79 cents. Should I take the small loss? That's the question. No, I'm even. Let's get 10 cents out of this. Come on. Bring it. I mean, really. 83 cents. Oh my gosh. Oh my. Uh-oh. Oh, D5. Should I sell? Woo! Okay. I can handle that. I mean, I was down $600. Oh, man. Oh, out. Oh. The smell of whey. Okay, you ready for this one? $0.92. Now that's called not giving up. It was bad, but I didn't give up because I feel bullish. So thank you very much.
As a raid partner, if you live in a new building, you know new does not always mean bug-free. Bugs love kitchens, baseboards, and those hit.
Never found a four-leaf clover to bring good luck to me. No rabbit's foot, no lucky star, no magic wishing tree, but I got lucky. Yes, I got lucky when I traded you. Got no rainbow around my shoulder, no horseshoe on my door. But I got you to hold me tight, and who could ask for more? Well, I got lucky, yes, I got lucky when I trade you. I always walk around with all my fingers crossed. I'm afraid the love I found
just might get lost.
So won't you
Tell me that you love me.
Hurry up and make
my day.
And
then I'll know that my good luck is really here to stay.
Oh, I got lucky. Yes, I got lucky.
When I treated you,
I always walk around
with all my fingers crossed.
I'm afraid the life I know
just might get lost.
So won't you
Tell me that you love me.
hurry up
and make my day.
And
I'll know that my good luck is really here to stay.
Oh, I got lucky. Yes, I got lucky.
When I treated you,
Oh, I got lucky. Yes, I got lucky.
when I treated you. Bingo. Who is that man? Sounds just like Elvis.
I got lucky. Yes, I got lucky.
When I treated you,
I always walk around.
That don't sound too bad. The videos hit support and bounced up. At least what I had up here, 196.13. I'm not sure. Let's see what that is. Yeah, that's resistance. It's resistance. Was resistance. Now support with the 200 holding it up. You got 385 on Tesla. All this running around. Three white soldiers standing in a row. Oh, yeah.
Oh my mama, oh my mama, oh my mama. SPY and 3 white soldiers on weekly time frame. Well, I've been talking about the 3 white soldiers on the yearly time frame. What happens? We consolidate. $0.96. Washboardjim. Are you aware? Yeah, I am. Yeah, I am. Well, I asked all around, would you eat some sardines with me? Not one of my friends would agree. Sardine a day, keep the doctor away. Please eat a sardine with me. It's great at losing weight, I can tell you. I've lost 5 pounds since I've started. I got a waffle maker, make 'em out of bread. I eat it with my salad, watch me instead. When I was young, I used to sit on the riverbank, and my dad would pull out a can of sardines and say, "Son, have one with me." So I took that old sardine and I put it on my fish hook. That day, I caught the biggest fish. From then on, I'd put them in fishing. It wasn't for the sardines, that's the cleanest I've seen. Then we'd go home after I caught the biggest fish and bread it, a little bit of butter and some flour. He'd look at me and he said, "Son, I had so much fun with you today. Let's go out next weekend and try it again." This time I'll be fishing with sardines on my fish hook. You see, my daddy learned something from me. My daddy learned something from me. Now it's time for a hot cider, and I'll be back trading again. Take a break. Have a recheck. I should have went to my VWAP when I was trading it. I didn't even think about it. I don't know why I jumped and added, but there at that last end, that last candle, got a snake, breakout, pull back, boom, with a lower low, triple bottom, megaphone out of the snake. So that I read that one wrong. If I would have waited for the megaphone and the triple bottom, well, I didn't know. You know, I tried to catch it off the 200. And got caught. Simple as that. And I wasn't losing money, so I felt like I was good. Then all of a sudden, man, sheesh, like a hurricane. I was down $600.
Studios for our Chartmaster segment. And Rick, it's been a few months, depending on the index, before we've hit all-time highs. And granted, we have not done that just yet, but we are awfully close. If this number over my shoulder here reads 7,002 and 29/100ths, we're at a new all-time high.
Yeah, I mean, exciting time. It's interesting, too, when you do start to get these breakouts above a old high water mark. It can be an energetic reaction as the, traders are overwhelmed, the cascade of orders triggers, and you get a runaway price activity here. Certainly not saying that's going to happen. Just that's a common trading situation that many folks look out for.
Also, not a complete surprise, maybe, and look, this is a 1-day, 1-minute chart. These can be very dramatic, but this point was essentially 7,002. It was just below that is it also not uncommon to kind of see a reaction when you approach those all-time highs as well?
You can see it. It can take a few tries to actually fully punch through that resistance level. Oftentimes, that's why technicians will advise to wait for the close before you start making any hasty trading decisions, especially if you're trading based on indicators. There can often be fake outs based on intraday swings. So, it's okay to be optimistic, but just don't be uncautious, I guess is what I would say.
Yeah, and this would be a new all-time closing high, so it's important that we're talking intraday kind of spike highs here. 7,228 is the former high. We'll see if, or current high, we'll see if we can eclipse that intraday or not within about 7 points or so. Let's get to our regularly scheduled programming here, though, with our chart and trade segment, as we're discussing two names, Rick, that are tied together today upon an expansion of partnership, starting with Broadcom, big time, custom chip maker and more within this AI infrastructure build out.
Yes, to be sure, and an interesting situation we find ourselves in from a chart perspective here. The reason I say that is because we have now filled this gap that developed here shortly after earnings that we saw all the way back in February. So after that decline we had our downward sloping
I called the bottom on Meta.
blue that has since been broken here. We've seen a pretty steep rally to the upside, but now a bit of a question mark here. So we've hit this gap level. Now will we follow potentially the broader market as we were saying, if it does lift into new highs? It seems like just a general resurgence of strength for many of these semiconductor-related stocks here. And if we were to keep traveling upward here, our old highs come in 414.61 here in this area. One level to look out for potential support if the move does falter, 382. Why? Because that was an old high that we saw after the gap down we were discussing earlier, and that's about where we formed another gap just during our last session here. Beyond that, 361, old highs, and then a breakout point as well. So when we look at our moving averages that we follow in this case, our 5-day EMA in dark blue is the one that's the closest to our current price activity, a bit shy of 375 or so. The other moving averages are quite far below our current price activity here, but you can see they're starting to tilt upward. The faster ones are starting to cross above the slower ones. They're continuing to diverge apart from each other. So that is all things that you would want to see if you were bullish in this name here. Look for the reverse to happen for signs of potential trend change, for the moving averages to start shifting to a downward slope, for price to start closing below them. RSI overbought, 75.9 at this point here. Upward trend line still in play. A long downward trend line you could have drawn in red has pretty compellingly been broken at this point here. So an interesting setup to be sure as we approach the latter half of this trading week. So now we can also see a smaller volume node here near about the 375, 380 level or so. A little bit of activity up here near 400, but really most of the trading activity by far is contained here between about 320 to 360 roughly. Our point of control coming in near 336. So that's really the standout level. It's a notable crossover that we've managed to stay above that point.
Yeah, good stuff, Rick. Hang tight. We're going to get to Meta in just a moment, but a quick example trade for Broadcom, looking for a continued move. Now, this is a later in the earnings season reporting stock, so staying ahead of the next quarterly update. But say you think there's just going to be a continued run back towards those highs, and what I looked at here was a 4/15 call calendar. It is selling next Friday's April 24th expiration, and then buying the following Friday's May 1st expiration, both 4/15 calls. Looking to spend around a $3 debit, maybe more than that, maybe less, depending on market fluctuations over the last couple hours. That said, if you were to, whatever debit you get for an example like this, that is your risk on this trade. You see that in the upper right-hand corner of that risk profile, $300, which coincides with that $3 debit. We talk about this risk profile all the time. These shaped risk profiles, kind of like a mountaintop, and they peak out at that strike. So they're customizable. They can be moved around depending on your degree of bullishness or bearishness or neutrality around a particular name, but they are risk defined, and in this case, looking for a move back towards 4/15. We bring back in Rick and discuss Meta. So the other part of this deal, Rick, the excitement for Broadcom, was, well, they got a big spender that continues to spend big, and that's Meta, as they're locking down some of these different chip sources.
They said the spending would stop.
I guess kind of wean themselves off NVIDIA and AMD. but technicals cuts through all that noise and just tries to focus
said they
on price.
wouldn't.
So it looks like we're approaching some sort of resistance level.
Yes, and a chart that doesn't look quite as strong as our last one, but is enjoying a similar, very steep rally to the upside here. The level of resistance in question here comes in around 680. So if we were to backtrack, we can see that was a point of lows, a notable high point after an earnings gap down in late October here of last year. And then we had some trouble making it above that area here after the last earnings event that catapulted us upward. It quickly died down and once again became a resistance point. Now we find ourselves at the same area once again here. So one area to watch to the upside may be this intraday spike that took us above 710, or perhaps for the gap to be filled here near about 741. Meanwhile, to the downside, our green lines here, 620, another gap level, another moment of support before a breakdown here, and around where we solidified after a push to the upside once more. White upward sloping trend line is still in play as well. Again, a rather steep, sharp trend line here. The sharper a trend line, the less sustainable it typically is here, but that doesn't mean there's a time limit on it. Just a general point of consideration to make. So now we can see a different picture for our moving averages here. In this case, now we're seeing price crossing above all of our 4 moving averages in pretty quick succession here during the past couple trading weeks. Most notably yesterday, a strong close above the 250 one-day EMA in orange. That one presently comes in right around 646 right now, so that's a notable downside level to watch for potential support. It also coincides with our 5-day short-term EMA, also roughly with that trend line too, so a bit of a confluence there to watch out for. RSI on the move to the upside here, but a little bit shy still of that 70 threshold that would represent the overbought area. But again, like our last chart, downward sloping trend line on the RSI has been broken. We also managed to make our way out of that oversold area here. So across into the overbought area, along with price making new relative highs in tandem, would be what the bulls would want to see in general. So now finally, our volume profile study shows that we have our point of control here near about 657 or so. We are managing to stay above that level. A bit of a gulf in this area here, and then things start to pick up again from 700 to about 720.
Good stuff. Rick Ducat, lead market technician for the Schwab Network, breaking down to the big movers over the last few years, but tied together today. As we look at an example quickly here in Meta Platforms, looking for a test of 700. So many things converging at that point: volume nodes, trend lines, etc. Even if this is just a counter trend rally, 700 could be a target. And so, looking at
how do you know it's a counter trend?
Spread, looking for that to happen, perhaps by next.
That's enough.
Call butterfly with $10 wings, so 690, 700, 710. Looking to spend $1, you risk $100, chance to make 900.
Butterfly.
Break evens at 691 and 709. So need a move up to that point, and it's another one. The closer you are to that short strike, the better. Thanks again to Rick. We're going to take a short break. When we get back, time for FOMO, and today Bank of America is the topic of discussion. Marley Caden will join us, and we'll discuss BAC right after this.
For instant reactions, earnings breakdowns, and hot takes that teach you about stocks and markets, follow me on X at @NPetalides and connect with me, Nicole Petalides, on LinkedIn, Facebook, and Instagram.
Stay connected to what moves markets. Download the Schwab Network app and get live coverage wherever you are.
Oak.
Hey, Bob. Hey, Andrew. Last year, my dad had a stroke. Big shock to see this person that I've always seen as a force in our family be vulnerable.
Wait, had a stroke?
Yes. Now we're in the car together almost daily. I started to realize, what can I pick up from my dad? He's been with Schwab for a long time.
Jim, my financial consultant. I probably met 20 years ago.
Jim's really been there to answer any questions I ever have. Makes a huge difference when you have someone that actually cares.
Welcome back to Next Gen Investing. I'm Alex Coffey, now joined by host for the Schwab Network, Marley Caden, for our FOMO segment. And today we're discussing Bank of America, BAC, the ticker. Now, financials, they don't elicit oftentimes this FOMO feeling, but the moves that they've, some of them have had maybe do. Nice little rally here for Bank of America, up about 2%.
Yeah, they've almost completely erased their losses year to date with this move to the upside on some good numbers. I mean, comparable numbers to some of the others we've seen from the big banks reporting. But let's walk through these numbers and we'll draw some correlations here from the other banks that we've seen already. Their first quarter profit and revenue rose more than expected. They had strength in similar areas.
Rose more than
expected,
expected,
particularly in their trading businesses. Earnings were up about 17% to $1.11 per share. That was about a dime better than the estimate. Also, its highest EPS in almost 2 decades. Revenue was up more than 7% to $30.43 billion. That was also better than expected, of course, boosted by that higher trading revenue, fees from investment banking, and also asset management and rising net interest income numbers. Now, their equities business saw their revenue soar 30%. That went up to about $2.83 billion, Alex. That topped estimates, helped drive their trading operations to its best quarter in about 15 years for the bank. Of course, a lot of that tied to the recent volatility with the Iran conflict, which is not something that we haven't seen from the other banks that have reported as well. In terms of global markets, revenue up 8%. Sales and trading revenue surged 13%. That was to a record $6.4 billion. Revenue for fixed income, though, was up 2% to $3.5 billion. But like rival Goldman Sachs, they also had a slight miss. That did come in below expectations by about $330 million there for fixed income, which is a different picture than what we got from Citigroup. So some differences.
And Morgan Stanley.
And from Morgan Stanley as well. Also, they cited an easier regulatory environment to help boost their merger and acquisition activity, a 21% increase in investment banking fees as well. An important metric for them, B of A is the second largest lender in our country. They saw their net interest income increase about 9% to $15.9 billion. That beat expectations. They say that was due to higher loan and deposit balances, fixed rate asset repricing, and markets activity.
Perfect.
Also important, they projected that their net interest income growth would be between 5 and 7% this year. They upped that today, now saying it'll be between 6 and 8% due to that outperformance that they saw in the first quarter. Also important, their borrowers don't seem to be struggling. They posted a $1.3 billion provision for credit losses in the quarter. That was lower than the $1.5 billion provision in the year earlier period, and also about $190 million below estimates. Brian Moynihan went on to say that, of course, they are watching risks, but they, quote, saw healthy client activity, including solid consumer spending and stable asset quality, indicating a resilient American economy. So a bit of a tone change from...
That's who was on CNBC calling for a pullback. He says, well, if not this year, it'll be 2027. And then right after that, the other guy gets on and says, we're going to have a big breakout the year of 2027. So you listen to them, man, you're hot. My name's Washboardjim. I've got a crush on you. I noticed you didn't have a ring on. Alex, I got a crush on you too. But I know you're married. Ain't he cute? SPY didn't move much on that big jump. 5 cents. Well, we're at the 9. We just had a new high on the SPY. Tweezer, not a tweezer top, but close. I'm watching SPY. I should be watching and going in the next day, so let's get rid of that. The 16th. The 700 strike. 89 cents. Ha ha ha. It's the SPY, don't cry at all.
by calls. I went to 96 there for a second. This will be January, February, March, April. April 16th. $700 strike. Yeah. 98 cents. Gotta hold the 21, or I get out, because that 690, the 63 would be next. Oh. $91.
Let's go for a walk. Let's go for a ride.
Dinners for the week. Ribeye steaks, drumsticks.
I'm pescatarian now.
Atlantic salmon, Mediterranean herb salmon.
I thought you were a Capricorn.
Shop Aldi first and cover your week for less. It's an Aldi thing.
Once weekly Manjaro.
$0.89.
Jerusalem, ikayalami, ilondoloze, uhambe nami, zungangishila. Jerusalem, ikayalami, ilondoloze, uhambe nami, zungangishila.
Green black goes up to 63.
Dawo yami ayikholana, buso wami awukholana, ilondoloze, zuhambe nami. Dawo yami ayikholana, buso wami awukholana, ilondoloze.
Let's bounce. I used to be a big dancer when I was a liberal.
a conservative, I still love to dance. Break out. Do it for me. I'm off the 63 on the 1 minute. Inverted hammer and a hammer.
Jerusalem, ikayalami, ilondoloze, uhambe nami, zungangishilana. Jerusalem, ikayalami, ilondoloze, uhambe nami.
Break it. Break it for me, yeah.
Dawo yami ayikholana, buso wami awukholana.
And 93.5 average. I'm in the green.
Ayikholana, buso wami awukholana.
93.5. Let's break out to a double top or head and shoulders. We're at the head and What happened there? I lose my... Don't say. The 7 strike. What the heck happened here?
Jerusalem, ikayalami, ilondoloze, uhambe nami, zungangishilana. Jerusalem,
I'm at 97.
ikayalami,
I'm up 60 bucks.
uhambe nami,
We're above the 21 now.
dawo yami ayikholana, buso wami
Hammer and a hammer. Ooh, I don't want to see that. Fake out. That was a fake out. It sure was. Oh, that wasn't. We're at 96. Give me 104.
Wondering if you're in line for a tax refund this year? We'll show you how our free tax calculator can quickly answer that for you. Our free refund tax calculator
Jerusalema, ikhaya lami, ilondoloze, uhambe nami, zungangishilana. Jerusalema, ikhaya lami, ilondoloze, uhambe nami, zungangishilana.
Apparently you think it's going to run out of steam. Come on, baby. Big breakout. This is a bull flag. Snake, breakout. Pull back. Oh, yeah. Oh, come on. If I'd have bought that dip, I'd have been smart.
Ayikholana buso wami awukholana ilondoloze zuhambe nami dawo yami ayikholana buso wami awukholana ilondoloze zuhambe nami. Jerusalema, ikhaya lami.
There we go, yeah. I'm at 98 cents. I'm getting somewhere with this trade now. I got, probably too much in it. So I think it'll be a very big percent, but I could get out. The question was asked, do you see the head and shoulders? It's right there. It's right there. There we go, baby. You can do it. Take your profit, okay? Can I get 102? Can I get 102? There it is. Snatch her up. 102, yeah. Trading stocks and warming up on my singing, man. You can't beat it. Jimmy's gonna cry. I hit my shoulder line, so I got out of the trade. I don't want to trade no more. I don't want to trade no more. I don't want to trade no more.
Jerusalema, ikhaya lami.
You're an animal.
Uhambe nami, zungangishilana. Jerusalema, ikhaya lami. awukholana buso wami awukholana ilondoloze zuhambe nami dawo yami ayikholana buso wami awukholana ilondoloze zuhambe nami ilondoloze 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 zungangishilana.
Okay. So this trade was a snake breakout pullback. We had these two candles right here. It's a long leg doji and a hammer. The wicks are on the bottom, so it kind of gives you some kind of insurance, maybe that it's bullish. And it comes right after 3 black crows. Then it took it up to the shoulder line of the Head and Shoulders. Today, I don't want to brag, but 6 for 6. I was kind of going after what I said yesterday. You've got to be mentally ready and sharp. So I switched. This ain't a lotto. This is tomorrow on the 16th. So when the clock strikes 12, I switch over to the next day. That'll be 1 Eastern time. Because if I took that probably in the same day after lunch, I probably wouldn't have been able to recover. So extending that over to the next day, I think gives you better odds. You won't get a big loss. That's where I went to college. State Fair Community College. Always Clean LLC and a full-time trader. This used to be my website, Watchdog Watch. But I don't think it's not around anymore. Let's see if AI knows anything about it. Huh. How dare you? Washington Trust Bank, don't be telling my secrets. My search didn't return any results for Watchdog Watch specifically. Nope, there's nothing about me on here. Here we go. Watchdog Watch. This seems to refer to watchdogwatch.com, an older site linked to Washboardjim. Real name associated with is James Howard, day trader and business owner in Springfield, Missouri. He ran a cleaning business, Always Clean LLC, along retail trading, education, strategy, content, sneaky snake trading approach. The domain was mentioned in his Lincoln, an old social post from 2013 to 2015, but it doesn't appear to be active major platform today. It was like a personal trading blog or watch list resources rather than the mainstream stock watching tool, which we did have a tool, a real nice one, really. If we just stuck it out, I think we could have been rich, because we had everything on this. Another knife to the 200. Oh, God, take your eyes off of it. Come on. Fuck. Oh. Little late. Little late. Oh. Oh. Late for dinner date. Late to take the trade. Late for dinner date. I am always late. So I was watching the stock and it came to the 200 SMA. Again I was late. I watched it bounce off a tweezer bottom. Oh, I was late. Late for dinner date. Don't sound great. Why are you always late for a very important date? I always call on Wednesday to find that I was late for my date. That was a beautiful trade if I would have took it. I was late for a very important date. I was late. They're up 20 cents a contract. Damn it, I missed that trade. Late for a very important date. Boom, 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 boom. Okay, that hurt. I was late day. Did you see the spy? The 200 SMA? We're at a double top of resistance. I was late for a very important date. Important date. Late for a very important date. I was late for a very important date. Damn it, look at it go. Watch it go. $27 a contract times 10. Again, I was late for a very important date. It hit a double top. It hit a double top. Well, that was a good idea right there. Just a little bit too late, and I could have still got 10 cents out of it. Or maybe more. But these things now, if I'd have stayed in them, they're at 116, 118, 119. Instead of 200, it'd been 400. Jimmy crack corn and I don't care. Always clean, this Jim. May I help you?
Hello.
Yeah, what's up?
Good afternoon. This is Chloe.
Chloe?
Your Medicare record triggered a state-level review flag, and these can impact benefits if not resolved. You have parts A and B, right?
I don't believe you.
I'm sorry, it looks like you don't meet the eligibility criteria for our benefit plans.
No, because you lied to me. Red flag, who are you to red flag me? Do you know who I am? Psycho Jim. How does she know? If it ain't trying to sell me a coffin or trying to sell me something. You're eligible for a gold-plated coffin. Are you on Medicare Part A and B? Looks like you hit a red flag. You're making too much money. Woo! I've been red flagged. I heard today that the IRS is going to have AI. Going to be able to pick you out and audit you, a computer. They're down 30,000 employees. They're up to 70,000. They were at 100. Man, I just missed this by a few seconds. I mean, I would have took that trade. No, it hit the VWAP. Oh, it hit the 200. Never mind. The other one hit the VWAP. Where in the fuck is my ass today? I didn't notice the VWAP on that other one I took. Well, I think I'm getting burned out. Oh, yes. Oh, yes. Mm-hmm. It keeps going. No. Come here. I missed it, Randy. Very nice tune. Damn gum. I just keep going. It just keeps going. You know, what's wrong with you, man? New highs. Just beautiful. I think I have the best moving averages out there right now. I really do. I've not used the 5. I wonder if the 5 would be better than the 9. I'm not sure. Because the 9 catches the dip a little better. So I stick with the 9. Now the 15 might. Golly, stop it. Rub it in, rub it in. I'm so frickin' mad. Oh, you piece of... Okay. It's time for an education here. Oh, this is perfect. Your body reacts before thought. That's true. As a boxer and a baseball player, sometimes you don't have time to think. The nervous system can trigger reactions before your conscious mind catches up. If you touch something hot, your hand pulls away, though a spinal reflex before your brain even registers the pain. Your body often makes decisions in milliseconds to protect you. Your body reacts before thought. Poop to learn. You lose weight. You lose height at night. Throughout the day, gravity compresses the disc between your spinal vertebrae. By evening, you are slightly shorter than in the morning. When you lie down and sleep, the pressure lifts and your spine returns to full length. The difference is small but measurable. You lose height at night. And I've done sweat already. Poop to learn. Everybody should have a poop book by their toilet. Was anybody watching the 200 SMA on the SPX on the 1 minute time frame? Yes or no answer? You think some news is leaking out? Well, the Iranians think they can open up another port. I don't know if that's good news or not. They say it's in the contract. Are we that freaking stupid? I don't think Trump wants to starve them to death, but I don't think so. It'll be over before you know it. We're at the 21 right now. $121. Man, I'm tired. Had a long night last night. In the rain. Oh, I erased. Doo-doo-doo-doo. Still sitting here, so I'm going to go over my watch list. Put this chart up somewhere I can see it just in case. Tesla trying to squeeze again. We just got a new high on SPX. New high on SPX, new high on SPY. SPY's at 138. The 700 strikes. 139. God. Well, I'm just sitting here watching. I'm not normal. They're at 154 now. That's 20 cents. 130. So if I'd have held that, that'd have been $1,200 trade. The 93.55. Okay, well, it's hard to watch them run like that. I mean, it kind of, if I wanted to get a put, the 21 would be my guess. Man, I'm so tired. Dow Jones down 100, NASDAQ up 274. Technology up today. Consumer discretionaries up today. Consumer staples is down. Real estate down, utilities are down, industry down, materials are down. Financials are up, energy's up, banks have done well, healthcare down. Mega cap tech. Microsoft being the winner. Meta in second place. Miss Peppolini. Yummy, yummy. Coin is up. Resistance on Google. Ooh. Don't cut it.
Sometimes, you know, you could have done better. Same goes for where you invest. Level up and invest smarter with Schwab.
Real-time market moves, earnings breakdowns,
I like how she says,
trade-ready insights. Follow me on X at Sam_Vardis and connect with me on LinkedIn or Instagram for more.
Oh.
Trading at Schwab is powered by Ameritrade, unlocking the power of Thinkorswim, the award-winning trading platforms. Bring your trades into focus on Thinkorswim desktop with robust charting and analysis tools, including over 400 technical studies. Tailor the platforms to your unique needs with nearly endless customization, and track market trends with up-to-the-minute news and insights.
Welcome back to the Watch List. I'm Nicole Petalides. We're coming to you live on the floor of the New York Stock Exchange. Want to take a look at the sectors that are moving, and you got to note these because Kevin Hanks is joining me to take a look at some of the overall takeaways. Good afternoon to you there at the CBOE, Kevin Hanks. Some of your thoughts.
You know, today's trade has really been a resumption of the leadership of the market taking the leadership again. Throughout the day, there were 4 sectors of the 11 that were only higher. Now there's 5 as energy has crept into the green. But it was information technology and the software space that was within that information technology very strong. Then it was communication services led by Google, Alphabet, Meta. Then it was consumer discretionary, Tesla, up almost 7% as we get through the day. So this is the leadership. Those 3 key sectors of the S&P 500. Throw in financials that are up over 1%, and you've got a market that is, the leadership has really taken it. I
Here's
think
the 21.
that's why we were able to get to all-time highs
it.
and create new all-time highs, Nicole. It's the stocks that everyone wants to be in that frankly have been beat up that are now leading the market higher.
You know, you mentioned Tesla, and I was covering Tesla last week and this week, and look, it's having an incredible day today. It's having its best day of this year, its best day since June of 2025.
So full of crap. These guys
it was only
good.
yesterday that I was here on TV talking about that the analysts were looking at it and saying, look, Tesla really runs on sentiment
They're not making
and
any
momentum,
money. They're
and
spending
there was a
too
lot
much.
of positive comments on Tesla in the big picture, and while maybe there'd been some
Just so
slow
they could get the
progress when it
stock
came
down
to the
so they could buy it.
robo-taxis and Optimus, there were some bets
You understand?
that in the future Tesla had
This
that
was
in a
all
good space.
premeditated.
So it was really interesting to see it. I mean, I don't know
No
what
matter
happened to that
what
cheaper,
president
shorter
or what event,
SUV model. We got some rumblings
had to
about
pull
that.
back.
I didn't really hear that. But you do have like a
stated it
$352
year after
price
year
target.
after
The
year
analysts
after
mostly have
year on
buy
the yearly
ratings
time frame.
and a
It was a
405 target on
no-brainer.
this name, even though JP Morgan is concerned about inventory and has a
It was a
141.
no-brainer.
So they're on the low end.
If
But the
Kamala was
analysts
president, it was still would have pulled
have
back.
a $405 target on Tesla.
If Obama
Any
was
thoughts on some of the
president,
other
it still
Mag
would
7
pull
names?
back. If Abraham Lincoln was president,
when you
it
look
still
at
would pull back.
The other things that really jump out at you within information technology is that
It
software.
had nothing to do with Trump
Microsoft,
syndrome.
Oracle,
Trump syndrome
Palantir,
was an excuse for it to pull
Salesforce,
back.
AppLovin, Palo Alto Networks, and CrowdStrike. This is a big
gave him the
part
perfect
of the S&P
excuse.
500 that's been heavy for weeks and weeks that is really bouncing back.
It doesn't
As
matter.
You know, Microsoft,
I'm
the
telling you,
biggest
I'm being honest with you.
square in that software
I'm always
sector, up
honest with you, but
another
I'm being-
5% today, just on a
That's
big
not honest.
run
I'm
here. So ahead of
I'm being
large
solid
cap
with
tech
you, man.
earnings, all these large cap tech are
I'm
starting
throwing
to
a solid
recover
at you.
into the earnings events, Nicole.
Yeah, and Broadcom higher by 3.2% as has expanded the Meta partnership for the
If I was
chips
president,
there, and so that
I'm
is
not sure it
also a
would've pulled
winner
back.
there. Kevin Hanks, thank you so much. Great to see you. Appreciate it. Let's take a look at the memory stocks. They've been one of the biggest market movers so far in 2026. You think
'Cause I
about
would've
Western
legalized
Digital,
strippers.
Seagate, SanDisk. They're all up more than 80% this year. SanDisk now is scoring a gain of more than 270%. I mean, you got
If
to
you know
check
what I
these
mean.
names out. I know we may have some down arrows here today, but what are the ETFs to watch when it comes to this sector? What do you need to know? Dave Mazza, Chief Executive Officer at Roundhill Investments, is with me now. And so many of the analysts had come on over the last month. They loved this group.
You think we need a triple bottom?
You know, SanDisk, Seagate, also Western Dig as some top picks.
What do strippers mean?
What's going on here?
Well, it's interesting. Of course, we've been following the AI trade and how that's evolved, but really where it's evolved to is where's the true bottleneck? And it turns out the bottleneck is actually in memory. So as each generation of
thing at a
GPU,
bar,
these AI chips get more and more advanced.
where a
they
woman
need
gets
more
up
and more
on
memory.
stage and dances
And
for you.
it's sort of like a restaurant. I think about the GPUs, the NVIDIA chips, maybe
You understand
AMD
that, Randy?
chips as the head chef, but you need the ingredients to come from somewhere. And memory is essentially where those ingredients come from. So these large language models are demanding more and more memory. And right now there's a massive shortage. There's an incredible amount of demand that has come
Randy
to market
knows.
with really reduced supply because only 3 companies globally, Micron, SanDisk, and SJ Hynix, make these memory chips. Throw in a few of the companies like you mentioned, SanDisk, Seagate, Western Digital, making storage chips. That's all needed for the AI build out. And to date, there really wasn't an ability for investors to access them in a pure play way, which is one of the reasons why we launched the Roundhill Memory ETF DRAM on April 2nd.
Yeah, it makes sense.
Well,
I mean,
we're all-time
really,
high.
think about the AI strengthening that we're seeing, the surging global demand, and really demand outpacing supply, right?
Yeah, exactly. So memory chips have historically been very, very cyclical. They're really treated as a commodity. So investors have seen these boom and bust cycles.
Wash my
Most recently in
glasses.
2018, we saw the same
Put up
thing where
my
there was incredible
bean
earnings
dip.
growth from these companies, but eventually actually that supply met up with the increase in demand that we saw then. This time around, and of course it's dangerous to say this time is different, but what's changed is actually the persistency of the demand coming from AI, coming from data center buildouts and the large language models. So that's actually changed the dynamic of how these memory chips work. But actually, memory chips are everywhere. They're in your smartphones, they're in your cars, they're in your connected TVs, a connected refrigerator if you have that. So it's something that actually is used in a lot more places than people realize. But the big change has been this demand spike that we've seen from AI.
I mean, also the run-up that we've seen, and we're waiting to hear earnings on these names too. What do you think we'll hear in the earnings reports?
Well, I think what we're going to see is actually probably incredible demand and incredible revenue growth and improved margins for these companies. This is one of the reasons why this trade has had some controversy. Of course, we saw the huge run-up. And then a few weeks ago, people latched onto news about Alphabet's new offering there that supposedly reduces the need for memory coming from their large language models. But what was missing with that actually is that that's really only one piece of it. And there's still sort of a need for demand here and now. So in 2026, even into 2027, there's going to remain a massive shortage of these chips. And with the build out of data centers that we're seeing, the demand is actually, we believe, going to be significantly more repeatable and durable than what we've had historically.
So what's the pound the table buy here?
Yeah, well, again, what we've seen actually, interestingly, since we've launched the DRAM ETF, actually ETF has seen a significant amount of inflows. Is actually now over $700 million in AUM in less than 10 days, actually 8 days to be exact. So investors are really latching onto this. Samsung, SJ Hynix, very, very difficult for U.S. investors to access because right now there's no ADRs for them. So there's not a great proxy to get into those names. Investors have turned toward Micron, SanDisk, Western Digital as well. But really what's the benefit of DRAM is it provides you precise exposure to the main companies involved in memory and storage with nothing else. So if you were to try to access this with a broader semiconductor ETF, you might get a little bit of Micron, but really nothing else that's related to memory. When we think about the memory trade within semiconductors, it's actually very distinct, which is why I think investors have really gravitated toward DRAM in a short period of time.
Dave Mazza, Chief Executive Officer, Round Hill Investments. Thank you so much. This is the Nasdaq's up 11 days in a row. What a win streak, and really a big gainer as well. Okay, coming up, we're going to take a look at some outsized trades. Watching these in the market. Real options trades for Nike, also ServiceNow, and Lam Research. The watch list will be right back.
To the sea. Off a falling wedge from yesterday.
From earnings shocks to sector rotations, we're tracking the catalysts that move markets right into the close.
Here on the floor, I bring you real-time sentiment from traders driving the action.
And in Chicago, we break down the data, technicals, and trades you need to see before the bell rings.
Live coverage of the close every single day. This is Market on Close, live weekdays 3 p.m. Eastern, only on Schwab Network.
Opportunities don't stop when the market day ends. So neither do we. Schwab gives you round-the-clock access to over 1,100 of the most popular stocks and ETFs, plus a wide variety of futures markets. All with 24-hour support from trading specialists who understand the ins and outs of 24-hour trading. No matter the hour.
Hey, investors, you know the market moves, and Schwab is here to help you move with it. So, whether you're buying, selling, holding, or planning, whether you're ETFing or 401k'ing, saving, spending, or even retiring, you can count on Schwab for market insights, live support, powerful trading platforms, and 400 branches. All at your service, all so you can invest your way. Sounds nice, right?
I'm Sam Vardis, live from the New York Stock Exchange. When the market moves, we're on it. Getting the reaction, the strategy, and sentiment in real time.
I had the wrong, I wonder where that thing was
Schwab
red.
Network at schwabnetwork.com.
Well, let's leave that bounce off to 21. Man, I'm not paying attention.
Welcome back to the watch list on a record-setting day here on Wall Street. We are
I
live
called
on
that
the floor
out
of
too
the New
and
York
didn't take
Stock Exchange, and we want to take a look at highlight outsized options trades that are taking place in the market today that you need to see. Tom White is with us now to really explain these, and we take a look at Nike, which
15,
obviously
16.
has had some tough press over time, but
If
you
I
did
held that
find
call this
a
morning.
bullish trade, and we want to hear a little bit about this story.
Yeah, it's been under pressure for more than a little time. About 12-year lows that the stock is just bouncing off today. Stock's up over 3%, still off about 28% so far this year. So it's been a falling knife for the last couple of years.
I know what I'm going to do.
CEO Elliott Hill trying to spin this company around, and it seems like thorn in their side's been China. North American sales starting to pick up a little bit. Converse brand has really been a drag on this company. So a lot of bad things happening as far as earnings goes and results for Nike. We did see some activity from the CEO, bought 23,000 shares, just over $1 million, and then one of the directors, Timothy Cookhill, he bought just $1.06 million worth of stock also, and this was after the close yesterday. I think that's why you're seeing this pop today. Trying to pick up these shares. And option traders in full force today. Call volumes double normal daily average volume that we've seen over the last 5 trading sessions. Not surprisingly, we've got about 190,000 calls trading on the day. So a lot of activity in there. Saw some short-term positioning from traders really early this morning near the open. And this was out in the April 17th. Monthly options that expire in 2 days. Trader bought over 10,000 of those. Paid an average debit of only 31 cents on these short-term call purchases. So the break-even of 46.31 over the next 2 days. That's not too far above the current share price in here. This trade's already working out pretty well, but not surprising. We're seeing a lot of call flows here in Nike today on an up day.
Yeah, understood. All right. And then, I'm looking, I can't get over what's going on with Tesla because I see the A15 chip. Just now, is Tesla a chip company? I mean, we're going to have to keep following Tesla in the next few days. In the meantime, let's get to a name like ServiceNow. The stock hit 3-year lows last week. Some of your thoughts about the bearish trade you found?
Yeah, up about 7% today, 13% this
Morgan,
week. We're seeing
Home
a little bit
Depot,
of rebound, maybe a little bit of bottom
TSM.
feeding in some of these software names.
TSM's
but
down.
the stock is still off
It had
about
a good
60% from those all-time highs that we saw in January of 2025. So it's been under pressure. The SaaSpocalypse taking a hold of some of these companies. And if you look at their last couple of earnings events, hey, they're still growing at plus 20% clip year over year, but everybody's talking about what AI is going to do to their businesses moving forward. Can you just manufacture a lot of the products in-house? And that's going to be a concern. Citi lowered the price target to 177 from 237.
I didn't know that thing was on.
5 earlier today, but they keep buy ratings on the stock. But we did see some unusual option activity in here, and this was to the bearish side. This was out in the November 20th, the monthly options that expire in about 219 days. Trader bought over 9,000 of the 65 strike puts, way out of the money to the downside.
What?
Paid an average debit of about $5.11 per put. So that takes a break even where this trader starts to profits below 59.89 to the downside. And that's about 36% below
They've
the
been
current
pumping
share
now
price.
for a bit.
This trader did sell out of a long position that they had in the August monthly options on the 90 strike puts that had been really working out pretty well in that position. So they reset their position. They went out in duration on this one. And as you mentioned, this stock is just off the 3-year lows on this rebound, 13% rebound that we've seen. But somebody believes maybe that we're going to see some more downside in service now, even after this massive slide over the last year.
All right, and last but not least, I'm taking a look here at Lam Research. It did hit an all-time high, 273 and change, right? So it's up 285% in 1 year. So, as we take a look at this name, what do you think? You did find a bearish trade now.
Yeah, it's getting hit probably on the back of that ASML report that came out. Margins weren't as good as the market anticipated. So that's dragging down all the semi-equipment makers. And Lam Research, as you mentioned, had a great year so far, up 52%, up 284% over the last year. Deutsche Bank raised their price target to 300 from 290 on the stock today, but getting dragged down by the semi-equipment makers after ASML's report. And we did see some bearish activity in here also, and this was out in the June monthly cycle. So 64 days to expiration. A trader bought over 12,000 of the 240 strike
now
puts.
Is that a resistance?
Paid an average debit, pretty hefty, $16.80 per put. So that takes the break even where this trader starts to profit is below 223.20 to the downside over the next 2 months. That's 14% below the current share price in there. You're going to have an earnings event taking place. That might be a catalyst also. And they did sell out of a long position that they had in May and reset here, and the 240 puts in June they're buying.
All right, thank you, Tom White. A good look there, big moves. And thank you, friends, for being with me here on the watch list every single day. A record high, we got as high as 7,019 on the S&P 500. I'm Nicole Petalides. Market on Close next.
Schwab Bank Investor Checking, the checking account built for investors. Named highest in client satisfaction by J.D. Power for 7 years in a row. With Investor Checking, you get the award-winning features of our checking account, plus cash management solutions, all designed for investors like you. With unlimited ATM fee rebates for cash withdrawals worldwide.
Randy,
no
we're
overdraft
skipping it
fees,
here. This ain't
and
right.
enhanced security features to keep your money safe. Also,
Golly.
because your investor checking account is linked to your Schwab One brokerage account, you can manage your
I hate
checking
missing
and
runs like
investing
this.
in one convenient location. Moving funds between your accounts is easy. Cash moved to your brokerage account is available in seconds. That means you can stop waiting and start investing in stocks, bonds, money market funds, and more. Get more.
Oh, gosh.
Thanksgiving rolls in like an EMA. A time to sit back, be thankful for this day. We've done our work, we've made our climb, counting wins in a special time. With every trade, with every win, we built a circle thanks to Washboardjim. Harvest of gains. Thanksgiving rolls in like an EMA. A time to sit back, be thankful for this day. We've done our work, we've made our climb, counting wins in a special time. With every trade, with every win, we built a circle thanks to Washboardjim. Harvest of gains, we all rise, grateful hearts, clear blue skies. Together we've grown, accounts aligned, a thankful crew, one of a kind. Oh, yeah. Stocks and laughter, two worlds collide. Who'd have thought we'd grow and hit our stride? Charts and patterns, they tell a tale. But it's the fun we have, the holy grail. Pass the pie, pass the cheer. We're thankful for this wild, good year. Trading dreams, growing strong in this community. We all belong, harvest of gains. We all rise, grateful hearts, clear blue skies. Together we've grown, accounts aligned, a thankful crew, one of a kind. Harvest of gains, we all rise, grateful hearts, clear blue skies. Together we've grown, accounts aligned, a thankful crew, one of a kind.
Well, that'd have been about a $2,000 trade there if I'd have held that baby. It's now post power hour, and I gotta get my water.
Democrats file articles of impeachment against Hegseth. I mean, what is wrong with these people? I just think they're dumber than shit. We need to start paying them back, that's for sure. We got new high 196. Hedgefish sharing the details about U.S. military operations in Hinman in a private signal chat. No. If they're blaming him for it, they've probably done it themselves over and over again. We're getting tight on the squeeze here. I'm thinking put. I'm going to give it a shot. SPX, I'm going big. 70-20. $1, one contract at 420. Might be a risky trade here. Yeah. Oh, that's not the one I wanted to post. We're at $4.20. Jim, you're up $10 a contract. You're up 20. Have you ever thought about selling? Yes. Jim's taking a power hour put. He's risking the biscuit. No, no. No.
Watch it go up over to new high.
Oh. Randy. Oh. 450, then it goes to 420, just like. Jim, you're up $30. Well, I'm going to take me a nap. Feel like taking one right now. I want to see something here. Come on, drop that 21. Number 5, let's take a nosedive. 70.15, come on. I'll be your Huckleberry. Come on. I'll be your Huckleberry. Jim, you're up $40 a contract. Have you ever thought about selling? You're up 50. Have you ever thought about selling? No. Now, Randy, $5.50, Randy. I don't know how he do it. $5.50. Right there, buddy. How's he do it? Randy's shocked. Who's the master trader, Randy? Who's the best trader you know? $5.60. Damn, how you do it? Do you know what a megaphone pattern is? I do. I do. Now, I didn't point that out. But let me show you a trick. Right to the 50, baby. That's called a rising megaphone. One, two, three, boom. 1, 2, 3, 4, 5. Take a nosedive. 1 bits, 2 bits, 3 bits. 1, 2, 3, 4, 5. Nosedive. $5.70. Are you 80? Okay. Calm down, Jim.
We believe in early starts and the spirit to find your own way.
Yeah, 580. Yeah. I'm playing songs I haven't heard in 45 years. Well, I got that one. That was a good one. I think I've... Not a bad day. Trump just reset the global order deal with China, shocks Iran. Probably has to do with oil. They're pumping now, that's for sure. $7 more on Nike. Whew. I'm almost back to the bottom of the megaphone. It was a stubborn morning, but ended up being a great day. Look at that /ES off the VWAP right there on the right. That pink line. Ah, Randy. Oh.
President Trump just pulled.
While our nation's best are giving their.
Yeah. Spy's still looking good. $2 on the 700 strike. Now that looks gross. Fried
What the hell is this guy making here? What is that? Oh, like a romaine lettuce? Fried grilled romaine lettuce? Are you kidding me? Oh, God. That might be cabbage. Cabbage makes sense. Ugh. Look at that, guys. What the fuck's he? Why ain't he wearing gloves? Look how dirty them nails are. I was watching a pizza shop guy on YouTube, and I messaged, I said, why ain't anybody got any hats on? I mean, you got some hairy hippies in there making pizza. And we don't need them out here in this state. About a week later, I'm watching them, and they're all wearing hats. I don't care if you don't need to wear them or not. Just, I don't want no hair in my pizza, baby. $2.09 now on them. Oh man. They're hymns.
Damn. Double top on hymns. Today's tax day, the 15th. I'm going to pay my quarterly taxes today, this month. Tips and overtime don't get taxed this year. You should get about an average of 11% more back on your tax money. I thought I was never going to get mine back. Took about a month.
That if it doesn't go and blow past the expectation, a little bit of a
what to expect from Netflix earnings.
But at the end of the day, this is still just Q1, so there's also a lot of opportunity, I think, for Netflix to go and then beat in Q2 and looking forward to. So again, I think that, yeah, there's a possibility that it might not go and satiate their desire for something stronger. But again, lots of opportunity, I think, for the company to continue to kind of make improvements here. There's a lot of things that the company has been engaged in to try to continue to grow that subscriber count base, whether it's, again, we've talked about this in the past,
Netflix
they're
is
investing
tomorrow.
in live sports and entertainment more broadly speaking. Now they also recently announced that they're doing a kids platform for mini games for kids 8 and under. So that way they can try to get more family investment into the platform more broadly speaking. That's to make them more competitive against their competitors in this space like Disney Plus, let's say, for example. So there's a lot of things I think that hopefully should go and keep investors optimistic more broadly speaking when we're looking to what the prospects are in the future.
Right, I know a big focus for this name, particularly as another opportunity to take a leg higher, particularly in the stock, is certainly around the live events and sports, as you mentioned. What are they likely to show on that front as far as further investments they're making in that space?
Yeah, I think that that's something that we're going to have to continue to monitor. I think the most interesting inflection point that we have yet to go and see here is how Netflix is going to interact with the NFL. We know that they've gotten some special games like in the past, but as the NFL continues exploring how it's going to handle its renegotiation of contracts with the various providers, here where Netflix might go and try to lob off a couple more games. If the NFL does go and commit to expanding to an 18-game season, that also means that's more content up for grabs for a streaming platform like Netflix potentially to go and fill the gap here. So the NFL is the crown jewel of all sports, so I'd say that that's probably the biggest live sporting event that we're going to want to go and continue to look at. F1, the World Cup, the Olympics, these things are all very popular, and I think Netflix is going to try to continue to find ways where they can go and engage in these spaces further.
And James, where are you most focused this quarter? You did mention it's just the first quarter, but what metric do you think is going to be most important here? Is it the revenue number? Is it subscriber growth? Is it margins? Is it content spend?
Yeah, I think the big thing that I'm interested in monitoring to see what's going to drive it primarily, it's not going to be about subscribers really anymore, because I think that they obviously have such a massive subscriber base that really the numbers, they are just going to be an accounting error almost in terms of the rounding that's going to be happening there. But really, I think the crown jewel of like their ability to kind of improve here is going to rely on their ability to secure, as we were just talking about for the live sports and entertainment, what kinds of deals can they go and get there from the other sports leagues, one. And then two, what are they doing on the advertising front to go and continue to grow out that portfolio and library, so that way they can get more money into the company to go and invest in then that content production side that you just mentioned, Marley. So I think that really it's a cyclical thing where they kind of are equally feeding into one another.
All right, well, James, we really appreciate you being with us to break down that preview on Netflix. We'll have those numbers live on the show tomorrow, of course, but appreciate you being with us to take a closer look in advance. James Chernowski from the Consumer Choice Center. Coming up next, we've got Options Corner. Rick Ducat will be joining us here in our Chicago studio to take a look at the options activity on Oracle as it continues to rise. Shares now gain 20% so far just this week. That's next on Market on Close.
Kick off the morning with the data and the decisions moving markets. Morning Trade Live breaks down the macro moves driving the price action, from Fed policy to global growth to inflation prints and geopolitical risk. Smart, fast and always live from Wall Street to your screen. Morning Trade Live, where the markets meet the macro, weekdays at 10 a.m. Eastern on Schwab Network.
Whether you're an experienced investor or just getting started, Charles Schwab offers a webcast that's right for you. Do you like using charts when analyzing your stocks? Our technical analysis webcast series breaks down different charting techniques like trend analysis, price patterns, moving averages,
and being in the now.
And much more. Best of all, you can ask questions directly to an education coach. It's interactive learning at its finest. Tune in live or on demand. Head over to schwab.com/coaching.
How about not tuning in at all? You like that? So tomorrow, YouTubers, we got TSM and Netflix. Then the 21st, we got United Healthcare. The 22nd, Tesla and IBM. And then 23rd, we got Lockheed Martin and Honeywell. Hey, we're at the 63 again. That's SPY.
Corner, of course, Oracle is our focus, and Rick Ducat, our lead market technician, is joining us to take a closer look at Oracle. Now, Rick, obviously Oracle had this big news come out with its partnership with Bloom Energy. So I see we're actually starting with a Bloom Energy, ticker BE, chart to begin Options Corner.
Yeah, exactly. I just kind of wanted to highlight the extreme growth we've seen in what you might have thought was a pretty sleepy sector traditionally, as like electric utility type stocks here. So Bloom, for example, is kind of one of the outliers. It's up I believe about 820% during the past 5 years. So kind of speaking to this unprecedented surge in demand and interest in this area. To look at Oracle kind of again more specifically here, we can see it's a bit of an underperformer relative to the tech sector. The software sector has done pretty poorly lately here, but kind of like again, all these names, they're kind of investing heavily in the needs for their power acquisition here. You can see kind of some of our energy utility names here, all showing some strength recently. A recent report from a nonprofit group called Powerline said that U.S. investor-owned utilities plan to spend at least $1.4 trillion on capital projects through 2030, which is more than a 21% increase from the 5-year projections that previously were reported here. So it's seeming like this is an area that is just going to, keep seeing a lot of investor interest in the near term here. I mean, you just need power to do all this stuff. It's just, there's no way around it.
The energy conversation certainly isn't going anywhere until the AI data center conversation goes away, and that's still a years-long conversation. So we'll still be here looking at all of it. But as we look specifically at Oracle and the move that it's seen of late, what's the technical setup showing us?
Right, a big collapse. We had a big surge, and then as stocks can sometimes do, it kind of just speaks to the cyclical nature in general of how fortunes can wax and wane with these particular products here. The move up has mostly evaporated. Now we've found ourselves retreating back to this area of prior support. If you were to backtrack over here, you can see there was some small gaps here, some notable starting and stopping points here. And for the most part, the recent activity stabilized around the 140 level here. So we've established a bit of a range. We had our high that came in after earnings near this 172 level. That's about where we find ourselves today. So we have broken out to the upside from our downward sloping channel type shape here. But for now, we seem to have stopped short at that level here. We'll have to see what the rest of the week brings us. So if we were to keep moving higher, though, some notable areas to watch. One of these, this area here stands out, one of the most here, 202 roughly. That was a high point that we saw after our earnings gap down that we established in December. Then we also have this area here that matches up with an old gap area between about 180 to 189. Now when we look at our moving averages, we can see that we have crossed above 3 of them in very rapid succession here. The closest one now is our gold 63-day EMA coming in near 161. So for now, that's the remaining a supportive area here. Our faster 5-day EMA in dark blue crossing over its slower counterpart there.
Are you filing your nails?
Teal. Those come together around 150, 150, or 160 rather. Those are kind of the notable confluence points for these 2 moving averages here. So RSI also trending higher. We are on the verge of going back into the overbought area here. The overbought area during a trending market typically would be regarded as a sign of strength. So finally, our volume profile study. We are in a relatively lighter trading area here. We have crossed above the significant area to the downside between about 143 to 162 that contains our point of control. That comes in around 154 or so. Then things start to really pick up again here in this area around 190, 195.
All right, around 190, 195. Right now we're about 170, 66. Even with this move, we're seeing to the upside here. But as far as the options activity we're seeing on Oracle, with this move that we've seen just this week alone, are we seeing an uptick in the options activity as well?
Today is a bit more of a heavier day, about 1.3 for the sizzle, so 1.3 times the 5-day moving average of options volume here. That equates for Oracle to be about 482,000 contracts changing hands, so more of an actively traded name. In this case today, what was unusual to me was that almost 80% of the options traded were call options, so even more heavily skewed than you typically do see. Open interest, the highest month is the June 18th expiration, about 17% of the open interest here. Looking for our front month here, our expiration that comes up in a couple days though, that one we can see about an expected move plus or minus about 4.4%. One big trade, December 18th, 190 strike calls. They sold 1,000 of them for an opening trade, a $2.47 million credit.
All right, well, still a nice day for Oracle, trading up close to 5% as we head into the close. But I do want to send it over to Sam to find out who she'll be talking about for Overlooked Stocks today.
Well, Marley, Alex Coffey and I are going to be talking about Symbotic. So heading into the close, we'll discuss that one after D.A. Davidson upgraded shares to a buy. So we're seeing a nice rally in shares today. Alex Coffey will break down the news and what you need to know coming up next on Market on Close.
Whether you're an experienced investor or just getting started, Charles Schwab offers a webcast that's right for you. Are you an active trader? Our active trading webcasts are designed to help you develop a deeper understanding of technical analysis, options, futures, and more. Best of all, you can ask questions by chatting directly with an education coach. It's interactive learning at its finest. Tune in live or watch on demand. Head over to schwab.com/coaching and start learning today.
I'm Jenny Horn. We go beyond the headlines, tracking the trends, sector moves, and fundamentals shaping the markets in real time. This is Schwab Network.
Oh
Subscribe
my
to
gosh, I'm so tired. I just can't think straight. I'm tired.
Sometimes, you know.
Next. Try it again.
You could have done better.
Please.
Same goes for where you invest. Level up and invest smarter with Schwab.
Enter. This place is incredible. It's where I get all your office supplies. Your golf balls, your fancy coffee, your giant TV. It's everything in one place. It's like Schwab. Everything investors need, all in one place. Come again? Yeah, at Schwab they can do everything. Invest, trade, get full service wealth management, and anything in between. Think I'm gonna be sick. We have to buy that now. Schwab.
Invest your way with Schwab.
Stay connected to the markets with Schwab Network.
Tune in 24 hours a day,
He was
7
sick to his
days a
stomach.
week on schwabnetwork.com.
And on all your favorite streaming services. Schwab Network. Available anytime, anywhere, on any device for free.
Welcome to Schwab Network, where real-time market coverage meets expert strategy.
From the opening bell to the closing bell, we've got you covered.
Get inside the minds of pro traders.
My point is that they're getting a higher rate of change in sales based on their guidance, but not the same rate of change on EPS.
Follow the biggest headlines, live analysis, breaking news, and sharp trade ideas minute by minute.
With shows built for action, we break it all down in real time with speed, accuracy, and precision.
I think one of the most important things is you're making a play in a risk-defined way here going into earnings.
So that would be a further downside area to watch.
Smart insights, actionable data, veteran traders, and trusted financial journalists. Streaming live and on demand.
Schwab Network, streaming 24/7, any screen, anywhere, free. schwabnetwork.com.
Welcome back to Market on Close. I'm Sam Bardas on the floor of the New York Stock Exchange. It's time now for Overlooked Stocks. So shares of Symbotic are up 10% this week, and this morning DA Davidson upgraded shares to a buy from neutral. So let's learn a little bit more about this one with Alex Coffey, host of Next Gen Investing. Alex, just walk us through what this company does and what DA Davidson had to say behind the call.
Yeah, good afternoon to you, Sam. This is an interesting company. Symbotic builds AI-powered robotic warehouse automation systems for large retail, wholesale, and food and beverage customers. The platform combines a fully autonomous robot, high-density storage, and AI-driven software to automate pallets, cases, and individual items. It's designed to address labor shortages, e-commerce complexity, and distribution efficiency at scale. A real strategic inflection point happened earlier on this, or actually about a year ago in January 2025, when Symbotic acquired Walmart's advanced systems and robotics business. It signed a master automation agreement to support store-level online pickup and delivery. Walmart is the anchor customer for this particular business. It's 85% of their revenue, give or take, and it's about 50% of their $22+ billion backlog. It's currently deployed in about 23 of Walmart's 42 U.S. distribution centers. And you mentioned DA Davidson. They upgraded the stock to buy from neutral. They raised the price target to 70 from 57. And they say that this company has an unparalleled AI-enabled technology moat, and it has a years-long, multiple years-long lead in front of its closest peers. They highlight exceptional long-term visibility. That's a big topic of discussion in AI Broadcom had those things pointed out with its new partnership expansion with Meta today.
Triple top.
It's got a cash-rich balance sheet, and it has a little bit of a defensive appeal, given that it's a pretty critical element of a business like Walmart, which also has a little bit of a defensive appeal as well. So a fascinating company, and it's one that's seeking to solve a real-life need for some of these businesses. It's an example of where AI is already accretive to a company like Walmart.
Interesting. And you mentioned D.A. Davidson spoke of some of its peers. I mean, who are its peers? And, you know, how does the valuation kind of stack up against the rest? Because I see it's got a forward P of, what, like 74 here?
Yeah, that's a good question. So the bull camp generally focuses on its execution consistency, its long duration backlog, its margin expansion as its deployments continue to scale. For example, Deutsche Bank has a buy rating and a $148 price target. That would value this company at about a 26 times next 12-month EPS multiple. And they see continued meaningful operating leverage over time. The bear camp, though, Sam, is circling exactly what you're talking about, which is a little bit more of a concern around valuation and, of course, concentration when Walmart is just such a big part of your business. Barclays, for example, has an underweight rating with a $42 price target. They argue that this company trades at a premium compared to some disruptive tech peers. And they also note that their software revenue is still such a relatively small portion of the total sales that it's a situation where that premium valuation maybe isn't warranted. Overall, though, it's a very polarizing stock, I would say, amongst analysts. But it does skew a little bit closer to the buy/neutral camp more so than sell.
Interesting. Yeah, looking across the analyst consensus, and it looks pretty much split here at this point. Just wondering, as far as the fundamentals, what are they telling us right now? I mean, it's good to hear words like this company has a moat, particularly in this whole narrative of AI disruption, but how do the numbers sort of stack up? What are they telling us?
Yeah, I mean, their quarter one of 2026 results were better than expected. Their margins are around 22% with a long-term target of close to 30%, with upside from some of their next-gen storage systems, as they call it. The visibility of that long backlog, the near $23 billion in long-run backlog, is certainly something that I think the bulls in this stock focus on, but we know about it already, so it's not an unknown. That supports the projections that, again, some of the bulls have, as well as the company itself, of like 25% annual revenue growth through 2027. The big story, though, Sam, fundamentally is high growth, improving fundamentals, but also, and I can't get away from it, the real extreme concentration of Walmart as a key anchor customer.
Yeah, you kind of took the words out of my mouth. I
only
wondered
have one
about that
customer.
as well. But hey, look, nice pop for the stock today off the back of this call. Thanks so much, Alex, for joining us and breaking down our overlooked stock today. Back over to Marley in Chicago for now.
Thanks so much to Sam and
Thank you
Alex.
so much,
We are
Sam.
nearing the end of this market session. We'll bring in Kevin Green to break down the levels he's watching on the S&P 500, those record-breaking levels, and also take a closer look at today's action. That's next on Market on Close.
Real-time access, data-driven analysis from U.S. equities to global macro matters. Schwab Network connects the dots. Watch live, subscribe free at schwabnetwork.com.
Opportunities don't stop when the market day ends. So neither do we. Schwab gives you round-the-clock access to over 1,100 of the most popular stocks and ETFs, plus a wide variety of futures markets. All with 24-hour support from trading specialists who understand the ins and outs of 24-hour trading. No matter the hour.
I'm Alex Coffey.
And I'm Jenny Horn. This is Next Gen Investing, where we track the trends shaping tomorrow's market.
From tech to energy, crypto to consumer, we focus on what's driving investor sentiment right now.
Clear analysis and forward-looking market coverage every trading day.
This is a make or break level for this stock.
And that could certainly be a short to near-term catalyst.
Next Gen Investing, 1 p.m. Eastern.
Only on Schwab Network.
Sometimes, you know, you could have done better. Same goes for where you invest. Level up and invest smarter with Schwab.
Morning Movers brings traders the biggest headlines to start the day, from volatile overnight swings to the earliest analyst calls. Get your watch list ready. 8 a.m. Eastern, Morning Movers, only on Schwab Network.
Stay connected to what moves markets. Download the Schwab Network app and stream live coverage wherever you are.
Schwab Bank Investor Checking, the checking account built for investors. Named highest in client satisfaction by J.D. Power for 7 years in a row. With Investor Checking, you get the award-winning features of our checking account, plus cash management solutions, all designed for investors like you, with unlimited ATM fee rebates for cash withdrawals worldwide, no overdraft fees, and enhanced security features to keep your money safe. Also, because your investor checking account is linked to your Schwab One brokerage account, you can manage your checking and investing in one convenient location. Moving funds between your accounts is easy. Cash moved to your brokerage account is available in seconds. That means you can stop waiting and start
Slow
investing
down
in
big
stocks,
time right now.
bonds, money market funds, and more. Get more with Schwab Bank Investor Checking, the checking account built for investors.
We're back here on Market on Close. I'm Sam Vardas on the floor of the New York Stock Exchange alongside Marley Caven in our Chicago headquarters. We've just got a few minutes left in today's record-breaking session. Let's welcome in Kevin Green, Senior Markets Correspondent, to help close out the day. KG, we got there. It's been fast and furious. That's what the market seems to think. Can we believe in the rally now?
Oh, God.
Well, from a price action standpoint, yes. I mean, we were able to break above the
Never was that bad.
average price for the E-mini S&P 500 futures. That actually happened last week. That was actually a really good sign to kind of kick us off. We were able to kind of breach the previous closing high, gapped above that, and continue to move higher. I think that's also a positive sign here. And we continue to move higher. Are we a little bit stretched? I would say so. But at the end of the day, the market is also looking at opportunities where stocks are still trying to catch up. And that's what we saw for today. Microsoft being a really good example, really strong candle to the upside, but it still has a long way to go to get back to all-time highs. You can look at others within the software space as well that are trying to do the same. So there's still some areas of in pockets of the market that could still retrace higher and really push the S&P higher. If we were to see a failure, though, I would look at that 100-day moving average as the key area of support moving forward here. From going into the close, I'm looking at 70.10, which we're obviously above that right now, about 13 points or so. So we're continuing to squeeze going into the close, and this is actually, the third day that this has happened. And you can see that within the options flow. The options volume for the S&P 500 or the SPX on the call side has been really aggressive. You're seeing contracts trading over 200,000 contracts traded for the day. That's something that we just have not seen before. So there's definitely a lot of optimism. And even from a volume standpoint, even if you're looking at it, it's still a little bit light. But the market is definitely trying to reposition, getting out of the defensive sector and getting back into tech as well as software.
And KG, I know you were taking a closer look at credit spreads today. Are you seeing optimism there as well? What are you seeing when you look at the charts in terms of what it's telling us about risk?
Yeah, so, when we kind of look at the markets, we look at the vol structure as well as credit spreads to see where the market could be heading. And right now we have seen a complete collapse when it comes to the credit spreads to the downside. And that's actually really good. They're tightening up. If we're looking at the SHY minus the HYG as our proxy here, you can see that we have actually pretty much almost round trip from where we were at to start the year. Now, does this mean that we make higher lows? That may be the case. There's not much room to the downside from these current levels for credit spreads to continue to crush to the downside, but that does not mean that the rally has to be over when it comes to the equity markets. What I found very interesting as well today that we want to be able to highlight, yields actually did move higher. Dollar did not move at all. And market breadth today was not really that great. The S&P 500 equal weight, last time that I checked, was actually a little bit negative. It might be flat on the session right now. So we are definitely seeing a lot more concentration, but credit
Man,
spreads,
Oklo looks
the current
nice.
level that they are at right now is definitely conducive for equities moving higher.
Yeah, it was interesting because I think it was Colin Martin who pointed out earlier today that two-year Treasury yield had actually fallen below 375 earlier for the first time since.
Okay, well, really wasn't too bad a day. I missed out on 2 good trades today, just being late and playing around. Man, it's hard to sit here every day and do the same thing over and over and over again for 20-some years. I have to entertain myself somehow or I'd be totally nuts. So, get burned out the second part of the day sometimes, especially when I'm tired. I had a long night last night. I'm fighting a storm. So, I think I'm going to take a break. I know I'm going to take a break and take a nap just for a few minutes and relax. Okay, well, I'm going to get out of here. YouTubers, thanks a lot. Make sure you hit the like button, subscribe, and ring that bell. There's a nice song played again. Woo! We'll catch you later. Where are we? Oh. Come on, Jimmy.